Good? Good. Good. Renal. Good? Good. Renal. We're here right for the daily candle. Shout out to everybody celebrating Thanksgiving if you're doing that. If not, happy Thursday. Bum, bum, bum. Nothing to really catch up on, right? It's just nothing's happened, basically. It's exactly where we left off, more or less. Unless we're taking some like super low time frame scalps around the TPO and the volume profile today. There's really nothing going on, right? It's kind of short, long, short. It's been just going back and forth. Futures have resumed though after closing earlier today. I think we're gonna power through a couple more of these videos because we have fallen behind a bit in that regard. Maybe we'll watch one of like the Chart Fanatics ones. Because I do want to watch the one with Fabio. That guy I know is like actually like a probably an elite order flow scalper. Probably. I mean, I haven't seen him trade much, but that's the kind of vibe I get. Kind of trade the same way we do, like volume profiles, very order flow driven, auction market theory trader. I'll leave this alarm for 11. We got the link. Whoops. Whoops. Nice simple title. Let's update these levels and get going. I just leave these same alarms, don't need to do much.
One shot, had to take it. No sleep, had to make it. Dark nights, cold basement. Now my wrist looking sacred. They ain't cared, it was vacant. No help, just hatred. Not flex in the matrix. And my fam never waiting. Yard glowing, it's all I knew. Dreams in the gutter, soaked in dew. Had to map that line like truth. While they doubted, I aimed and flew. Poverty, pressure, pain on loop. No crowd, just math and a ruthless proof. Didn't need faith, didn't need boosts to fib the levels and airtight moves. I ain't believe, now they all tune in. I ain't forget how the silence been. Trading was prayer, yeah, I spoke with sin. No priest, just me and a flickering screen. Yeah, one shot, had to take it. No sleep, had to make it. Dark nights, cold basement. Now my wrist looking sacred. They ain't care, they was vacant. No help, just hatred. Not flex in the matrix. And my fam never waiting. Price hit, I ain't shake, I feel. Stop loss tight, the entry killed. One trade flip, how my block feel. Now mom smiling, a house on a hill. They ain't right when the loss was real. Now they chill while I coast in silk. Still the same, just math and skill. Just more rooms in the place I built. Had much, just a chart and plan. No cosigns, no open hand. But now they see what I became. One shot, and I changed the fam.
I'm just looking kind of glance through the data, because honestly I added the alarm above and below today and just didn't do anything, right? Didn't bother to really look at this shit. In hindsight, you know, we should have streamed during the day today. Kind of just chilled for the night. Probably gonna do that tomorrow if we're in like a half day. Have my Friday night open. Okay, nothing really going on here. Let's do the same thing we had yesterday. We'll leave the order flow open.
Limits, pivots, I'm setting the tone. Sight so deep, price don't move on its own. Flash that wick, that's me in the zone. You chase pumps, I bank and I'm gone. You place dreams, I post limits. Whole trend bends when I send digits. Short the low, that's your ticket. Top gets long, then I flip it. They can't match weight, they adjust the range. One fill hits and the board looks strange. No news drop, just Marco's placed. Volume spikes when I open space. You call it chance, I call that data. Candle wicks talk, I read them like paper. One big block, I don't move like retail. I draw the line, you call it a detail. Options box like shipping crates. IV higher than I rotate. You stress losses, I stress Greeks. You move for clout, I move discreet. Lied on pose and I came out vapes. When I get fall, I'm a laughing state. I'm a lifting out with my neck so tape. Fix up, fixed up, quite an brace. Limits, pivots, I'm setting the tone. Sight so deep, price don't move on its own. Flash that wick, that's me in the zone. You chase pumps, I bank and I'm gone. You place dreams, I post limits. Whole trend bends when I send digits. Short the low, that's your ticket. Top gets long, then I flip it. Broker store, they can't fill mine, so they widen spreads and delay time. News don't move it, tweets don't phase. It's Marco's trades that bend the wave. Fake outs live where I place bait. Whole trend shifts off, risk I rate. Top gets squeezed while I sell calm. Your moon is my exit, thanks for the palm. Golden zone, that's my canvas. You chart hope, I move like an atlas. Leverage max, that's harvest season. They get got and don't know the reason.
You say it's luck, but I've seen this loop. You caught the spike, I wrote the scoop. Your stops find suits, I'm my next booth. You trade belief, I execute truth.
Limits, pivots, this ain't a guess. Risk gets taxed while I compress. No reaction, I pre-play stress. Your whole edge, I repossess. You felt the shift, but I placed the weight.
17 years of market experience while building and managing a trading floor responsible for large capital.
All the big players in the world are trading someone else's capital. Market makers, hedge funds, portfolio managers, even the guys in JP Morgan, they're trading the bank's capital. So you detaching yourself from money. You're free to go. You're free to do logical decisions, like technical decisions.
Introducing Michael Katz, a trading veteran and the man behind the world's first stock markets prop firm. As a manager of a trading floor, Michael reveals his strategies and systems to help any trader excel in the financial markets.
There were times that I needed to step away from the market, fighting the market, 40, 70 execution in a matter of minutes.
So how did you, as you matured as a trader, build the skill to walk away when you have to walk away?
It's really about the In order for me to buy 1 billion shares, I need someone from the other side to sell me 1 billion shares. The way that I can affect you to sell me that billion shares is through manipulation. I need to tell you the market is going to crash. The world is about to collapse. The big analyst on JP Morgan telling you that you gotta sell your stock, and now I can buy it from you at a cheaper price.
On the trading floor amongst your team, the few star players that would always perform or would always be calm or would always pull out good returns, what did you see in them that was different, that led them to have that success?
You definitely...
Ladies and gents, welcome back to another episode. I've got a stock star with me. Michael, thank you very much for flying in to be with us today.
For sure. Thanks for having me, buddy.
So I want to explore, because I haven't had too many stock traders, and more importantly, just shedding a light on the stock industry, because the equities market, price action, the laws of trading are going to be the same.
Yeah.
But the industry is evolving. You're part of
What
that
speed should we put
evolution.
on, guys?
But before we get into all things,
Normally I'm dabbling in the 2.5, 3.5, but should we keep it for 2? So y'all can keep along, keep up with the boy. Should we put on 4? Really give you guys a real test.
prop and the space in general, and also because I was recently in the stock exchange in New York. I'm sure we have a lot of things to explore together, but before I want to get a basis on your trading strategy, especially because you were managing prop firm teams and you've been involved in the traditional prop space. I want to explore with you strategies first of all. What is your trading beliefs? How do you trade? And we can go from there.
Yeah, for sure. So, when I started 17 years ago, I came from a background of gaming, right? I used to play a lot of Counter-Strike. And
Another gamer, he's got played CS.
Bought me the Robert Kiyosaki book, Rich Dad Poor Dad, and I introduced to the stock market. So it made sense to me to start trading in general, because you stay on the keyboard, making a decision in real time and all of that. Obviously, it took me quite some time to develop to the stage that I'm at right now, right? It started when I tried a little bit of demo account, then opened a new account with $10,000. A lot of testing back and forth, looking for the right solution. And when you start trading, you don't really know what you're doing, right? You learn from YouTube or other channels or whatnot. But at the end of the day, you're making a decision. You make a profit or a loss. You don't really know if it's the right call or just a luck. So it took me a lot of time just to craft it and understand if I'm doing right or it's a luck, right? So that's the first experience that I had.
And was your personal strategy that you were using different to the strategies used on the prop firm?
Yeah, most definitely. I mean, in the local prop firm when I traded, I was the head of the traders there. We had 70 traders, and we traded together every day, right? But that was, I guess, 6 years ago, roughly. So I was already a seasoned trader. I already knew what I'm doing. And back then, we mostly traded reversals. We just buying the dip or ICT or SMC, whatever, all of those nice and fancy words. At the end of the day, we looked for dips and bought the market mostly.
Would you say there is an advantage in trading the stock market or equities? Because unlike Forex, which is a ranging market, here you have generally a trending and appreciating market, therefore a built-in bias potentially. Does that make it easier, or is it not as simple?
I mean, for me, it makes sense. More sense than trading Forex, for example, because it's not a ranging market. You can play the trend. If you buy the dip, you can hold it for a longer time because you understand that if that's the right move, that's the right trend, then you don't need to close your trade super fast because it's not a ranging thing. It could go easily a few days to the upside, right? So it just makes sense more to me than trading a ranging market.
And with that overall trend in mind, are you more focused on higher time frames, or will you go down to the low time frame for entries?
So when I started to trade, I definitely traded a 1 minute chart. I love the fast pace, being on the keyboard, making the fast decision in real time. And I always look for those nuances, because when I try to trade like 15 minutes or even a 5 minute chart, it's always felt like I'm missing something. Because on a 1 minute chart, you can easily see the nuances, like the volume increasing dramatically, a pool of orders coming in, something that in most cases you won't see on a 5 minute chart. And also just the momentum between the buyers and the sellers. So you see the chart increasing or decreasing, and the pace, right? You look at the pace and the momentum is shifting. And then when you see that, you can understand more about the trend or the reaction that you're supposed to see.
Are you referring to momentum in just price action alone, or momentum with the order flow as well?
Yeah, basically when I started, it was definitely without the order flow. So just looking at the price action and see how fast the chart goes from 0 to 2, right? So that's the main thing. And besides that, obviously using supply and demand area and using MACD divergence in order to understand that this is the right call, or from here we're supposed to see a reversal.
Mm-hmm. And you mentioned you previously did the M1 in the fast space, but it seems like you weren't doing that later on with the prop firm. What was that transition, and why did you have to change your strategy?
I mean, as long as I was with a local prop firm, I did the same thing. Nowadays, I'm doing less than that and more of a higher time frame just because I'm busy. But as a trader, like a full-time trader, this is definitely my, the place for me was a 1 minute chart.
Okay.
Yeah.
And would you consider yourself an intraday or scalper? Or?
Yeah, 100%. I was a scalper at the beginning, going in very fast and taking just a 10 cents, 20 cents move. Eventually, I moved because when you're trading, you shift through a lot of you go through a path, right? You start somewhere, then a few months later, you go to a different strategy or your personality change and life change and all of that. So when I started to trade with that prop firm, I actually did a 1 minute chart, but holding much longer. I started holding like 18 minutes, average on 18 minutes for a position. Then it went to an hour and a half, and even 4 hours, almost the entire day, like on average. So
but in the end, it's still very short focused. Like,
for sure.
Yeah, definitely just scalping. Why did you choose the belief of lower time frame entries and short term trade scalping as opposed to lower time frame entries and then following the trend on the daily time frame, let's say, so that you can maximize on risk reward?
Yeah, I mean, that's a great question, but at the end of the day, it's what fits you right. Your personality, the way you see the the structure, the way you want to operate, the time that you have in a day to invest in trading and everything that around this. For me, it was just I look for the fun part in trading, right? Like in gaming, the same concept. I didn't come to in order to make big bucks or to buy the next Ferrari. I came because I love the fact that you need to make the decision in real time. That's the challenge part of it, and I'm already familiar with the keyboard and the mouse, so it makes sense to me. So this is why I stick to the 1 minute, the fast-paced thing.
Let's take a moment to talk about part of the show, a leading prop firm that is funded next. It's important for me to listen to our community to see who are you working with and how can we make you an additional $1,000 to your payout just for being late. So to unlock all of these benefits, I'm working with a leading prop firm in the industry funded next. Check out the link in the description or use the code TOT. Would you say you're a competitive person?
I would say, yeah.
And when you have this gamer competitive, I wasn't gaming myself, but just through friends that I live with at university, I saw how passionate these gamers are and how intense, and they won't leave that chair for like 12 hours a day. But when you have that hyper focus and hyper competitive side, can this be problematic in the markets where you're competing with the market, you're there for long hours and maybe you should walk away? Did you feel that helped you or hindered you?
Okay, there were definitely, I won't lie, there were times that I needed to step away from the market and I didn't. I still remember, tons of hours of talking to my friends and I'm sending them images of me fighting the market, literally fighting the market, like 40, 70 execution in a matter of minutes, and they sending me back, you gotta get off the computer, but it's one of the stuff that I love to do, so till this day, right? It's a passion, and so yeah.
How did you learn later on the skill of walking away? Because I think this topic of like psychology, and it's like, okay, well, if you want to avoid losses, after 2 losses in the day, walk away and cut your losses. But in reality, to actually get up and walk away when you're in that state is one of the hardest things to do. So how did you, as you matured as a trader, build the skill to walk away when you have to walk away?
Yeah, you said it, the mature, right? You grew up, you started to be more than just looking for the fun in trading, but also actually make it as a profession. And then when you realize this is what you want to do and continue pursuing that passion, you start building those rules, right? And eventually I went into meditations before started to trade, before the opening bell, and do a breathing exercise during the trading. After each trade, I took a minute or two just to settle down, write a little bit about what was in that trade and how can I operate it better. And this is something that you need to apply. And like in a gym, right? You want to go to the gym, you first start, you're doing some exercise, and eventually it catches up.
The morning routine and the pre-market rituals, let's say, I think lately has become very a buzzword, and it's also become an escapism where somebody who's not profitable, instead of looking at the edge and finding solutions in the data, they'll just focus on the morning routine. And I think it's overemphasized. Regardless, I want to hear from someone that is and was doing it. What did you do and how did it benefit you when you had these pre-market routines?
Yeah, you got to touch, in trading, in order to become profitable, you got to craft a lot of the topics, right, that everyone talks about, the risk management, the edge, the technical analysis, all of those things. And one of them is the fact that you need to work on your psychology part, your well-being, right? So in my case, as I said, I just took, before every opening bell, I took 5 minutes, literally closed my eyes, focus on the breathing, thinking about how I will react when I will have a losing trade and also when a winning trade. So imagining you're in a trade and it goes against you. As long as you become aware of those situations, because when you trade, especially on a 1 minute chart, in most cases you're not aware of what's going on. You're making a decision like an impulse decisions, right? But once you're aware on that and you realize this is happening, now you can step back, see the full picture, like the macro picture, and then make a more logical decision. So one thing to do is just 5 minutes before the opening bell, close your eyes, imagine how you will react. Then when it comes to really trading and you see yourself, just before
I think your time would be much better spent actually planning the trade you're going to be taking, not just sitting there imagining, oh, what happens if I lose a trade? Like, right?
Trade, right? Or going all in and you want to make it not like a home run. Stop for a second, take a breath, and then understand, tell yourself, literally talk to yourself and tell yourself, okay, what am I doing? Am I doing the right thing right now? Am I making the right call? Once it's there, you're good to go.
So this pre-market or in general meditation, the real benefit is the ability to use that muscle of pause. Because the thing I was saying of after 2 losses, just stop and walk away. I think the ability to stop is...
It's interesting though, right? This is not like, between the stuff that we've been watching on stream and the ones that I've been watching myself, because like I have been watching this for a long time, many people seem to gravitate towards meditation, which is interesting, right? Can't say I've ever tried it myself.
In exercising that.
Yeah, controlling that once.
And I've also had people I know from like my previous line of work that they should do the same thing. Big advocates for meditation.
You reach that moment, Okay. And it's like another check in your box. Instead of looking just for the indicator, the price action, the supply and demand, you also do this. Do I need to click the mouse here right now? Am I ready for that trade? To commit to that trade? If so.
Would you also consider other things in your life in terms of if I'm having stressful things outside of the markets, that you take time off the markets, or the morning routine was the reset? So no matter what's happening outside, I'm ready for the markets.
I mean, it's very hard to exercise it, right? Because if you came back from work and your boss yelled at you, or you had a fight with your wife or whatever it is, it's kind of hard to shift into that state of mind of trading. In Japan, they have like huge bridges. And once you gates, and once you enter that gate, it's supposed to, like on a spiritual level, it's supposed to clear your mind and start again from scratch. So you need to do stuff like this. Obviously, it's not easy, but like in anything in life, as long as you keep practicing, you will conquer that.
And on this topic, whilst we're here, anything else you do as a pre-market process aside from the meditation?
For now, at least, that was the main key. Okay. It's just a matter of practicing.
And when you had transitioned toward the leadership position in the prop firm, where you're responsible for capital, other people's well-being, other people's strategy, and coaching them, would this be something you instilled in them as a mentor, or is this something that was only really something for yourself?
No, when I joined that prop firm, I came with the experience and the tools that worked for me. Obviously, it won't work for everyone, and even so, if I'm telling you to meditate, you need to find what will work for you in that area of meditation, right? Someone can breathe, the other one can sing, whatever it is. Right? You need to find what fits your personality at the end of the day. And so I brought all of those tools to the prop. We did that, and again, someone took it for just listening to music. Someone listened to Mozart. The other guy listened to Gangster Rap. And that was his meditation. So
I had one friend at university, and before an exam, a big exam, he'd go for a walk to a nearby forest in the woods, and he would just go by himself and scream as loud as he could, to the point where he said it would completely drain him, he had no voice left, and he said that would just help him reset, get rid of all of his anger, emotions, whatever, and have complete clarity. So it is interesting. The word meditation has multiple layers and different benefits depending on the personality.
yeah, because when you hear the word meditation, you always think of a yogi guy that sits in the home and stuff like that. But at the end of the day, it's just something that reset your mind. Right?
Awesome. So when you came into the leadership team and you were responsible for other traders on the prop, what other things did you instill aside from this routine?
Still,
What other things did you do or told them to do in terms of strategy or routine, or what other things did you teach them?
okay, so we started by building their set of mind that trading is a business, right? A lot of the times you see guys that going into trading just because they want to make a lot of money, and they never think about how much they're going to invest in their business, how is the risk management of the business looks like, the expenses, the ongoing expenses, and the process. Because trading, in most cases, you won't make it on your first day, right? You will need to have, at least back in the days, you will need to have at least like 2 years, 3 years in order to start see some progress. So
These traders, they were already traders, or they were new people that you would coach up before you gave them capital?
So most of them were like 6 months till a year of experience in the market. So we taught them, then traded with them every single day. We had coaches. We had meeting before the market open, in the middle of the day, at the end of the day. A lot of just teaching them about, like I said, the business wise of trading, understanding that, okay, this is an investment you put in, and you need to handle your expenses, you need to handle the risk side of it. There were guys that had a wife that told them, you gotta quit this thing, right? And then you need to talk to your wife and tell her, listen, before you start doing trading, you need to talk to her and tell her, this is what I'm looking to do. This is what I want to do. I need to take a full year in order to accomplish whatever it is. If you do that, then your house becomes something that is very easygoing, right? If you get what I'm saying.
A lot of traders end up frustrated, bouncing from website to website, trying to figure out which prop firm is best for them. And that's why I'm proud to bring to you a partner of the show, Prop Firm Match, which is a complete, trusted, and comprehensive comparison website. And with all kinds of filters on their website, you can select the prop firm based on exactly what
If you do that, then your house becomes something that is very
the show prop firm based on sound with their loyalty. You can find them. You were focusing a lot on psychology, routine, rules. Where was the time, or when was the time to speak about technicals, edge, and actually strategy? Or would you allow each trader to have that freedom to explore their own edge, or would there be one prop firm common strategy?
No, so first of all, you got to give the space to a trader, right? Because you're trading differently than what I'm trading. And even if I will tell you and show you what I'm doing, not necessarily it will fit you, right? So you got to develop your own edge and your own way or approach to the market. That's the main key. What I can give you is just a structure. I can teach you on why the market moves the way it does. I can teach you about the areas of supply and demand. I can teach you about patterns. But at the end of the day, if you like to trade breakouts and I like to trade reversal, that's totally fine. I can give you rules on how to be better on breakouts, right? Those nuances, eventually you will take them and build your own strategy.
And how did you know when someone was in exploring phase and had the freedom to find what suits their personality versus he's ready, let's put some capital behind him, just so that they're not learning on someone else's money?
Yeah, you see it. Once you talk to a trader and it will go through some phases, and you see the guy learning from just understanding what I'm trying to explain to him, and then he takes it and he will show you. We had routines like he start to build a playbook, right? So he will show you exactly what he's looking for, how he's going to operate it, exactly how to execute the trade, to scale in, where does he supposed to take his profit, everything around it. Once you understand that he knows what he's talking about, and you see a few good playbooks that he's trading with, then you start giving him the money, and also that you build it.
And because you have a team mentality on a prop firm, because it's not just now my money and my decisions, it's now other people's money and an office environment. What did you sense in traders as an advantage to be in that environment? Because I'm seeing a lot of disadvantages of, okay, you have other people's money pressure, you have somebody watching over your shoulder every day pressure, you have maybe a sense of performance anxiety, so you don't trade when you had conviction, but you don't do it. And then also this idea of, I have a trade, the guy next to me is also my prop firm, has the opposite idea. Now we have conflicting ideas, and now I can get confused. So I'm seeing all of these negatives, but what were the positives of why someone would want to be in this environment?
You start from the beginning by teaching them that all the big players in the world from day one are doing exactly that, trading someone else's capital. Market makers, hedge funds, portfolio managers, all of them are trading someone else's capital. Even the guys in JP Morgan, they're trading the bank's capital, right? And they are the top-notch traders in the world. So once you understand, once you explain to the guy that this is how it should be, now he's saying, okay, the other guys are doing it, so now I need to do that the same way. And trading someone else's capital is a great way to do so, because you're not risking your own money. So you're detaching yourself from money.
Also, potentially it's easier because
it's much easier. This is definitely one of the main points for me that shifted my mind as well. When I started to trade someone else's capital, I'm not talking about family, right? Friends and family, because when you do that, it's super hard. I did that. It was super hard because you still very much attached to it, right? You don't want to lose your dad's money. But when it's someone else that you don't really care about, that's it. You're done. You're free to go. You're free to do logical decisions, like technical decisions.
In the book,
don't know if I agree with that. Right? These people are just putting like imaginary psychological pressure on themselves. The money's irrelevant whose money it is. You're trading your strategy, or you're fucking not. We don't agree with that, but each to their own, right? I guess each to their own.
Robert Greene, he explains what mastery is, and part of it is having a flexible mind. And what he means by that is when you're a child,
I read this book.
Free, he'll do whatever he wants. Right now, if a child is in this room, he'll stand on this table and start screaming because he doesn't have the conditioning of what's appropriate. So he said, as you get older and go through life, you're taught, sit this way, be quiet like this, walk like this, talk like this, wear like so. You get a lot of conditioning, and therefore you go from a flexible mind to a rigid mind. And I think a lot of the industry can do that to a trader without people realizing. When you're scrolling on TikTok and you're watching YouTube videos, this is conditioning, and maybe you're getting the conditioning from people that are not qualified to condition you. Did you find the benefits in getting young traders in terms of 6 months of experience? Because you can also get traders that had 10 years of experience and they have a lot more market experience, they have a lot more strategy. Why would you pick the younger new trader? Is it for this flexible mind approach?
Yeah, 100%. Because when you have someone that is doing it for 10 years, even if he's a good trader, you cannot really push him to the next level. You can, but it will be much harder to give him tools that he will actually take and use them in the market. But when you take in someone, exactly as I said, like a kid that just started to play with this toy, you can give him so much, and he will be a sponge, and he will take it and be happy about it.
True.
So you want to try this one, and you want to try this. And
Especially if someone's been trading for like 5-10 years and they're not profitable, it's like borderline no saving that person. Clearly they have some like mindset issue that they can't address anything wrong.
much more gamey-like and not just rules.
Because even let's say with the kid example, a kid might go climb something that's a bit too high for him to jump off, and he will jump without fear until he hits the ground and realizes, oh, that hurts, I won't do that again. But again, this is complete openness, and when you have a new trader, you're allowing them to fall in a safe environment because it's not their money. And I think a lot of traders in this day and age give up on trading because they burnt too many accounts, they burnt through the capital, and they're learning lessons, but they're too expensive lessons because it's all of their savings. But in a controlled environment, I can actually see these benefits. What about the idea of on the same team, on the same prop firm, you're managing the same capital, but you have people having different ideas, different trades, even on the same day, one guy's buying, one guy's selling. How did you as a leader navigate that between peers?
So what was the one way that we took there was to build teams, right? When you have one guy that is making the decision and only seeing what he's seeing, you kind of lose the ability to have more eyes, and you only got your opinion. But actually, when you have a team like 2, 3, 5 traders together that trade the same account together, that way you can watch more trades, you can watch more opportunities to find the next one, and you have a guy that is focusing on finding the stock, you have a guy that is managing the trade, a guy that is executing. So they're working together. They're
Interesting.
leaning on each other.
What about risk? Would you allow the individual trader to choose their risk within a certain range?
Within a certain range.
I thought he was gonna say that he would pair people that like the guy yesterday who trades short only with somebody that trades long only, and then put them on the same instrument. Because that would be pretty interesting actually, right? When you have like 2 people that trade one direction only on the same thing. Because one guy might think he has like a valid long setup, and then the short guy sees a extremely high probability short setup in his playbook, like invalidates that guy's long. So it helps him to like avoid a potentially losing trade, and vice versa. It's actually a pretty interesting way to structure things, right? The more I give it thought.
Externalize to another person and say, okay, this person is responsible for risk, or it would be the individual trader choosing their risk.
So within that team, let's say a 3 guys team, you have the guy that is managing the trade or managing the risk. So he will be responsible on the capital, right? Obviously, the other guy can tell him something, his opinion, but at the end of the day, the decision of that will be under the guy that's managing the trade.
And who in the team, between these multiple roles of a leader or risk or whatever the different categories were, who would you say has the toughest job? Who had the most pressure?
That's a good one. I mean,
sounds like the guy with the managing the trade.
I would say the execution, yeah, the managing the trade and execution. Because the guy that, but at the end of the day,
Why?
if the guy that executed the trade did it perfectly, but the stock wasn't the right asset to trade that day, then the first guy blew it.
Also, a lot of the times when I get in a trade that I have confidence in, I'm more willing to watch the retracement and feel okay. But if it's a trade that I know I shouldn't have taken, I'll very quickly exit. Meaning to say my confidence in the trade affects my ability to follow the plan. When you have someone who is just managing the trade, he doesn't have the belief in the trade because he didn't come up with the idea, he didn't place the trade, he's just there to manage it. So when you have no emotion involved, does that help, or does that actually cause maybe mismanagement at times?
Yeah, it definitely helps, but at the end of the day, when they start to work as a team, so if anyone can help each other, they will do so. So at the end of the day, we see success.
In the end, as the leader, would all trades go through you, or you would allow?
No, each one takes the responsibility.
Okay.
Obviously, we will watch the trades. I obviously traded with them together and made the decisions. Sometimes I sat with the teams, like separately.
Yeah, like how can
freelance,
time
separately,
manage
trade
everyone's
with them on the same
trades?
day.
Like they're all taking them
We
at
did
the
a lot of
same
backtesting
time
at the end of the day,
throughout the
as
day.
well.
Would you have different strategies amongst the traders as a form of diversification, I guess?
One, and second thing, like I said before, it's a personality thing, right? So again, if you understand how the structure of a reversal built, then you need to continue to trade that way. But if you're more of a quick scalper that want to get in very fast on the breakout, that's one thing, and as long as it's working for you, then great.
And on the prop firm, what was your personal favorite trade A+ setup?
What was
Your favorite trade type, like an A+ prime setup?
So for me, it's always the reversal. You will see a stock. I used to trade 2 ways. One would be stocks in play, which are stocks that are gapping up or down. And they gapping dramatically, like let's say 10% down. A stock is gapping down because of earnings, let's say. And then once it drops and reaches a major key level, then you buy the dip. Or the opposite way, it pops up, reaches a certain resistance level, and then you sell the top.
You know the phrase where it's like you don't want to catch a falling knife, you don't want to buy in a heavily bearish market. How did you reversal trade effectively and not just keep trying to sell the top in a bullish market?
Yeah, so that's a great question because obviously you don't know, right? You will never know until.
I mean, because we do this, right? We do this. Like for instance, like this whole move down, how many times did we take longs? Right? And we did not lose a single dollar, even though a lot of them were like break-even stops, and some of them they got some profit before rolling over. I'm gonna assume he has just some way of like picking your spots, right? We weren't just opening longs randomly. We had longs in mind in certain zones, and when there was edge to take it, we took it and then managed risk. And if it rolled over, it rolled over. So I'm gonna assume he's gonna say something along those lines. But we'll see.
The end of the move. but you do have key elements that support what you're looking for, right? So when a stock is dropping down and it reaches a major key level, then it makes sense that it will stop at least for one pop, right? And then you look at the volume. You want to see increased volume capitulation at the bottom, right? So buyers are coming in while sellers are getting hacked or manipulated, right?
How would you view that manipulation on price action?
So on the price action level, you got a few ways. First of all, in a lot of the times you will see few trends before the pop. So you will see a drop, then a tiny bounce, another drop, a tiny bounce, and then on the third wave, the third move to the downside, in most cases you will see that capitulation. You will see high volume coming in at the bottom of the resistance support level.
Third drive.
And if you compare the drops, right? You have the first drop, then the second and the third. If you compare them, you can find some nuances that will tell you that the sellers are getting much weaker. For example, the angle of the drop. So the first drop will be very sharp, like 90 degree, right? And then the second drop will be a little bit.
So kind of momentum, as you said, you're seeing the momentum shift from
He's literally describing 3 drives.
How important for you, because I'm comparing it to myself and obviously your colleague Saul that we just spoke to, and he's trading forex. In the forex market, you don't have access to the volume, or you don't have the order flow, so we are relying only on price action and then maybe indicators or other things that some people may use. Whereas you have price action plus the volume that you can see. How much of an advantage was it to utilize volume?
Yeah, it's a huge advantage. I mean, the volume is a key element when it comes to trading, in my opinion, and I don't know how you do it on forex.
I wish I had it, because the more I get to know, the more I'm always thinking, should I transition, or at least in my investments, I'm using it because I'm investing a lot in the stock market. But then you have your investment side and you also have your trading side, which now later on in your life, where you're busy with other projects, you're still involved in the markets, but to a different capacity, where you're now longer term holding. Where your average trade was 18 minutes, now it's long-term investment. Yeah. Has your strategy stayed the same in terms of entry criteria, or is it a different approach when you invest?
So I'm still trading until this day,
Okay, wow.
just an hourly chart instead of a 1 minute chart, for example. And I'm holding for like 3 days, 4 days. That's in most cases.
Okay.
But for investing, obviously, I don't care about the chart in most cases.
You just take a demand area and a bias. Okay.
Exactly. Yeah.
Oh, interesting. And when it comes to the volume analysis, now something I'm jealous about, but let's go into how exactly you utilize it for people that are looking to transition towards the stock market or people that are trading the stock market.
Yeah.
How do you utilize volume in a correct way?
Yeah. So again, if you're looking for, generally speaking, are you familiar with charts DAO?
Yes.
Okay. So the theory would say in one, I think the third element would say something about the volume should be, or the fourth, the volume should increase while the price is increasing. Right?
But what?
And that's the basic concept. Something about are you familiar with charts DAO?
Yes.
Okay. So the theory.
Charles Dow? Like Dow theory? I think this thing is incorrect. It's not DOE, if I recall.
The volume analysis now, something I'm jealous about, but let's go into how exactly you utilize it for people that are looking to transition towards the stock market or people that are trading the stock market.
Yeah.
How do you utilize volume in a correct way?
Yeah. So again, if you're looking for, generally speaking, are you familiar with charts DAO?
Yes.
Okay. So the theory would say in one, I think
It's DOW if anyone wants to look at it. But yeah, Dow theory.
the third element would say something about the volume should be, or the fourth, the volume should increase while the price is increasing, right? And that's the basic concept. And in most cases, a lot of the guys would say, okay, I'm not seeing an increase, so it's probably not that, or get that a bit confused or mixed. And the idea is to look for different bad signals or divergency. Yeah,
The
exactly.
price is going up, but
Volume
is going down.
divergences.
Means
True.
lack of participation.
Yeah, exactly. So price is going up. Okay, so I need to see higher volumes as well. So buyers should put their money when where they
Where the mouth is, yeah.
exactly. And at the end of the day, if they're not, then it makes sense that the price will actually start to decline. Another thing, as I mentioned, the capitulation. In most cases, let's say a breakout, right? You want to see a clear breakout with high volume. In most cases, that's what they tell you. But actually, there is a certain amount of volume that, if you see it, it's actually represent the opposite direction. So like a reversal. So you need to see a correlation between price and the volume. And if you see the volume increases too dramatically comparing to the candle that just broke the breakout, the resistance, then something is off. They're playing with you. Bull flags, for example, patterns. If you will see volume increase, volume during the consolidation, then something is off. They are trying to manipulate. They are trying to build a pattern that will tell you, okay, it should pop, but in most cases it will pop and then automatically drop after that.
Do you believe that the manipulation, or they, as you're saying, can be a few parties or one party that is heavily influencing market movements through manipulation? Or is this just like a natural battle between buyers and sellers, and sometimes it doesn't make sense, but eventually when you get the movements and then one side wins, then the sellers take over and the market goes bearish? I mean, is it a manipulated market, or is it just the laws of the market that you'll have this battle?
If you ask me, it's manipulated. But at the end of the day, if you go to the basic of it, you have buyers, you have sellers, right? And in order for me as a buyer, in order for me to buy 1 billion shares, I need someone from the other side to sell me 1 billion shares, right? The way that I can create, the way that I can affect you to sell me that 1 billion shares is through manipulation. I need to tell you that the market is going to crash. I need to tell you that the world is about to collapse, right? I need to tell you those kind of elements that the big analyst on JP Morgan telling you that you got to sell your stocks. And once you see that headline, you will probably call your broker or your bank and tell him sell those stocks, right? And now I can buy it from you at a cheaper price. I saw it at the subprime crisis at 2008. I lived in the States back then, and they shouted during the news that the market is about to collapse. And it wasn't at the beginning, right? It was at the end, like around October or November of 2008. So we were like down at around $70, $80, something around those lines. So on the SPY. So they told you to sell, and when they tell you to sell, you buy, you sell, and they buy, right?
Yeah,
like
they say
many times.
buy the rumor, sell the news.
Yeah,
There's this mentality of like they come onto the news channels and they'll say X, Y, Z, but behind they're doing the opposite. This is something that is very well documented. We've seen around. And I also thought it was old practice. Would you say that's something still happening?
100%. Every single day that you're trading, you will have it. If not specifically in the news, you will have it in the algos that will show you a pattern of a bull flag, but actually it's for they're trying to trap you and will move the price down, or they show you that the price is declining and you think that's it, I gotta sell. You will sell it, and they will buy the dip. So this is literally every single day. And as you said, I documented myself many times that it's happened before.
For the last 2 years, a proud sponsor of the show is a top-ranked leading prop firm firm Alpha Capital, and for them in the industry, they have also reached a monumental account catered to your needs at the most. Let's get back to the episode. There's many places retail traders or maybe even certain institutions would get involved with. A very obvious one would be like a key level, like a round number or a previous resistance or support level. But then you also have patterns like head and shoulder, Fibonacci. When you look at these lists of very common places people trade, have you found certain ones to be more manipulated or easy targets to say, okay, here's going to be a reversal because this is too obvious?
Yeah, I mean, first of all, the head and shoulder you mentioned, right? That's a classic one. Every single trader on earth knows what is a head and shoulder pattern. So it's much easier to manipulate that because if you see it and thousands of millions of traders see the same thing and you believe that it's going to drop, then it's easier for me as a big institutional or a market maker for that specific stock to start buying that drop, right? So all I got to do is just activate the sales because everyone is shorting the neckline, right, of a head and shoulder. And then once it drops, I can buy everything and the price will move up. 2016, that was exactly the case in the SPY, the ETF for the S&P 500. JP Morgan launched a letter, like a newsletter to all of the clients and told them that's the time you need to sell the shares. The head and shoulder dropped on the weekly. Drop, broke the neckline. Smart money bought the dip, and basically the market went up ever since.
We can just wait for confirmation.
Stock market. Now, in the forex side, majority of retail participants, they're going to be through prop firms, which is usually a demo simulator environment, or with brokers, which is often a B-book environment. So therefore, the retail stop losses and this retail head and shoulder pattern might not be the obvious liquidity target because retail traders' liquidity doesn't exist in the real markets. In the stock market, is that different because you don't have so many B-book environments?
There's no B-book. Everyone is A-booking. There are some maybe, but in most cases it's A-book.
So therefore, you'd say the stock market seems to be more easily manipulated because there's clear targets of retail liquidity.
Yeah, and when you send in your orders through the broker and through the ECN and it goes to the market, there are so many places that a third party can come and see the action, right, before it goes to the market.
Before it's
even executed. We're talking about milliseconds, but as long as I get the information, I can react upon it. So
high frequency trading firms.
And how important for you is looking at the fundamentals of a stock in terms of the earnings, news releases, and these kind of factors? Are you more price action and volume, or would you look at these fundamentals too?
Yeah, so when it comes to trading, especially on the intraday level, it would be mostly technical, but there is one particular point topic you gotta put your mind into, which is the catalyst for that stock for that day, right? If a stock is gapping up by 10%, there is something going on behind the scene, right? Earnings or any type of CEO layoff, whatever it is, a new product. At the end of the day, once you understand what type of news is it, you can understand if there should be an extension of the move after the 10% gap or it should decline. So for example, a new product can push the price just a little bit higher, right? But if Bank of America is targeting, and a big analyst from Bank of America is saying that the price should be 20% more, then it makes sense that a lot of the buyers will start buying and pushing toward that 20% more. So you got to understand the nuances of the catalyst that moves the stock.
Because you've had a bird's eye view in the industry with your collaboration with Fivers or involvement in Fivers, you've seen the behavior of forex and futures traders and their strategies, their psychology. Have you noticed any difference between them and a stock trader?
I mean, a chart is a chart, right? And the psychology behind it is the same as well. But there are nuances between the markets because, like I said, the forex market is rangy. So there will be a lot of reversals and less trend following, like pullbacks and trend following. So on those levels. And also the forex guys are more focusing on those 28 pairs or 8 pairs, right? The majors. But when it comes to trading stocks, you have like 12,000 symbols that you can trade with. So every day is a new day, unless you're focusing on a few big names like Tesla, Nvidia, Amazon, those, which is great as well. But in most cases, if you're trading stocks in play, every day is a new day for you, and that's also exciting.
The reason I asked that question is because obviously in the forex side, it's all about prop firms. Everyone knows props, talks about props, uses props, and even those with the capital to deposit in a broker, they do think, well, I can now deposit this 10K, or I could buy challenges and have access to $1 million in funding. That's not my money, and why not? So it's become the new norm. But I don't think the stock world has caught up to this, which is why I wanted to understand what is the difference here and why is it not so commonplace?
Yeah, the forex and the future industries are huge in the prop, and like I said, it's a no-brainer. I mean, if you can buy a challenge for $50, trade with much more capital than you can ever bring to the table, not risking your own money, pass the evaluation after even 10 attempts, right? $500 that you spend there, and you're trading with 10K, it makes sense, simply as that. And this is why we have Trade Pool for stock traders. And the only thing that is different, that I guess the time, right? Because forex and futures industries for the prop have been around for a long time. Stocks is just starting to grow, and I'm guessing within 6 months up to a year, we will have more guys coming into this area.
As you are maybe one of the only, or if not the only, stock option for prop firms. You're coming up to your 3-year anniversary, and in this time, you've probably had enough data to understand the industry.
That's true.
You've obviously seen the vast data of the Fivers, which is a top prop firm. Just comparing it, are you starting to see differences?
When is this from?
Because generally, when I think of a stock trader, typically they're a bit older. They are probably a wealthier person because they deposit them out to invest. It's not necessarily a highly leveraged speculative CFD. It's you buy with your real capital. So usually a more mature trader, usually an older trader, usually a more invested because they're putting larger amounts. And maybe that has certain behavior differences. Are you noticing any of that in the prop side, or are the stock prop traders in new pockets of traders?
Yeah, so the prop traders that we have are actually young guys, joining from their 20s till 35, that area. And they're all, most of them in the US, because we're giving a huge solution in that case. In the US, you need to have at least 25K in order to day trade. It's the PDT rule, it's called. So a lot of the guys just hooked by that, and they say, like I just said, it doesn't make sense for me to bring 25K from home when I can put $100 and get the same amount, right? So it's just a matter of understanding that there is a solution like that. A really shift coming from the broker industry. We had the broker industry, we had the free no commission that brought a few years ago, and now we were basically the next step in that evolution.
When it comes to the CFD side of forex specifically, because generally it's a ranging market and predominantly people are just day trading, scalping, and even the swing traders are only holding for 1 week. So you don't really have these people that are position trading, holding for months. And generally people are not incentivized to do this because the market is up and down every day. There is sideways price action, there's short-term trends, and there's a lot of volatility and movement. But when I compare that to the crypto market, or I compare that to the equities market, generally they're more trending markets, and specifically the big ones, Bitcoin, Ethereum, or Apple, Amazon, and so forth. Generally, if buying the dip is a good long-term strategy, because these are companies and industries that are going bullish. And if you wait 5 years, you won't be in a loss, realistically, especially the indexes, just S&P, for example.
Yeah.
What stops someone, or how do you view someone coming in, utilizing prop firm capital, $100,000, and then just buying the S&P and holding it for months, and therefore using the prop firm, which is designed for day trading capital, as an investment vehicle to buy Bitcoin or to buy the S&P, because that's a low risk for the trader. It's like, okay, I might not get the most sexy returns of 100%, but I'll probably get 10% by the end of the year. I'll buy that prop firm account. It costs me $500. 10% is 10K. The maths is here for me. How do you view this idea?
First of all, everyone are welcome, right? So we do have day traders.
Okay.
We have a swing plan that you can hold overnight, or day trading when literally you will liquidate at the end of the day. For investors, we still don't have a specific plan, but technically on the swing plan, you can hold your position 3 months until the next earnings, basically, and then we will liquidate your position.
Oh,
We
they
will
like a
probably
rule
in the
against
future
it.
also,
Makes
launch
sense.
a plan for investors.
I was gonna say it's not a bad deal,
That's
honestly,
the
right?
position
You
for
go
you as
fucking
well.
load up
I
on
spoke to a CEO of
any prop firm you can, just pass the challenge and just go fucking long indexes.
regulated broker.
Not a terrible
dealer,
idea,
large
right?
And I spoke to the CEO, and I brought up this topic of managing risk behind the scenes, because you can A-book, B-book, hybrid. There's all these approaches.
Yeah.
But especially when it came
Imagine
to
they have a lot of
time
rules
avoidance,
to
which is
counteract that, though,
he said there's no
such
reason
as
to
that
e-book these
one.
crypto traders, because it's not logical to be-book them, because they are just going to buy Bitcoin, hold it until it's new all-time highs, and I have to pay from my pockets.
Yeah.
So it's better to send it to the live market. It's well understood in the forex prop firm space. It's usually a B-book, complete B-book or hybrid B-book.
Right.
How is it in the stock side?
So we're doing also an hybrid. You basically need to understand who you're dealing with. You have guys that are super aggressive, that will go all in and look for that home run, and in most cases it won't work. Or you have the consistency guys where you see that they're not putting a lot of shares, they're not using the full capital that they get. They investigate beforehand and handpicking the right stock and the entry and the exit. So once you realize that, you can start to understand better if you want to go with them to the market. And it's not just go with the full account. We might take one order, one trade to the market, or even double it, and the other trades will stay on the B-book. So we're playing with it. We have a risk management, a nice chunk of department there that should do the work, basically. It's not an easy task.
Yeah, this side is like the gold mine of the prop space. Is like whoever can best crack this data will have the longevity and edge. And I think every prop is putting resource towards it. Coming back to the trading team that you had when you're managing the real prop traders. First of all, if you can describe to me now the difference between the online prop model that we are familiar with versus the traditional real capital prop. What are the differences here?
Yeah, first of all, when you're sitting in an office, it's a different atmosphere, right? Different energy. You got 70 guys. Some of them want to jump from the building. The other guys are super excited and happy about what they did. So it's an amazing energy. Either way you look at it, it's fun and you feel the guys around you. You can talk to the guys and you can brainstorm and get more out of your trades, because like I said before, you can only think with your mind and your opinion. But if you have someone sitting next to you and telling you, but did you watch this? Make sure you watch this and so on. Then it just give you more edge and pushing you. So that's definitely the benefits of an office. On the other hand, of course, when you go online, you can trade from anywhere in the world, and we basically bring in accessibility to everyone. It's not just guys that literally here and can come to the office. So.
When I compare my own day trading, which is lower time frame M1, intra-session, average hold time is a couple of hours max. This is very manual trading. This is a lot of monitoring, decision making, and active, I want to call it. And I have my key windows that I trade, so I'm not watching 24 hours, and I have my chosen EURUSD, GBUSD, so I'm not looking at 50 things. But when I compare this, it is a job, it's a responsibility, and it's something you have to give mental focus to. When I compare this to my investing, specifically in the stock market, it's basically being an idea of key level, confirmation, buy, and hold.
Yep.
And now if it reaches my targets in a week, in 5 weeks, in 6 months, I'm very able to detach myself from it, because it's not my main thing, number one. And number two, because it's not like a highly leveraged thing. I'm not hyper-focused on each movement. And then one day I check my phone and I was like, oh, the market went bullish today, nice pop, this is great. But if I took that same swing mentality and hands-off and approach and put it into my day trading, I don't think I'd be able to be so free, because I'd still, even if it's like, okay, this is a swing trade, large stop loss, give it time, I'd still watch it every day. Everything when I wake up, when I go to bed, I'll check it.
Yep.
What is the difference, or why is there this difference between same person, same psychology, but day trading brings this side out of me and investing brings this more relaxed side out of me? What would you say this is?
The excitement, it's just a matter of looking at the chart and just analyze it. As you said, to make the decision in real time. The excitement will get into your head and will hook you into that screen or the phone, whatever, in order to see that you want to get that confirmation from the market, right? You want to see the results much more faster. So that's the main thing. And of course, when you're doing day trading, in most cases, as you mentioned, on your investment, you're taking it slowly and you're not going all in. But in most cases, in day trading, you're risking a little bit more and you're allowing yourself more. Because
Leverage,
exactly, the leveraging. So those elements.
Do you think, therefore, in a leverage environment, in a riskier environment that day trading is, that taking the same mentality and trying to be a swing trader is harder? Because in the end, you have your investment mindset, you have your investing, but then in the end, your chosen approach was M1, lower time frame, scalps. Even though you had the skill to be a swing trader, why did you choose to be a scalper?
I mean, for me, the excitement as well.
As in, that's something you wanted?
Yeah, 100%.
Okay, interesting.
I mean, again, when you're playing Counter-Strike and you need to find your next best shooting point, and it's the same thing. I'm still looking at the chart, like bad guys and good guys, right? Like fighting each other and how to find the right spot to shoot that person or whatever. So it's really about just analyzing in real time.
And on the trading floor amongst your team, the few star players that you probably had, those few exceptions that would always perform or would always be calm or would always pull out good returns, what did you see in them that was different, that led them to have that success?
You definitely said it, calmer. Definitely, if you come with a calmer background, I guess, or just your personality is more introverse, right? Then it's easier for you to deal with unique situations, because we will all react in some degree to you bought the dip, but it's eventually continued against you, right? So we will all react to those elements. But if you're more of an introvert, if you're more of a relaxed person in the first place, it will be much easier for you to handle the situation. So this is definitely one of the things. And just the fact that you are a hard worker, because there were guys that used to stay all night at the end of the session, continue to journaling, continue to craft their strategies and understand what they want to do for tomorrow. And there were guys that once they hit their daily loss, were out for the day. So it's a different type of person.
When you compare the behaviors and the psychologies and everything you saw in the real prop firm in person with the energy of the room and the team mentality and the coaches and everything, all the resources you had there, and then you see the results of people, and then you compare it to the online prop firm now, and they are trading in isolation, they're learning online, they may be learning alone, figuring it out. It is a completely different world. And even though the capital might be the same because in prop firms you have the leverage now, have you found a similar success or is it completely different in the online space?
It's a different beast, no doubt. I mean, the guys online today, a lot of them are not necessarily looking for the classic trading, but actually, and you talked about it with Saul, about evaluation, risk reward on evaluation and payout, and trying to hit a home run, a lot of them. And in the office, if I had one guy like this, I would kick him out immediately. But in our case, when you have thousands of traders every day trading, some of them will try to hit that trophy and just go all in. Some of them will take it serious and start to work and craft their strategies like the guys in the office. But yeah, you will have a bunch of a mix between those. Give me the Lamborghini tomorrow, I want it, or you know what, I know that I need to invest here and take my time in order to succeed. So
and the guys on the online space, which is going to be most of the people watching, what are they doing? The ones that are making good payouts, what are they doing? What is their behavior that you see?
Right. So first of all, we saw that once a trader has boundaries on his risk side, so limitation on the risk, he will be more successful, or she will be more successful. Right. The more boundaries you give, the better the trader will be. So for example, we have a daily pause. So if you reach that, you're done for the day. Right. Let's say $700. Most of our funded traders, and I'm interviewing all of them, most of our funded traders will say that this tiny key saved them and made them profitable. Right? Just the fact that we're stopping you. You don't need to take a breather after two losing trades, right? Like before we talked about. I'm stopping you. I'm telling you, you're done for the day. Forget it. Come back tomorrow. Once I'm doing that, you're not blowing your account. You know that you need to relax and take that moment to yourself. So that one. Also, if we will limit the number of shares you can buy, right? There are guys that buy 10,000 shares, 20,000 shares, and we say, relax, start slowly with 3,000 shares. See how you can progress. And you're actually making progress, right? Because we limit the risk element. Okay, so that's definitely one. And of course, the classic, they scaling into the position, they looking for the A+ setup, they're not trying the Bs or the Cs, they're actually waiting for the A+ setup, patiently doing 2 or 3 trades a day. There are some exceptional traders that will execute like 50 trades a day or 100 trades a day. We have great guys like this, Jordan, for example, but it's a very unique one. In most cases, they will do like 3 trades.
Even 2-3 trades a day seems quite active, quite aggressive.
No, that's a solid one. I mean,
I mean, at least in the forex side,
12,000 stocks. 12,000
yeah, true.
symbols.
There's opportunities all over.
Yeah.
For me, I'd be shocked if I took 10 trades in a week. I'm like, wow. I've been too busy here, but I'm also looking at only 2 things, so it's completely different. What about average trade duration? Have you found that the more successful traders are holding for shorter or longer? Any pattern there?
Yeah, so in this case, they actually most of our traders are day traders. Their average time will be on the successful one will be up to 10 minutes. So yeah, very short term. Selling the top, buying the dip. A lot of them are shorting penny stocks.
So they're basically reaction scalps. You find a moment in the day of manipulation, high volatility, and you're in and out 10 minutes.
Right.
Okay. And have you found, because this is something you were doing too, actually, have you found certain things that would increase your probability to know where a reaction is going to be? Is it just key levels, or is it this volume price analysis?
Everything together. I mean, you will see, for example, on the penny stocks, it's much easier to do. I actually took a challenge on myself to trade penny stocks. I never done that. So trade penny stocks and shorting them, right? So
only shorting.
Only shorting. Because a lot of our guys are shorting penny stocks. They're waiting for the pump. It reached a major level, looking for the volume, some price action, and shorting the top. So a lot of the guys are doing that, and they're doing it pretty successfully. And there are also nuances there. You need to understand because when a stock like a penny stock is popping, it could easily go from 200% to 500 and 1,000%, right? In a matter of minutes. Yeah.
Oh.
So that's how crazy the stock market is in a good way.
So I mean, it's the same as meme coins at this point.
Yeah, exactly. Similar to that. So you need to understand if you see the first pop and you say to yourself, okay, is it done for the day? It's going to drop, or there's another leg to the upside, and so on. And the technical key levels, and also the catalyst. Why does it pumping up, right? There's something really about the asset, the company, or we actually just seen a classic pump and it will immediately drop. So those elements will give you a little bit nuances in order to understand if that's the top or not. A lot of them are using a short, like a tight stop, right? They will enter. If it's popping up a little bit more, they are done, and they will try a few times until they get it.
I finally have a special offer to share with all of you from the US or my futures traders, which is over 20% of the listeners of the show, and that is Alpha Futures, a leading futures prop firm that is working with Trader 8 and NinjaTrader that are compliant with CME regulations. With the largest end-of-day balance drawdown in the industry, and 90% profit splits and same-day payouts, and with the most competitive pricing in the industry, with accounts starting at just $79. On top of that, just by being a viewer of the show, you get up to 40% off all evaluations. So why not get started with an evaluation right away, trading $50,000, $100,000, and you already know the power of prop firms and larger capital. So go ahead and use the link in the description or code TOT for the best prices in the industry, plus the best discounts in the industry to make this a home run offer if you are a futures trader. And usually the most successful, what kind of risk reward and win rates profile do they have?
So it varies, of course. You got the guys that have high success rate, a little bit lower risk reward, like a 1-to-1, 2.2. And you have the guys that actually using more of a risk reward type, but lower, like 30% success rate.
Okay.
Yeah.
And when you were trading in the professional prop, what kind of successful traders win rates and risk reward? What did that look like?
So it's also pretty much the same on that level, but the idea is also on the personality level, right? You could be, for example, for me, I'm a high success rate, a little bit lower risk reward, although my risk reward is fairly good, but I'm aiming for better success rate.
Okay.
But you will see guys that doing 30, even 25% success rate and
high risk reward.
Super high
Yes,
risk
to be honest,
reward.
if I'm to compare my personality, it's not like yours. My preference is I'm happy to have a 50, 40% win rate because I know I can increase my trade frequency, I can take more trades, and I know my risk reward will support me, and therefore I'm in the market a lot, which is my personality. I don't like sitting around watching and doing nothing.
Yeah.
So I will manually lower my win rate, use my risk reward as my support, and increase my trade frequency, which in effect increases my rate of return. But I think other personalities will be, no, I need 80% win rates, I need to take it easy. It's the personality types.
So in that case, what I'm doing in most cases, it's basically scaling into the position, and then I'm allowing myself the flexibility that the stock can go against me. For example, if I'm buying the dip, I'm not going all in, right? I'm buying a chunk, like 20% of the total risk that I'm willing to take. If it's dropping down a little bit, I'm averaging my position and adding more to the position. Now, I gotta say this because if the guys are listening right now and they hear me saying averaging on a losing trade, most YouTubers will tell you that it's not something that you need to do. But as long as you're within your risk parameters, you're willing to risk, let's say,
Yeah,
$100 for a trade.
the same thing I do.
You entered and risking $20. Now it's dropping down. You're adding another risk of $20. That's totally fine, right? You are losing, but you're within the $100 that you're willing to lose. So I'm basically buying a whole lot of shares across the accumulation, basically. And even if it's dropping against me, I can add more because I'm staying within the risk dollar that I'm willing to take on that trade.
But on the flip side, you'll have certain entries where you only got a small part of your total risk, and therefore you caught the move,
Right.
but you didn't get enough profit because you didn't get all your entries in. Is this a disadvantage that you're okay with?
Yes, on two levels. One, in most cases, when I start my trade, like the 20%, I don't care about the execution. So I'm just throwing the number, throwing the order just to be in that trade, just to feel that trade, right? To be committed to that trade. So I don't really care if it will go against me. And in most cases, it won't go to my favor immediately because I'm entering earlier than I should, right? And second, I can also add when the price is going to my favor. Let's say it bounced, it's pulling back like a retest, and then I'm adding more to the position. So I can always, just
Same.
add to my
Same.
favor.
Sky does the same thing we do, basically, right?
The
In that
idea that
regard.
you're holding a trade for minutes, 10 minutes, 20 minutes, an hour.
At least when it comes to
how
like
do you use
those
when
kind
you
of
stop loss
fib
break even?
entries.
How do you use this as a tool to protect yourself? Because you're looking for reactions, session reactions, and if you see manipulation, divergence in volume, and then you get in, and then you don't get the reaction, this is now the trade is not going in your favor. Will you quickly break even, or do you give the trade space to play?
I'm not using stop losses at all. So
Oh, I didn't know that.
this
Okay.
is a statement for that.
Why?
So I'm not using stop losses. Obviously, not a hard stop loss in the system. Obviously,
mental
stop loss. I know what I'm willing to lose on that trade, and from here, it's about managing the trade, right? The most important thing, at least in my eyes, is managing the trade. So if I'm executing the trade in a wrong place, so-called, it doesn't really matter as long as I'm playing it the right way when it's moved against me or to my favor. So in that case, I won't go into break even. I don't care about the break even thing. I'm either losing that trade or making money on that trade.
Okay.
It could be losing less on that trade. Let's say instead of $100, I'm losing
with a bit.
80.
Okay.
Don't agree with that, but whatever.
But basically, I'm not breaking even. I'm giving it the time because I'm not really responsible of moving the trade, right? It's not me that's moving the stock. So I'm just playing with.
But when you have, let's say, the mental stop versus a actual order of a stop, let's say you're willing to lose $100 over 30 points, and then price comes to your level and hits your stop loss, perfect. You lost exactly $100. In the other side, you might have a scenario where price comes slowly and consolidates around your stop loss, and you're okay, it's not looking good. You lose $101, no problem. But then you have another time where price just drops, and instead of losing 100, you lose 120 or 100. You lose a lot more than you expected because you're monitoring a bit of delay, a bit of decision making, and you end up losing more than you should have if you had hard stop. You're obviously aware of this, but what is the reason you still choose this option, even though there is this problem at times?
Because first of all, it's a rare situation when you will see a major drop against you. That could go against you, and like you said, that will lose so-called 105, 110, right? But at the end of the day, it's better, at least for me, it's better to give the space for the trade to work and actually managing it, comparing to the fact that I need to close that no matter what on 100, because it might drop to 105, and I'm okay with 105 as well, and then it will bounce back.
So how do you stop, let's say, the voices in your head, psychology coming and saying, okay, I'm at minus 110, but it's looking good, minus 120. No, it still has these things, I can still hold it. And next thing you know, you're just lying to yourself, and you allow this 100 to become 300. But then when you look back at the next day, like, oh, no, I made things up in my head. Because whenever you have conviction, the brain will tend to see only things that is in its favor, and you'll very easily ignore the problems, and then you have a bias, and then you're fixated on it. How do you avoid this happening?
So you're taking me back to my biggest loss story. There was a time a few years ago, I lost like in 3 days, 91K.
Wow. Okay.
Yeah, that was a big shocker even for me back then.
This was prop money or your money?
My money.
Gosh.
And it was so basically the same as you just mentioned. I used to lose like $10,000. That was fine for me, even 15. But 2 hours into that trade, I was already down 25K. And I kept telling myself the same thing as you mentioned. Okay, I can fight my way out of it. I will add more to the position. I will play with it, manage the trade and everything around it. And it didn't work eventually. And that was the time when I was the head of the traders in that prop. The capital was mine, but I was at the time trading with the guys, right? So it's not just about me not closing that trade. It was also the way that everyone looked at me and said, "What the hell are you doing? You're teaching us, you're showing us every single day that you need to close the trade, and you're not doing that." So it was a lot of pressure.
How long ago was this?
Roughly 6, 7 years ago.
Okay, so quite a while ago. And since then, I'm sure, as they say, your biggest loss is your biggest lesson. What did you learn from that period?
A lot. First of all, about after that, I went home and just crapped the hell out of my risk management and everything involving the number of shares I'm adding to the position, the places I'm adding in, everything involved around that. I had huge Excel sheets, that I played with the numbers and see how much capital I need in order to buy X amount of shares on each tier or each place that I'm adding to the position. And second, I felt at the beginning, I felt kind of I can win the market, right? Because before the trade, I knew what I'm doing, I knew what I was doing, and it felt good. And all of a sudden, the market slapped me in the face and told me, "Listen, sit, be humble. Although you know what you're doing, you need to continue to play by the rules, right?" So that's the main key.
What about, because everyone has a losing period and everyone has this calamity trade. Yours is probably a little bit bigger financially, but I've had my periods too where I just look back and think, what have I done? And then you just feel hurt. And I think every trader has walked through that moment. But apart from the lessons learned, which you can look back on 6 years later and smile about it, but in the time it was very serious. Excuse me. And the days after that trade is also make or break moments, because I think you enter a fight or flight reaction. Where I've spoken to traders, I had one on the show recently, and he said he was also working in a prop firm, a real prop firm, and he just didn't take a trade for 3 months. And then eventually his manager of the team said, "Okay, go and risk and make $50, because I know you make $50, just to get the feet back in the water and slowly build the confidence." And for him, in a fight or flight, he went into flight. He was paralyzed, and that was his emotions. In those situations when I've had it, the days after, I'm ready to fight, and then I need to recognize, okay, I'm going too aggressive. I need to calm down. There's no need to win back that loss in one day. You can take your time. It's going to be a process. But either way, there is both sides, fight or flight. What did you experience after this 90K loss in the coming days and weeks, and how did you manage the recovery?
So first of all, once I closed that trade on Wednesday, I remember it vividly. So I closed that trade at 11 Eastern time, and it felt a relief.
You know what's funny is about these people that always go about having no stop loss. Out of all these things that I've watched, Whenever people talk about their biggest loss, it's always people that are doing this stupid fucking shit. They don't use a stop loss and they try to just fucking add and add and add past what they originally wanted to risk in the trade every fucking time. These people don't learn from others' mistakes.
The money, but I'm done. I'm out of that situation. And then I took 2 weeks to clean my head, go through.
Clearly learned after
just,
he did
on
himself,
the technical
though.
level, side of things, the Excel sheets. Obviously, went through the charts, see what I did wrong, what I could improve for next time. And I knew, and that was for my advantage because I already knew what I'm doing. I started to convince myself again and tell myself, you know what you're doing. You messed up here, but at the end of the day, you know how to trade. So just get back on the horse, take it slowly, build it again, and you eventually will reach that moment that you're moving forward from that loss. So it's just a matter of
like the only guy that did it properly was the options guy from yesterday, right? Where he doesn't use a stop loss, but he sizes the options trade for his risk parameter for that trade. All these other people do not do that.
Just outside of trading, not touching the keyboard. That was literally the first time I took so much time out of trading. 2 weeks. Even when I'm flying for vacations, I'm taking a laptop and trading.
And the airplane Wi-Fi is still there. Yeah, me too.
So it's just a matter of taking the time off. And really, even if you're just started to trade, like 6 months and you're hitting that major loss, it doesn't have to be, by the way, a big money-wise loss, right? I spoke to a trader. She told me she lost like $300, but it was so massively messing up her mind that she had to take like 3 months out of that trade, out of trading in order to get back.
Do you believe, because you've obviously worked with a lot of traders in a very professional way, do you believe trading is for everyone? Do you think everybody has the strength, the courage, the mental capacity to see through the highs and the lows, or it's only for certain people that have this more calmer personality?
I think for today, everyone can do that, right? Because of the solution that the online industry and the online platforms generally, it just gives you the ability to trade, even if you're not a super successful trader. And this is also something that Amit, that a lot of the YouTubers will tell you about, right? They will show you the Ferraris, but you don't really need as a trader to reach that level. You don't need to make 8 figures, right? Most of us, like general regular human beings, will be very happy to make another $3,000 a month, right? $2,000, $5,000. So once you realize you can do that through trading, and I believe anyone can do that, it's just a matter of how much you want to do that and the tools that support your environment, then you can actually focus in on that and succeed in that, especially in today's market. So
I did a ChatGPT calculation with my brother, and he's 22, and I told him if he was to invest £100, because in the UK, but $100 per month, sorry, $100 per week from today, every single week until the age of 60. And I told him, guess what are you going to be worth? He said, I don't know, like 100k, 200k. I said, no. And I showed him on ChatGPT, 1.6 million.
Yeah.
The power of just investing in the S&P and putting money every week automatically for your bank account and never looking at it again. Meaning to say, if somebody's coming to trading to get the riches, whatever, if you can now go to a prop firm and aim for like a 30k payouts, which so many people have done, and it doesn't need to be tomorrow, it can be over 6 months, it can be over 3 years.
Exactly.
Take your time, 30k, 50k. This is a substantial amount of money to invest, and giving it time, allowing compounding interest to take care of the rest, you can achieve a lot of your financial goals. The only difference is people want it tomorrow and not at the age of 60. So then you got to think of other things. But to your point of the trader going from $0 to $50 million just from the markets, super rare or unheard of. So the achievable side is you make a couple $100,000 from trading, maybe $1 million or $2 million. This is where most people achieve, and then what you do with that money afterwards is what counts.
So it's like Ronaldo or Messi, right? How many players are in that level?
Yeah.
2 or maybe 10, right? But at the end of the day, there are tons of other players that are great traders making money, and it's simply as that.
Yeah. As we wrap up the episode, because you've got almost 2 decades of experience, but also now with your prop, a bird's eye view on a lot of traders' behaviors.
Yeah.
I want to give you the opportunity just to give some general advice for someone who's in their 6 month to 1 year mark, as a lot of the professional traders you would deal with. What advice would you give them from your years of experience?
First of all, use a prop firm. That's by number one. And I'm not marketing it. I'm literally 100% believe that you gotta work in a prop firm. It doesn't make sense not to do that. Taking your 5K, 10K, 25K to the broker and risk it, it just blow my mind, that guys are still doing that. That's the first thing. Because once you're in that stage of 6 months of a year, you can learn, and the learning curve could be much more shorter for you in order to reach that payout, in order to reach that profitability. And this is basically what we're doing. We're giving you, trading someone else's capital. You have enough capital that's worth your time, actually, and you're not spending hours and hours to make $100 a month.
Oh, this guy leaves out the fucking fact that they rinse you of like 10-20% of your gains. What a fucking snake.
Right tools that we carry.
You should only use a prop firm if you have no money. Other than that, there's no reason to use this fucking garbage.
Like the risk management tools, the daily pause that I mentioned, and the rest of the mechanism behind it, you can actually perform much better than you could ever imagine or did on your broker account. And we see that all the time. I got funded guys that making $50,000 payout, but they actually couldn't make $1 on the broker account.
Yep.
So,
Michael, you were a stock star today. Thank you very much for flying in.
It's my pleasure.
Thank you, bro. Boom. Perfect.
0.8% return in a single year. What is the one thing that you could point towards that allowed you to achieve such a result?
I would say the one thing that allowed me to achieve that result, and things that I've learned over the last probably 5 years of my trading, is if you would have just invested $1,000 every month into the QQQ for the last 20 years, you'd have over $1 million today.
He is a futures trading world champion with a return of 253% in a single year, and studied under the great Larry Williams, who achieved the highest return in the trading championship is the one and only Kevin McCormick.
It's very difficult to outperform the market on $1 billion. And that's where I see the opportunity for the retail traders. They don't understand is you're more nimble. You can get in and out.
In this episode, Kevin exposes the reality that hedge funds, Wall Street, venture capitalists, and money managers all face when it comes to trading. He reveals how retail traders just like you have a massive edge over Wall Street.
The reality is most hedge funds, venture capitalists, and money managers underperform the market. Trillions of dollars, billions of dollars out there is being traded, and they underperform the market every year. So what is the advantage for the retail trader? Let's be honest and realistic with each other, because most people want to jump in and think it's going to be a get rich quick thing. That's not the reality. Because guess what? If you get rich quick, the hedge funds, the venture capital guys would be doing that strategy.
He also reveals the propaganda machine that is pointing traders in the wrong direction.
If they're never talking about something on CNBC and then suddenly it's all they're talking about, that happened with during the COVID stuff, lumber. Oh my gosh, I'm like, nope. They need some suckers to come in and give them some more buying so they can sell, because the lumber market's not very liquid, and those big guys, call up the reporter.
How are these 30-minute candles printing? Gold's starting to go, right? Potentially breaking out this higher time frame thing. After breaking out of this one. Interesting. Interesting to watch the reaction up there.
Friends and going to go on TV and start talking about it. It's once you identify and see what the propaganda machine and how it works for the media out there, it really helps you when you're trading identify. It also helps you to not scare yourself out of your beliefs in your trades.
Not only that, he shares the exact steps that he took that you can take too to achieve world-class results.
But do you feel like day trading in terms of longevity isn't really where the edge is at?
No, I don't. And it's one of those things, if
The number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Welcome everyone to the Words of Wisdom podcast. We are back once again, still the number one trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. We're still on the biggest US podcast tour in history, and it's thanks to our sponsors, TradeZeller, the best trading tool for all traders out there for backtesting, journaling, in-depth analytics, you name it. But thanks to them, we've been able to make this happen. And we're here on the tour, and we've made it to Phoenix, Arizona. And we're here for an incredible trader who was the 2021 Futures Robbins Cup World Champion with a return of 253%. 0.8 or 253.8%, let's not leave that out there. Actually studied under Larry Williams, which is obviously an incredible futures trader from the Robbins World Cup as well. It's the one and only Kevin McCormick.
Great, thanks for having me.
It's my absolute pleasure. Thank you for being here today. And man, especially on a sunny day, which I think isn't a rare thing here in Phoenix, what I'm learning. But Kevin, 253.8% return in a single year. What is the one thing that you could point towards that allowed you to achieve such a result?
I would say the one thing that allowed me to achieve that result and things that I've learned over the last probably 5 years of my trading is to identify longer term trends. And
that's
then
not
trade around
that
those trends
crazy,
so you can
honestly.
maximize
That's not like a remarkable number. I don't know why they're like so harping on that like crazy, right? Like most funds do this. Like maybe not this high, but like you see a lot of triple digit funds in returns that this kind of returns in a year, and they have like extremely tight risk parameters. So like as like a individual trader, this is not like unrealistic by any means. A lot of people surpass this.
your return. I
By a
found that
lot.
trading is much more easier and relaxed when I identify longer term trends in the marketplace that could be either generational, inflation based, technology based, and then trade around that trend. So you have more of a fundamental approach supporting the trading activity you're putting in place.
So when you say trend, are you referring to sort of a narrative at the time versus say just a trend in the markets like in the technical side? More so a current narrative like say technology or inflation or maybe election or something along those lines?
Yeah. So in 2021, the narrative that I identified in the marketplace, and really no one else out there was really believing except for myself and Larry Summers, was the oncoming inflation. And so when you're trading the commodity markets, that's a great place to be if you believe that there's going to be a generational shift in inflation coming based on something like, government spending around the world, and more specifically the spending we saw here in the United States. So that year in 2021, I was able to identify those results because I believed that everyone in the marketplace and the media was misidentifying what's coming. And really, as I told people at the time, it's that generational mismatch. So the last time someone really felt inflation in the United States was the 70s. So you have a good 2 generations of people who have no idea what inflation really is. And so everyone in the market and the media was able to, blow it off. Oh, inflation's not a big deal.
True.
Things of that nature. And, I was like, well,
Like
this is where
experience
I truly
matters.
believe we are going to see a rapid increase in inflation. And the futures market and commodities specifically was the great place to be for that trend.
Definitely, and it's still to a degree ongoing. Maybe the volatility shifted ever so slightly compared to when it first started to play into the markets. We're still seeing it dictate interest rate decisions now. And I think the last FOMC meeting, we saw some very large movements still off the back of inflation not quite slowing down,
was
The
this?
change in the tonality when it comes to how many decisions we're going to have this year in terms of interest rates. Is that something that you're looking at as well, the ongoing fundamental announcements?
I look at it some, but also when it comes to the markets and things of that nature, it's amazing to me how much intellectual dishonesty goes into these conversations. You saw, we have the different gauges that everybody looks at, and you had like the University of Michigan gauge recently came out about what people in the survey believe the future inflation would be. And it shot up after the election. You're like, well, how is this possible? And there was people out there who broke it down by people's political beliefs, independent, Republican, Democrat. And oh man, what a surprise. The Democrats all of a sudden fill out the survey, something's out there, inflation's going to shoot through the roof. This has nothing to do with reality. And this is where you really can find mismatches in
True.
the market. Where
Yeah,
people
we've
are
heard
just
this a lot of
not-
times, right? I don't even understand why that University of Michigan thing is as relevant as it is, honestly. It's not like a huge polling of people, and then like as this guy said, like the whole political aspect of it now is quite ridiculous.
Leaving or following through on the data that's out there. And I think that's where a retail trader has a huge advantage, or an advantage they didn't have in the past, is we have access to unlimited amounts of data. And you can go out there and look into things yourself and follow on and see where there might be that mismatch in the market, because you'll see a lot of the same people coming out with the same stories over and over again, and you have the ability to look in and see the actual data. And that's where I think the retail traders will have an edge in the market these days.
It's because previously they wouldn't have as much access to information compared to today, especially at the speed at which that information is available. Well, before, if they would get it, it would trickle down over time. Could be a few days before they find out these sort of numbers. While now it's almost instant. So I couldn't agree more. What do you think in terms of sort of your retail independents or newer traders out there? Where do you think they should begin when it comes to learning these data points, learning about these things?
Well, I think this is actually something that's really dear to my heart, identifying and helping people build their wealth. And I think for people who want to get out there and trade first, you need to take a step back and level set expectations and reality. The reality is most hedge funds, venture capitalists, and money managers underperform the market. Vastly underperform the market, some of them. And when I say majority, I'm about 51%. I'm talking 78, depending on whose numbers you want to look at. So I see a lot of stuff and things out there for retail trying to pull people in. Let's level set. Trillions of dollars, billions of dollars out there is being traded, and they underperform the market every year. So what is the advantage for the retail trader? Let's be honest and realistic with each other, because most people want to jump in and think it's going to be a get-rich-quick thing. That's not the reality. Because guess what? If you get rich quick, the hedge funds, the venture capital guys would be doing that strategy. So there's not a strategy sitting out there on YouTube or a podcast, unfortunately for the viewers, that is going to suddenly make you millions of dollars. People need to be realistic about their investment, what they're trying to do. Just as an easy example, If you would have just invested $1,000 every month into the QQQ for the last 20 years, you'd have over $1 million today. So what is your goal in life? Do you want to have $1 million? Do you want to have that nest egg? Because the reality is you need to build the habits to have wealth in the future. Because if I give you $1 million today, I can almost guarantee you, you will not have $1 million 3 years from now. You might be broke. You see it with the professional athletes. Everyone who quickly acquires wealth then quickly loses it as well. And so first people need to level set and understand expectation, learn what compounding interest means. Then your goals in the market as you start off should be, okay, I want to outperform the market. I'm going to set a realistic benchmark and put it out there. And that's where I think it's just a disservice to so many people who hand their money over to hedge funds and folks like that and pay huge fees to these groups and then underperformance. Because if the market, just returned 18%, or 20, let's make the math easy, 20% this last year, and you gave money to somebody to invest it for you and they gave you a 10% return. Well, unless they tell you that they underperformed by 10%, you don't realize that you just lost basically a year of returns, which is very important depending on what you're doing and you're trying to invest in.
I mean, okay.
So I was
like we've talked about this, right? The whole concept of like ranking people at their job, and this is why I say most funds are literally garbage, right? They're just regular humans running a fund who suck at their job. It's like the whole idea of like the ranking them from like 1 to N, and like really in reality, like the top 5% only people that know what they're doing. Everyone else is just essentially like a real life LARP, right? LARPing as a fund manager. But no, like that first video that I have on YouTube talking about like out trading smart money, like can you, right? And we talked about this scale of like being a fish versus a whale. Like this is the advantage, right? It's the sizing thing. Because these people, like first of all, if you're in a fund and you want to invest in some kind of like instrument or a company, like you have to have your risk management team go research that company, go look into their balance sheets, like all the fundamental reasons to get into it, blah blah. And this is like a multi-month period, right? Whereas like us, like we can do this in a day or two and just invest money right away. We don't have to do that, right? We can just say fuck it, Nvidia go up, just buy Nvidia, right? When they cannot do this, right? So that like we have a huge speed advantage and like liquidity advantage, right? We don't have liquidity constraints trying to enter and exit the market. So, yeah.
Like the first level set with everybody.
That's the real advantage.
Not the first year. And when I had the opportunity to start learning
operate
from
much faster.
One of the people working with them, he's like, well, no, this is going to take some time. I've been doing it for over 6 months. I'm really just starting to really understand how to use, some of these capabilities. And I was like, I'm a smart guy. I'm going to get like that. I am a smart guy, but also it took some time. And even today, I always have to go back and look at other things and go through the trading journal, which is one of the most important things that, oddly enough, that I learned from Larry is to go back and have that journal because you have to make sure you're reinforcing the correct behaviors. Because you could be placing winning trades and they may be wrong based on what you're supposed to be doing and setting up. And unless you go back and review it, you don't understand that you were getting the
We always talk about this, right? Just because you made money in a trade does not mean a good trade. So you lost money doesn't mean it was a bad trade. You need to be mindful of these things. So I'm fucking with this guy so far, right? We're on the same page.
Positive reinforcement for your trades. And the next thing you know, oh, this is working great. Well, you just happen to be winning on one of those times when, hey, this strategy, maybe the strategy wins 70% of the time. You were doing it backwards and you happen to be on one of those 30%. You need to identify that. And I noticed that a lot with my trading as I try to put the structure that I learned from Larry in place on top of my 15 years of trading already done. It was very eye-opening to me to discover, you go back and try like, what was I even thinking, with that trade as I started to pick up on what I learned from Larry.
What was the first 15 years? What was the beginning of sort of the trading side? Because I know you started in tech and then transitioned into trading. What was it about trading that sort of caught your eye in the first place? And did you know when you started that it was such a hard industry?
It's one of those things, it's not easy. Because if it's easy, someone quickly makes money. And that's also where I think a lot of times people get caught up talking to people who've been traders for a long time. The market, the liquidity, and the spreads are tiny compared to where they were just 20 years ago. And so I've always been fascinated by technology in the markets. And so, I went on and got my background in tech and finance and took that initial, you go to college or university for y'all in Europe. And no one ever does a simple personal finance class. And that was an eye-opening experience for me. My university offered 1 year for a college of 15,000 students, which I think is a complete disservice to everyone in the world. Everyone should be taking a personal finance class. But that's where I first initially got to introduce to the compounding. And you look at it and do a 5, 10, 20-year plan on your finances.
That basically give you basic principles in that class.
Yeah. But then, because people go get a finance degree and still know nothing about trading or investing. And so, looking at that and understanding, okay, I want to be able to do this. So I came out of college right away to get it, and I was like, coming from tech, and I was like, oh, it was GoTo.com at the time. I'm like, this company later got acquired by Google. They were the ones that actually had the bidding process that now is where Google makes all their money. And I didn't know anything about options at that time, and so I did what everyone shouldn't do and took a huge cash advance on my credit cards and put it on there. And that was a very stressful experience. It taught me some of the things I don't want to do. It worked out well for me, but I got out of it quickly because it was stressful knowing you just put yourself into a huge amount of debt and bad debt, which is something that people always miss in those areas as well. If you're sitting on a pile of debt, credit card debt, we shouldn't be talking about trading.
I like that.
Yeah, because it's like I said, your debt's a 15-20% return. Anyone's gonna be thrilled, an investor in the market, to get that return. So get rid of your debt. Put the positive things in place. But then to jump into where I got into the trading, I started to learn about options. And that's where I got to also get introduced to some of the scum of the earth around there for retail traders as well. Because if you go back 20 years ago, options were still mostly a professional trader piece. And you had the same people out there right now, this is my strategy, this is it. And then you get in there and you I always say, ask the person who's teaching you something what their trading results are like, how they trade. And it's amazing so many people are teaching people how to trade who don't trade. That's why I always thought it was funny with Larry Williams' website. I really trade because he really does trade. Yeah, it's really, and I don't want to, I'll do a plug for a lot of people, but that was just hilarious to me because I'd experienced it early on, that these people they're there to collect fees for classes, and there's always another fee and another thing they want you to do next, but none of them are actually trading.
Let's take a break for a minute, guys, because I want to tell you about our incredible sponsor, Alpha Prime, the first of its kind in the industry. Now, valuation firms have been in the traders across how it works, and advanced capital, starting creative futures.
Question or two that people should be asking to maybe help them sort of have a filter.
Yeah, find out their trading history and how they trade themselves. You quickly find out, that someone doesn't actually trade. And that's also why.
True, right? True. How often do we talk? You can always tell people are LARPing, right? The moment they talk about trading, you can fucking tell. You can just tell, and you can tell who can trade it. That's the funniest thing about trading, right? If you know how to trade, it is so fucking easy to identify LARPs and who's not LARPing every fucking time.
People who think that's the way to go in trading. And there's a lot of stuff out there, but you don't run into too many people who've been day traders for over 10 years.
Really?
I don't know how many of you have interviewed so far.
I've interviewed quite a lot, but 10 years is an interesting one because a lot of them have done it, they've done it for a long period of time for sure, but in terms of like at a very high level successfully, a lot of people, to be fair, at this point, they're doing it, but then they're sort of transitioning out now because they made enough from the market. But it's different markets as well, so they're doing a lot of small cap stocks, and short selling, so it makes a bit more sense in terms of day trading. I think scalping, I think the markets really can dictate the style. But do you feel like day trading in terms of longevity isn't really where the edge is at?
No, I don't. And it's one of those things, if you go back to when the algo black box trading first started, that was kind of like that opportunity. There's opportunities in the market. What people don't realize is the firms that were doing that heavily, they were changing their models every year. And that's what people forget is, first when you're trading, you have to identify what kind of market you're trading in. And okay, I believe right now we're in a bull market. Okay, so it should be moving up. Well, every year's not the same. So the strategy that worked last year probably not gonna work the same this year, and they saw it. I remember the interview when I can't remember, probably over 15 years ago. They're like, oh yeah, well last year our black box trading returned 35%, but if we did that same strategy on the market this year, it would only been 20%. Oh, but we tweaked it and made some changes and it got better. And that's what people don't understand with their trading is it's a continuous learning process, and then identifying where you want to go next. And that's where early on I got into the options trading, and even like 20 years ago, I went through that gamut of bad people out there. And then I also went through a lot of firms because nowadays you go to any firm and you can trade options. That wasn't the case 20 years ago. And I'd go through your major brokerages, and I knew more than the person on the phone. They wouldn't even let me do my strategies, but on something simple like a butterfly, trade. They'd be like, well, no, this is too much risk. And I'm like, guys, there is no risk here. And that's when I finally eventually ended up at Thinkorswim with Tom Sosnoff. And that was where I got to see the difference. When you talk to somebody who understands trading, who's not saying, hey, you're gonna make 100% return, who's very realistic, you're out there trying to, get an extra 10, 15, 20% from the market every year. His group at Thinkorswim, I was like probably one of the first 1,000 people,
really? Wow.
very early on, because I kept looking for a platform that would allow a retail trader to actually do options trading. Where now you can get good education around options trading from your brokerage firm, but they were early to that. And that's kind of where I learned a lot from Thinkorswim. And also my key to my strategy, and I think this is important for people out there, is I always build strategies that let me work full time. Because until you have enough capital to actually trade and live off the capital, you need to be able to work full time as well. And so that's where I was really putting in strategies that allowed me, and that's why I never got into the day trading side, because you can't do a full-time job and day trade at the same time, unless you're working at night in a restaurant, then you're gonna wake up in the morning not focused.
Yeah, very true.
And so that's where I really had that opportunity to go through it and slowly build up the correct processes and trading habits to be successful when the numbers get bigger. Because one of those things as well, I'm sure most of your audience is under 40. When you're younger, it might feel terrible losing a couple $1,000s because it means a lot to you.
Yeah.
But you gotta remember your end goal in the future is to be a lot bigger accounts.
Yeah.
And so you've got to feel that stress and that emotion when you do maybe blow out an account and be like, okay, I'm not gonna do that again. And how many times I teach myself to always leave a stop in place. I still make mistakes sometimes. I think I'm smarter than the market. Like, oh no, it's like no, follow your rules. Anytime I break the rules, it doesn't work well for me.
Definitely.
But everyone has the same habit. Everyone will tell you the same thing. I didn't follow my rules that one time, and then boom.
How important do you think it is to be able to learn from your mistakes quickly if you're going to be a consistent profitable trader versus say that example?
Critical, extremely critical.
It's not really. Yeah, someone could still change for sure. Okay. But I found, or what are your thoughts, should I say, in terms of how important is it to be able to learn quickly, observe that mistake and learn quickly 1, 2, 3 times, and then making the change versus prolonging it over and over?
It's learning quickly. It's also being honest with yourself about why it's not working. You'll always hear people like, oh, wait, they came from my stops. No, the market doesn't really care about you and the size of your trade. It's a very large market. You need to be putting your policies and things in place and learn from it. If you're not willing to accept your mistakes and also understand your strategy, that was one of the biggest things with one of the strategies I would run is like, hey, something that's going to happen every year, I'm going to have 5 losers in a row, just if I look back at it. So it helps you when you hit the losing streak.
Yeah.
And then you also understand, well, if I'm sizing my positions this much, then that's going to be this much of a drawdown. Because, you can paper trade all you want, but until it's real money and you hit a 20% drawdown period, even though you know it's coming, you got to be, ready and then get back in there and continue to put on the right trades because the losing streak's gonna come to an end. But if you let yourself get down and then get off your system, well, then you come back, a couple weeks later, and you're like, oh, I missed all the winners. Yeah, it's gonna even out.
Yeah.
You're gonna have streaks where you're up 5, 8 trades in a row too, and you feel like a genius and you're happy. But you got to remind yourself the drawdown's gonna come as well. And you really, it's the emotional part I think for retail traders that is really the more difficult place to be because most of us are sitting home alone, and you're just feeling that stress when things swing. And as you become more successful and the numbers get bigger, they're much larger swings. And your emotions and your mental state will hurt you more than your trading strategies.
What would you say your aha moment was? A moment where you really started to see progress within your trading results?
The aha moment came during 2020 when I really started to understand that I was seeing data and things in the market and identifying the trends. And I made the decision instead of trying to tell everybody in the world and online and arguing with people, I said, forget it. I can make money on this, and I'm just going to take care of myself. And that's where it was in 2018 when I did Larry's first course, and really he helped me put some additional structure around the over 15 years of trading I already had in place. Because that was when I was hitting a point with the capital allocation where I knew I could make a switch to trading full time. It would be possible, but I knew if I was going to make that switch, I needed to have a little bit more that would give me a consistent income stream coming in and put some more of the strategies in place. So kind of like I said there, I took Larry's first course. I only did 2 of them, but Larry and I would talk in email afterwards. Into 2018, so then 2021. So really, it's 2.5 years later.
Yeah.
So beginning 21, so you could say about 2 years before I really hit my stride with that. I was beating the market with the futures trading consistently there along the way, but it was still more learning. And like I said, finding out, hey, that was a fun winning trade, but it was a wrong trade.
Right.
And identify those and then have that confidence to go, full into it.
How would you identify the wrong trade?
Well, you know what your strategy is. And it was funny, like I have my notes and I'll say, oh, this is what I'm looking at. And then you go back and I'm like, the notes aren't even accurate. And it's also the plus and the minus of working full time and doing it. So my futures trading strategy is usually looking to capture a 3 to 5 day swing. Sometimes I'll be in something 2 to 3 weeks around the futures trading strategy. But I was coming home. So I would always
like your boy, right? Swing trading essentially for the
so you
most
have that
part.
1 hour time period, and that's what I'm going through. But sometimes when you're working full time as well, guess what? There's other stuff going on. Life happens. So you may not give it the full attention you need. And then you come back later and you're like, what chart were you even looking at? And you know, that's where being honest with yourself. Like, you were wrong. Okay, it's great that we made money on it, but the trade was wrong. And then, you know, hopefully, you know, when you do have your losing trades, at least you know your setup is correct. You go back, okay, we did set it up correctly here, and go down that road.
How important to be able to identify those wrong trades and be able to make those reflections? How important is it to collect a good amount of data from your trades, be able to analyze them from not just did it win, did it lose, but on different factors as well, taking more in-depth analytics from your trades?
I think it's very important. Kind of like, that's where I was able to go back and say, hey, look, you're going to have, if you want to do this strategy, understand that at least once a year, more likely twice a year, you're going to lose 5 in a row. So be set up and ready for it. It's like they always say for the stock market, a correction is healthy and good for the market. But guess what? No one wants to buy when you actually get a 10% correction. They're all, you know, on TV screaming and upset about what's going on, but you know, that's your opportunity.
Yeah.
You know, when you get that pullback, when you identify and you're ready for it, okay, this is what I was waiting for. It's time to pull the trigger and do it. Just this, you know, we're filming this week in January, and I just had a little trade that I posted online for some of my followers around one of my AI stocks coherent this week. I was like, wow, guys, we're falling, you know, right back to this retracement level, great support entry level. We touched it perfectly, and we're up 10% in 3 days in the stock. Well, you know, you just gotta watch and wait. You know, don't jump too early. And then how you want to trade around it, you know, different things. And obviously, it's a stock; it's not part of my future strategy. But then once you identify what you think is an opportunity, but then you have to also then say, okay, how are we going to capitalize on it? You know, with the different trading strategies I have in place. So obviously, stocks and things of that nature, I have a different trading strategy than I do for commodity markets. And that's a hit on something else that I think is important for people out there. You need to understand how each market operates and what it's truly there for. And also, I think one of the mistakes that retail traders will make is they get into markets that aren't liquid. You can always get into a bad trade. Getting out of a bad trade now is another conversation. And I've seen so many people get crushed. If it was, you know, the meme trades or, you know, during COVID, like one of my biggest tells out there in the market is it's kind of just, it's not technical, but if I watch CNBC all day, if they're never talking about something on CNBC and then suddenly it's all they're talking about, it tops in.
Yeah.
And like that happened with, you know, during the COVID stuff, lumber. Oh my gosh, I'm like, nope, this is so obvious. You got some big guys who came in big. They need to get out now. They need some suckers to come in and give them some more buying so they can sell, because the lumber market's not very liquid. You need to understand the contract's rolling in 4 days and they don't have lumber to sell to somebody, or they don't want to take on the lumber. So they need to get out. And those big guys, you know, call up their reporter friends and get them to go on TV and start talking about it. It's once you identify and see what the propaganda machine and how it works for the media out there, it really helps you in your trading identify. It also helps you to not scare yourself out of your beliefs in your trades.
I love that. So making informed decisions, and informed decisions mean keeping up to date with the things that are impacting the market, the narratives that are being shared through media outlets, but then not, as you say, panicking and reacting out of emotion, being able to take that step back and look at the bigger picture to then be able to either trade or not trade accordingly.
Yeah, it's something you need to understand with most of the stuff you watch on TV is somebody has an agenda for the story.
Yeah.
You need to identify what their background and agenda is. And, you know, the traders and things that come on TV, they're either talking their book or trying to get out of a trade.
True,
or different things.
right.
Especially when you have traders on TV.
Often we say this
those
shit.
guys could be out of the trade they're talking about at the end of the day. Or maybe even
True.
hours after the interview, whereas opposed to, you know, people come on and talk about longer term investments. So you need to know the people that are on there. That's also why I typically only watch the same channels for the finance news, because I know the reporters, I know their leanings and things of that nature.
Tendencies,
yeah, their tendencies, and I know what to expect from them from questions. And also, you know, you can see people come on, like, okay, this is just a soundbite interview. This guy's going to say his 4-minute spiel, doesn't matter what the questions are. That's worthless. Throw it away. But that's where podcasts like this and things out there, there are brilliant people in every industry who are doing long-form interviews.
Yeah.
And those are real opportunities for people to understand larger markets and things. If something interests you, go out there and find it. Because when you have people who are experts and brilliant in their industries who are willing to sit down and just talk for an hour, there's things you'll catch. And sometimes the important part is not what they're highlighting. It's the little piece that they kind of say on the side. And that's kind of how I've been with books and things out there. That's where I get into more of it. Larry was about cycles, and I've gotten into it more. And I really think there is, but I've seen out there seasonals and trends and cycles that drive the market on multiple levels. And if you understand those, it gives you some great opportunities.
Don't know where the market's going next? Stop worrying about your trading. Just get informed on exactly what's happening in the markets and what to expect. From Forex to futures to stocks to crypto, be on top of it all. That's why tens of thousands of traders are subscribed to Market Journal, a free newsletter that allows traders to keep up to date with the markets every single free today. Your crypto trade, if you want to be analytics, percent
Because like stocks, for example, and predictable, or is it more so kind of what we talked about at the beginning, where when a particular cycle begins, let's take AI stocks, for example, or tech stocks, for example, or now quantum computing stocks as an example. Is that what you mean by cycles, or is it something more so within the markets that's more of a kind of like the Bitcoin halving as an example, a fixed date that then has this theory behind it, this application to what to do around those events?
Yes. So the pattern recognition and things like that is some things I learned from some much older traders who have been doing it for a while, because it just amazes me. Like, they recognize a pattern, like, oh, this is what's going to happen next. This market is identical to, you know, 1986. And it's like, dude, really? And that's in your head. But there's different cycles out there that drive things. You have the generational cycles. So we have the millennial generation right now hitting their peak household formation and earnings, largest generation ever in the United States. So that's going to drive certain things. It's just going to happen.
You know,
There's
this
7
Larry
million
William
people.
guy that he's referring to as a YouTube channel where he goes in depth on these cycle videos, and he drops a video every few months talking about it. Pretty interesting, right? If you want to go check it out.
In the workforce forming houses. So
Also seems quite accurate.
there's things that occur with that. And then like AI is where I've moved most of my trading capital to here recently, because from my tech days going back 30 plus years, I was early to tech and missed the larger opportunities to make a lot of money each time. I was involved, and, you know, like, oh, okay, this is great. And every time I was like, oh, we're actually better off doing this. And that's where I see it now with AI too. So when it comes to technology or trends in the marketplace from a business opportunity, anytime something is greenfield, and when I say greenfield means there is nothing out there in the market today that fulfills that need. Everyone underestimates how much that is going to impact society and the upside potential for it. When you talk about something that's more recent, you look at the iPhone.
Yeah.
The iPhone came out. Well, we all had cell phones, or a lot of people had cell phones. But I was on that early, and I was like, okay, great. You know, I created a couple of the, early iPhone applications when it first came out. I'd be much better off just buying Apple.
Yeah.
Would have made a hell of a lot more money just buying Apple. And that kind of hits on, I mentioned earlier about the return of, the NASDAQ, the QQQ index, or the SPY. Well, it's my opinion, the reason why those indices always outperform your money managers is they simply let their winners run. People talk about it now, they're like, oh, there's only 4 stocks make up 20, 30% of the market capitalization of the S&P 500.
Yeah.
And then you get upset money managers like, well, I can't have 7% NVIDIA in my portfolio. Yeah. And that's the big difference is you get caught up sometimes taking a quick win and missing a long-term win.
Yeah.
And I think you've seen it with some of the other traders you've interviewed. You'll see those of us who, you don't have a 254% return, 253.8, unless you have some home runs.
Yeah.
And you don't have home runs if you cut profits early. And so you have to know ahead of time, hey, if this is going to be a possible home run like I think it is, all right, I'm going to size the position this way. Will we do other trades along the way, and things of that nature to identify it. You know, and to get in a little bit of the AI right now is nobody has an accelerated data center. I don't get too much into tech for people out there, but you know, you got old style data centers. Nobody is going to keep an old data center instead of buying a new one. You know, everybody's focused on the AI applications of why the GPUs, but the reality is in 2020, by 2028, most data centers will be accelerated data centers. It's something nobody has today. Nobody's going into the meetings with their boards and saying, hey, let's buy an old slow compute instead of a faster one. And then you have the same thing coming up. You've seen a little with Jensen Huang, CES just happened in Vegas, in the robotics piece. Well, no one owns a robot today. But if I can have a robot in the future that maybe cleans my house and does my laundry, well, all of a sudden a $20,000 robot doesn't sound that expensive. Because many people, if you just look at the United States, there's 10 to 11 million households that make over $250,000 a year. They're probably paying house cleaners and other people today. They're two working families. Well, suddenly you can buy the robot and just not pay your cleaners anymore. And that's where no one thinks about that. You know, you put that out there. Well, okay, great. Just adding a robot to 10 million households in the US is $200 billion.
Here in Phoenix, first time I've ever seen it. The driverless Ubers essentially. It's not by Uber. It's some different company.
Yeah, it's Google.
And I saw it the first time. I was at the hotel. I've seen like clips online, and I was at the hotel, and there was one just pulled up, and I was like, it's mind-boggling. But as you say, it's like they're the sort of things you need to identify as things that a lot of people would assume. It's kind of going back to what you said about the narrative. Once it's on TV, once it's within the media space, it's already happened. Like, so the move's already taken place. There might be some extra percentages there on the table, but the vast majority of the opportunity's already been gotten to that point. And as you mentioned with AI, data center, there are many, robots being another one. Like, no, and even to go backwards a bit, as you mentioned iPhone, it's like Netflix. Everyone's just so used to Blockbuster and renting DVDs that way. Then Netflix comes along with this revolutionary idea, and I'm sure no doubt everyone who was in that industry probably looked at it and goes, why would anyone do that? You know, why would they pay a monthly subscription and, you know, and just use a streaming service? But then suddenly, now that's all there is. Everyone's streaming.
Did you try out one of the Waymos yet?
I haven't yet, no.
You have to. Because this is actually a great example of the adoption curve. So it's in the media, it's out there, people are talking about it. But here in Phoenix, we're numb to it now because we've actually been testing the self-driving technology for 5 or 6 years on our road now.
Wow.
They've had safety drivers up until about 18 months ago.
They sit.
Yeah, they'd sit there, but they were still driving themselves. But they
You
were
know, that's funny because this is actually the first place where I got a Waymo as well. I didn't even know they had it, and I was in Arizona, and then we called the fucking Uber and or whatever, like using the app, and one of these things showed up. I was like, what the hell? What the fuck? Took us to the restaurant, no issue.
But, you know, Waymo's here now, and I can tell you, you'll take it, and the response rate, well, that was boring. And that's actually the biggest compliment you can give to being in a self-driving car.
Yeah, I guess so, yeah.
Yeah, it'll stop at the light, it'll get up to the speed limit really quick. They're nice, quick, you know, electric Jaguars here in Phoenix.
Really?
Yeah, so it's a wonderful car to be in. It's a great experience, but it's boring. You get up to the speed limit, it does not do 1 mile over the speed limit. I actually had posted a video before, and this is where it gets to be obnoxious if you're some of the other drivers on the road. We're 2-lane road, and both of us were Ubers that pulled up to the light. And so because they will do the exact same speed, the other one was like 1 car length ahead, and we were just there, and it did not move like an inch because they're programmed to do exactly the speed limit. And so, you know, everyone in Phoenix speeds. So, you know, that starts to annoy the other drivers around it. But they drive better than most drivers. And, you know, and then like even this morning, I looked in my rearview mirror, and there's a guy in a Tesla behind me literally reading a pamphlet. He's self-driving in his Tesla. And so that's one of those things, until you experience it, like, there's no way in hell you're putting me in a car with, you know, without a driver. But then once you get in, you're like, that's it? That was really boring. And that's actually a huge compliment to the technology. And that's one of those examples too. You start to see it's really going to displace a lot of things. There was a story recently at San Francisco, they have them now too. And now 22% of they still call it ride shares, are Waymos in a matter of like 6 months.
That's a large size.
Because once you do it, you're like, I don't want the other one. You know what you're getting, you know the product, and you're getting it, it's going to be clean, nice experience, great to go.
It's very interesting. And then, so for example, taking that as an example, especially because you've got to experience it over many years here, how do you, even if you haven't gone, you know, and taken action upon that sort of experience, but let's take that as an example, what would you then be looking to do when you've identified here's a future change, here's a different trend that, as you mentioned earlier, like a gap between the mass knowledge and the opportunity? What would you do from that point?
Yeah. So this is a great example of why I made the transition in 2024. I still do some futures trading, but I moved to trading a bundle of what I consider the AI infrastructure stocks, and I'll probably continue to do that throughout this year until we have that kind of aha application that comes about, and that's when you'll see that move from the actual hardware being important to the application and software. What most people don't understand is we've been experiencing AI for a long time. You're creating podcasts, you upload it to YouTube, the entire checks and everything that YouTube goes through, completely AI. There's TPUs for them. They made it in 2018, built it out, because YouTube would be a disaster if a human actually had to go through and watch every podcast, look for copyright, all the different things. Boom, now it's done in like 5 minutes and it's up and running. That's purely AI that you didn't even realize you were experiencing. And that's where the application change will happen, is when it's not going to be ChatGPT and that stuff. It's going to be the application experience that people don't even know they're experiencing it. And so right now you look at it, and this is where I talk about the greenfield. Everyone's going to underestimate what the market opportunity is, because no one can fully visualize and talk about, you know, and you know, your analysts on the street, sorry, I don't love analysts, because reality is Google used to give projections for their earnings, and guess what? The analysts were just all over the place and always wrong. When did they start getting good at predicting earnings for Google? When Google started telling you what they were going to be. And it's the same thing for every company out there. All the analysts do is plug stuff into their model and go, ooh, well, I think it might be 2 or 3% better here, and then they come out with their estimates. Completely worthless to you if you're trying to catch a larger trend. If you look at like 2023 when Nvidia took off, there's like 25 analysts covering Nvidia. They were all wrong. Not even just a little wrong, like 80% wrong. And that's because, well, Nvidia come out and say, hey guys, we're gonna, like, you know, double revenue every quarter because of this AI thing. And so no one can see it, but that's why I was identifying trends earlier. So the AI trend is not gonna be a couple years. It's gonna be a decade process. And every generation has their new companies that come about. You know, for me, you know, I went through the 90s and the .com, and so, you know, out of that came Google, Amazon, those companies. Well, a lot of them failed. It's also why I'm not a big fan of the venture capital market, because you can still make a ton of money in these companies once they go public. You're not missing out on, you know, the early returns. You're just missing out on the 95% of companies that went under that the venture capitalists invested in, that they don't talk about. They only talk about their one winner. And so that's where you gotta identify those trends and then trade around it. And that's why I'm saying right now, you know, I got my core AI, and then I'm doing options trading, selling premium around it. You know, it's great to sit around and, you know, collect 1,000 data a day, selling premium, and then also have the upside, you know, things depending on what I want to do. And, you know, that's bringing in that income and those returns.
Definitely. And one thing I did want to ask you, I know you mentioned being a bit more of a longer term trader, maybe, did you say 3 to 5 days, maybe up to 2 weeks potentially? In terms of futures, like what sort of contracts are you going for then? Are you going for maybe a month or 2 out, or are you using the most recent contract?
Always the active contract. Always trading the active contract. One, it's the most liquid contract. Liquidity, I can't hit enough for retail traders. Do not play around with illiquid products. It's the same thing with the options market. Oh, you might, you know, there's stocks I really like, but they're the options, there's like no one trading them. Why do I want to be the only one in there? What everyone always seems to forget with trading is there's something on the other side of every trade. So you're short, but there's somebody long. There's somebody on the other side. So, that's what makes the market. So you need to understand that. But yeah, always trade the front month contract in futures. Always stay in liquid markets. Understand your sizing and your risk in those markets. And like I said, I'm usually those strategies. That's usually looking at the scalp. No, scalp is not the right term. But, a 1 to 3% move.
Yeah.
I think there's going to be a 1 to 3% move here. And then you look at the leverage in futures, and then also that's real money.
Yeah.
Whereas if I'm just trading the SPY, a 1% move is not going to excite me at the end of the day. But in the futures market, you get 10 ES contracts. That's a lot of leverage.
In terms of mentioning earlier about developing strategies to fit around your full-time job, how would you go about that process? Because I know there's a lot of traders out there who face that same struggle where they're maybe trying to force a day trading strategy or a scalping strategy when they have a full-time job and it's not working. Well, they're not getting results, but also they're building resentment towards probably their job because they blame the job for the lack of results.
Yeah.
So what was your process of developing more longer-term strategies that could fit around the full-time work?
It took a long time, but it's something you have to be realistic about. And it's about setting aside the time afterwards. So work is over. Okay, this is when I'm going to sit down. We're going to do the 1 to 2 hours of work every night. Do that work. Make sure that there's nothing else out there in the marketplace that's quality information or data that would make me want to change my longer-term belief. But then also identify what the shorter-term opportunities are in the market. Those are the key pieces there. And then I just slipped another really gem of information there. I just slipped my mind for you. But
it happens, trust me. It happens. But if it comes back, throw it in there, no problem. In terms of when you did the huge return in 2021 on the Robin's Club, what was that like? Because I know with the Robin's Club, I didn't observe it fully, but this year I was tracking sort of the futures and the Forex. There's a lot of updates on social media. And it was very interesting to see how the art of competition would kind of get to some traders, so that you would see traders who were coming into November, December, they're up, they're on the leaderboard, first, second, third, and then suddenly you're seeing them drop off because they're, by the looks of things, trying to accelerate even higher returns. Some, especially those who are in that second and third, who want to get that first position. What's it like to trade within a competition, and what was the mindset of joining the competition in the first place?
The first mindset around it was I thought I had developed a strategy. I'm going to try it out, and then I actually got up in the contest early on. One of the big helps, kind of what I talking about earlier, when people on TV start talking about things and it's not right. So yeah, 2021 was also when we had a lot of meme trading going on.
Yeah.
And they started the GameStop, and then the idiots in Wall Street bets decided they wanted to go for the silver market. Not like I said earlier, understand your markets. Oh, we're going to squeeze the silver market. You are not going to squeeze the silver market. And so that was one of my favorite trades that really got me going in it because they did get a spike in silver. They made silver spike 5% by buying the silver ETF. Well, guess what? It's going right back down. And so I said this is ridiculous and shorted, and that was a very profitable return in the contest going on short silver because guess what? That entire 5% return and even more disappeared because all those people who went long were not, guess what? They're selling. Their money was gone within 48 hours. So it went back down. But it's funny when we talked about as December rolls around, the one thing, this is what I think is important. Anybody's looking at trading contests, the Robbins Williams Cup is real money. It's not imaginary money. So one that stops just stupid trading because it's money. You got to put your capital in there, which then does add into the craziness that some people are reaching and coming for it. And so in 2021, I was in the top 5 most of the year. And then going into December, I was in first by like 80, 90%. And so to that same point, people were gunning for me.
Yeah.
And then I got tight.
Yeah, really?
I got tight in the contest. Because the contest was only part of my trading capital.
Yeah.
And I was like, I'm not giving up the win.
Yeah.
Kind of thing. So I did slow down my trading in December to hold on to it. And December is actually one of my most profitable, best trading months.
Interesting.
And so, but for the contest, I was like, no, I want to win. And so I still had my money in my main account that I was trading away and had a good December. The results could have been a little bit better, but not,
Drastically
yeah,
different,
probably could have got myself up to over 300% in December with the trades back then. But I was also didn't want to give those people gunning for me who
an opportunity.
Yeah, it was just it's funny you saw that because I saw the same thing, man. You see people just cycling through, and at that time you could tell because the market was doing something, and I knew what trade they were in. I could tell by the daily updates exactly what trade somebody had on, and I'm like, yep, you're along the market today.
Yeah,
it's like okay.
Because you see, it's an interesting pattern. Because you see it at the beginning, people come and then go off. Like people who've ran it up, but then maybe have used high risk or whatever, maybe or maybe caught a lucky trade, or the market was bullish and long for a good few days, and they caught that and then changed. So you see them at the very beginning. There's lots of changes on the leaderboard. Then the middle is like pretty consistent with the same names, and then the end same again. And it kind of just plays on that human psychology, I guess. But in terms of making such a return in a single year, what does that do for your trading in terms of your mindset? Going into the next year, are you looking to beat that return? Is it something where it's like, oh, here's the milestone, here's the bar, we've set it this high, we need to then make it set it to a higher limit this coming year, or are you just resetting?
It's a great question, and the answer is probably going to surprise everybody. So you need to understand, like I was going back earlier about compound interest and what your actual return on the market you're expecting to be. So you get a 250% year. It's 20 years of returns. It's a life-changing return. And that was 2021. And I was at the time, when I started looking, I was looking to make trading full time. Well, that gave me the opportunity to take away some of the stress and emotions of trading, and I actually then diversified out of the futures trading, paid off whatever remaining debt the family had outside of just simple little mortgage, fully funded kids' college funds.
Nice.
Did some other things that also were investments outside of futures, but also played into my belief that inflation was going to shoot higher. And then after I was done doing all those things, I still had enough money to trade full time.
Amazing.
Because you only need to get rich once in life. And that's also the difference that people don't get. I can rag on hedge funds and different people for missing market returns, but they also tell you, well, that's not what people are paying me to do. They're paying me for certain strategy. But it's also the downside of the 2 and 20 hedge fund. Some of these people are raising $500 million, $1 billion. Well, now they're just making money off their management fees.
Yeah.
And they're not going to make money,
especially on those substantial funds.
Yeah, it's very difficult to outperform the market on $1 billion. And that's where I see the opportunity for the retail traders. They don't understand is you're more nimble. You can get in and out. You're not trading a size some of the time.
Do you want to win 7 figures in challenges without having to do anything at all?
Right.
Seems too good to be true.
That's supposed to start the video. That's the main
Right,
advantage.
at PropFirmTrading.com, that is exactly what is possible. You are buying PropFirm challenges anyway. Well, at PropFirmTrading.com,
Nim-
not only will you get the best
nimble
prices
boy.
and get to compare your PropFirm challenges, but by automatically using the code PFT, you automatically get entered into this weekly giveaway where you can win over 7 figures in. It means a one-step account and over 25k industry. Next one below to giveaway.
Follow when you're in a hedge fund, because I find it interesting because a lot of retail traders are obsessed with I want to trade like the banks, I want to trade like the hedge funds, but they don't necessarily. And when they say that, I think it's the capital that they're more intrigued by versus strategies. I don't think they understand that for them to place a trade on, it has to go through 10 different steps before it can be approved to then be placed on, and therefore strategies are so widely different. While as a retail trader, you could take it as a positive or negative, but you have that freedom to have your analysis and then be able to execute accordingly. While
if you worked in as part of a hedge fund or a fund, you have to get that ticked off. You have to get it okayed and approved. And then I'm same with risk. Like you're not really in control of how much risk you can use. You're given a risk manager, given a risk allocation, and then you have to stay within those boundaries. While a retail trader, again, you can see it as a positive or negative, has the control to be able to be dynamic, be able to choose their risk size. But how important is that in terms of being a trader? Are you someone, let's say, with the did you trade the Robin score very differently to how do you trade? Normally, you trade the exact same. So what did that risk look like?
Yeah. So trade the risk exactly the same. I want to hit on something. You brought up a really good point. Everybody wants to say, I want to trade like XYZ. And with the futures market, my favorite report out there is the Commitments to Trade report. And Larry was really big on the teaching of this. And this is where different traders are trading for different reasons and people just don't understand. And the beauty of those markets is there's three people they give you on the report. They call it commercials. I'll just say hedge funds and then specs, which are like the little guys.
Yeah.
But on that report, you need to understand, if I am a commercial trader and I'm a producer of gold, what I'm trying to accomplish in the futures market is completely different than what I'm trying to accomplish. And you need to understand as those monies flow, because you can see it. You'll see it in the oil market, you'll see it in the gold market. For them, they have certain earnings they've told the street they're going to produce, especially in the oil market. Again, I don't want to misquote it, but let's just say a couple dollars in the oil is a significant difference in Chevron's earnings.
Yeah.
And so those traders sitting on the trading desk at Chevron are not there trying to maximize a swing in the market. They have people saying, hey guys, we want our average price that we sell oil at to be $60. If we can get more than that, that's great. So then when you get these swings, you'll see, because oil today is I think getting close to 80. Well, if you look at the Commitments to Trade report when it comes out, which comes out every week now, we talk about data frequency. Back in the day when Larry was trading, he got it every month.
Wow.
It was still valuable. And you'll see, well, why are the commercials selling now at 80? Because they're going to sell all the oil they want to you at 80 into the market. And they're going to lock in a guaranteed 80% return, an $80 a barrel oil. Because guess what? Just 60 days ago it was 60 or 65. So that's an enormous swing for them. And that's where you need to know the different trades. So someone's like, oh, I want to trade like this guy. Or when someone's like, well, this guy was a floor trader. They do not have the same goals that you have. And so their risk management is good to learn, how they manage the risk on those huge things. But if I want to trade like a floor trader, well, I'm not going to have the same results that I may be looking for because we have completely different goals.
And in terms of that risk side, what would you say to a beginner trader? Because we've done a lot of talks with traders who've done really phenomenal returns similar to yourself, and a large portion of them are using dynamic risk. So changing the bet size dependent on the setup, and they have graded their setup. So your A-star, highly confident setup. Your data. A big element of this is that these edges and these playbooks are backed by data for them to be able to feel that way. But what do you think to the beginner trader, coming in or early on in their career anyway, they're not quite seeing the results yet? When it comes to risk, should they be looking at that dynamic sizing or should they be sticking to static?
So I'm doing dynamic things now, so this is a tough one. I would say go static, especially when you're learning. Because one, you need to learn the emotions of trading, but also it's silly, and no one ever talks about it, the order entry process. I've lost a lot of money entering orders wrong. Everyone who trades has lost money entering an order wrong. And so, first you got to get in there and start doing it. It's also why I don't do the Robbins Trading Cup Championship anymore, because I couldn't use the platform I wanted to use. I had to use, somebody else's platform, and it was just a headache for me. I'm making money trading. Okay, I won the contest, but now it's like, okay, I got to go into your system every day. Well, I don't like how this set up. Oh, I entered one trade wrong. Well, that's just messed up my account. It was a loser. It wasn't supposed to be that. So get yourself comfortable with your platform and the habit of entering the orders. I'm not a paper trader. Never did it, because I need the emotional side. I need to feel the pain with it. But paper trading is good for learning properly how to enter your orders correctly. Because everyone who's a trader has lost money entering a trade wrong.
What's your process when handling losing streaks? And what is it that you do? How is it that, even at this point, how do you feel when you're experiencing one? And then what processes do you have, if any, to handle or take action upon when you find yourself in one?
The first key was, as I mentioned earlier, identifying that I will have a losing streak. Then when it starts to happen, be okay, well, this hurts, but we know it's going to happen. It's going to happen every year.
Yeah.
I think that the worst losing streak I had was 8 in a row. That was painful. That was in 2023, and that was like a learning experience. Because then I did get a little bit, the emotions got a little heavy on it.
Yeah.
And you got to learn that this is part of the process. You can't yell at the screen, you can't yell at the market. It doesn't care. It's an instant feedback loop. Yeah. But you just need to be ready. And if you're sizing things correctly, you know what your possible drawdown is, and you just live to fight another day. The key is to be able to live to fight another day. And that actually just made me think another thing. So my worst year in over a decade was 2023, and that was the first year I went full-time trading.
Wow. And
that was part of that. People say, really, well, I'm losing at day trading because I can't focus because I have a full-time job. Well, I built a system that allowed me to have a full-time job. Well, then I didn't have a full-time job, so then I'm just staring at the screen all day. Well, that's not what I built myself out to do.
Yeah.
I built a process that's based on daily bars, not hour, not minute.
Yeah.
And so then when you're staring at it too much, you're like, well, I got this extra 8 hours a day or whatever it is, and you start to do stupid things. And so that's when I did that reset with myself going into 2024, and that's when I got back, identified, hey, we're good at a futures trading market, but right now, you understand what's going on here. Let's change the strategy and go for something.
Interesting. What was that like in terms of having that year, the first full-time year, having that year, not be performing at your best? Was there any doubts at all? Was there any moments where you're thinking, maybe I shouldn't have gone full-time, or maybe the strategy's not working anymore?
Oh yeah, you go through all those thoughts. It was humbling. And it's just tough to do. Okay, this is the year you're doing it, and you're down. And also, 2023 was a great year in the market.
Yeah.
Like I said, I underperformed the market. It was still a positive year, but I underperformed. But I do that honest assessment of my returns.
Yeah.
So you say, wow, the market was up. Let's make math easy here. 40%, and your return was 20. Well, you missed 20%. You could have put this money into QQQ and SPY and left it alone all year.
Not having all this turmoil and
risk. Yeah, you didn't have to deal with all this stress and everything, and you would have done that much better. And then, not to get into exact numbers, but then you look at what your capital base is, and you're like, that's a lot of freaking money. And then then it just built up, and you're like, wait a minute, no, okay. And that's where I had that self-reflection. I'm like, let's get back on track. What was I doing before? Why I identified, inflation, things that people were misidentifying in the market, and that's where I got into it now. And that's where I talk about people. If you go on X and Twitter and follow me, and then occasionally on my channel too, I talk about my core AI that I'm looking at right now, and it's not Nvidia. For everyone, just buy Nvidia. Because what people don't realize is for every GPU that's sold, there's $7 to $10 of other spend. So there's a lot of money being thrown around. But I readjusted. I looked at it, and then did the investment, and then actually went back to some of the old options trading strategies I did, and some of those other things that you can do around capital and collecting premium and catching the swings when they hit.
Do you think it's important as a trader not to sort of just put yourself into only one marketplace, so only, let's say, futures, only options? It's important to be able to recognize more so where the opportunity is, regardless of the industry and regardless of which part of the market is?
I think it's more important to understand market correlations. And also that's very important to someone's risk management. Especially when you're in the futures market, you might be looking at everything like, oh man, there's a great setup in gold, there's a great setup in silver too. Well, they're correlated, buddy. Don't take both trades. Because then if you look at your sizing and you're like, okay, well, this is my maximum risk. Well, no, you've doubled it. Because odds are, if your gold trade's a loser, your silver trade's going to be a loser. They're a correlated product. You know, same thing we go over in
True.
so you need to understand those things and see how they flow together in the marketplace.
That's how we talk about
And it's amazing
Aqua and
how
having too
correlation
much long
flows to things you
exposure
don't think should be
at the
correlated
same
as well.
time.
But the main thing for risk management is to understand that if you're in a certain area, especially in the futures market, these things are going to trade together. So don't put on, you know, grains as a great example. It's really easy. There's a lot of different grains. And it's amazing. They all seem to get setups around the same time too. You do not take the setup in every one of them because guess what? They're all correlated. And you're all of a sudden going to blow your account out because you're like, how did I lose 20% in 3 days? Oh, well, this wasn't a losing streak. You did 5 identical trades, thinking they're 5 independent trades.
What would you say in terms of like your number one advice to traders out there who are probably in that boom and bust cycle right now? So they haven't quite found their edge to share or the consistency, but they've been in the market for some time, so they understand the basics and they just need to find their feet. What would you say they need to do?
One, you need to reflect and set realistic goals for people. You know, like I said before, most people who are running money out there underperform the market every year. Our goal as retail traders is to, you know, make a little bit more. And so, you know, what's your goal for your portfolio and your trading strategy? Do not be all in on one thing, and you know, have enough money to lose as well to not feel too bad about it. And then it's just, I really can't hit enough on how valuable the trading journal was. Because my first 15 years, I never did something like that.
Really?
Yeah, I was just putting things on. I'm like, great. And it's funny, you know, you go back and look at your portfolio. Like, why did I put that on?
Yeah.
You know, especially around options trading, when you're maybe, I sell premium a lot. And so, and then you're like, what was it? What was the reason around this? And you know, now it's like you got your notes, you go back, you know, quick reminders depending on how many trades you're doing. And then the other thing too is if you're starting, I think people often go too broad. Narrow it down and understand the product or areas that you're trading. Start to have success there, then branch out. Be like, oh, I've got this great technical strategy and I'm gonna try it on 20 products right now. No, let's slow down, buddy. Because it really does, like I said, I'm not a day trader, but it kills me people who go out there and they set up their alerts and their scans and they're like, okay, well, here's my 40 opportunities. You know nothing about that product, those areas. Here's my opportunities.
Spread so thin.
Yeah, I will tell you the biggest mistake I see out there in the market is people overtrade. You'll see with people who have been trading for a while and they make their way through, even like, you know, someone who was successful at day trading for a while, they suddenly move to a strategy that's not as heavy on the day trading and then they go for bigger, longer term wins. Because I think all of us end up experiencing and seeing the same thing. The bigger trends and then maximizing your trades around them is a
Donnie
better life to
Burger
trade.
Bro Trader ready. I'm in a trade.
We get like 4 traders.
Don't need to
We discuss all
trade.
sorts of various topics as well. Everyone at home, links for Kevin will be in the description, so make sure you check those
I've
out.
been in
Kevin,
a
comment with your
long
biggest takeaway
since
from this
fucking
episode. There's
all the
another
way
episode on
down
screen. Until
here.
next time, everyone. Take care.
So yeah, I don't need to be trading anymore, do I? You feel me or no? Or no? Cool. Bye. True. Later. In the meantime, we're gonna get some food and continue the nerd out. Leave it on here for a bit.
RSI low, I was feeling weak till you brought that flow. Now I peak each week. I don't need flowers, I need that plan. Show me the chart, I'll show you a fan. You know the levels, you know the zone. You read my mind like you read the cone.
It's too easy when you do it right. Math so clean it turned dark to light. It's too easy when you know the vibe. One retrace and we both align. It's too easy when you study deep. No chase, we just let it repeat. It's too easy, now the price obey. And we whisper in charts in a sweet delay.
How you know the bounce like that? Because the fib don't lie. And what if I test that level? Then I'll buy the dip every time.
The math is the math, and we don't miss. It's too easy when you do it right. Math so clean it turned dark to light. It's too easy when you know the vibe. One retrace and we both align. It's too easy when you study deep. No chase, we just let it repeat. It's too easy, now the price obey. And we whisper in charts in a sweet delay. How you know the bounce like that?
Because the fib don't lie. And what if I test that level? Then I'll buy the dip every time.
The math is the math, and we don't miss.
Price don't lie. The math candle, then I'm up. They get God. Click that level, yellow flash. Snap, blind. Feel that we collected cash. Midnight shine. No emotion, just the math. Calculated path. While they panic, I relax. Sipping while they crash. Wrote that song like it's scripture. Immaculate picture. Place that perfect full fixture. No miss, no glitch, bruh. On the charts like a whisper. He goes like the flicker. Ran it back, they set the stop. Feel that level. Marked it clean, then let it drop. Just one shot. I don't chase, I let it pop. Math don't flop. One more candle, then I'm up. They get God. Click that level, yellow flash. Snap, on. Feel that we collected cash. Midnight shine. No emotion, just the math. Calculated path. While they paper cash. Sipping while they crash. You trace hope, we trace math. We trace math. You want breakouts, we want path. We fade that wrath. I hear your panic in the glass. Breathe too fast. Now we drift off in the craft and just laugh. No tweet, no flex, just feel silent thrill. Midnight bought out, we're still chillin', kill. Session open and uphill, and we pill. Mark the zone, the market kneel. We that skill. Champagne chart, white screen glow. Backlight slow. Every pip we let it show. Never low. Ops just guess we know. Tap in, go. Math locked in, we stole the show. You ain't no. Ran it back, they set the stop. Feel that level. Marked it clean, then let it drop. Just one shot. I don't chase, I let it pop. That don't flop. One more candle, then I'm up. They get God. Click that level, yellow flash. Snap, line. Feel that we collected cash. Midnight shine. No emotion, just the math. Calculated path. While they panic, I relax. Sipping while they crash. One shot. No chase. It's late. Move loud. We move mad.
I thought that was a bot at first. The same name as the bots. See, are you guys starting to notice, right? Do you notice when there's an actual competent trader on here versus not? Also notice that the traders that make the most money, none of them are scalpers. Are you starting to pay attention? Are you starting to understand yet or no? Are you starting to understand yet or no? Or no? How long have I been preaching this shit to you guys? Straight from the horse's motherfucking mouth, boy. What should we watch next? What should we watch next? We've already seen most of them on this channel. I don't think we're missing any. Oh, this one we haven't seen.
That's actually what took my portfolio effectively from 30K.
Gold's really ascending, right? Gold's really ascending right now. God damn, god damn. Let's mute this shit. Why didn't it? What the fuck? There we
300K to 3.5 million in 16 months.
Ariel Hernandez is a verified 8-figure swing trader. In 2020, he left prison knowing nothing about trading and has now grown his trading account to
Another
over $10
swing
million,
trader, right?
to over $10 million in just 5 years, and you hadn't traded before. For that process, what is like one thing that people out there want to try and replicate? What is one thing they should be focused on?
I would say, especially for new traders, you have to get the thought and the idea that I got home from my prison sentence April 1st of 2020. I started trading full time June 1st of 2020. Within 2 weeks of being home, I was talking to my friends about trading because they were making a few $100 every single day on their Robinhood account. I was like, okay, if you guys can make some money, like I need to make some money too.
What were you doing in that period that then led to that momentum going into the end of then 2021?
So the very first thing that I was doing when I first started was once I started to like find that success. So this would have been like by month number 4, and I'm making $7,000, $8,000 a month. And then by the time I got to 21, there are $200,000, $800,000, $500,000 months in there. So if you get a 30, 50, 100% move in a day, it's fairly predictable.
I'd like to finish on 2 questions. What is the worst trading advice you've ever received? The second question on the back of that is, what is the best advice?
Oh man, I think maybe listening to.
Number 1 podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Hey everyone, before we get into this incredible episode with Ariel, I just want to say a massive thank you to every single one of you. To be able to reach these incredible verified traders from across the world, it's thanks to all of you subscribing, liking, and supporting the channel. That's what makes it possible. Ariel is a phenomenal trader. Lance actually recommended Ariel for the podcast, and I'm so happy he did. What an incredible story. Ariel, in 2020, came.
This is the last one. Other than that, we've seen every single one on this channel. We're all caught up.
Came out of prison and within a couple months was trading live $30,000, and within 16 months got it to over 3.5 million. And now he's a verified 8-figure trader, crossing over $10 million, starting with just $30,000. Absolutely incredible. Now, this episode, really enjoy it, because on Sunday you're going to see Chart Fanatics with Ariel, where he breaks down all of his strategies that he uses to make that over 8 figures in profits. As well as, don't forget, we have launched Chart Fanatics Live, where you can see live trading Monday to Thursday and live podcasts and interviews every single week. So make sure you subscribe to Chart Fanatics Live as well. But without further ado, let's get into this episode.
Welcome everyone back to the Words of Wisdom podcast. We are back once again and still the number 1 trading podcast in the world and the fastest growing, thanks to all of you and our incredible guests. We're here in Miami and we have a very special guest today. Someone I'm very, very excited to speak to and hear about their process and their journey as a trader, because they actually started trading with an incredible story. They started being locked up in 2020, right? Came out and started trading pretty much straight away. And between 2020 took $30,000 to well over $10 million in just 5 years. It is the one and only Ariel.
Thank you for having me, man. It's my
absolute pleasure. Thank you for being here, man. And again, incredible journey that I'm so excited to get into. We just shot Chart Fanatics, so it was a really great experience to be able to kind of see your process to then go into this. Yeah, I'm really, really excited. And I just want to kick things off. Like, as I said, $30,000 to over $10 million in just 5 years. And you hadn't traded before you started. And again, I mentioned obviously where you started before you started trading, which we'll get into. But that process, what is like one thing that people out there want to try and replicate? What is one thing they should be focused on?
I would say, especially for new traders, you have to get the thought and the idea that trading is a get rich quick, right? When I started, I always attach a caveat. It was the hottest market of all time. I didn't really know what I was doing. I learned a bunch of bad habits along the way that cost me in 2022. The blessing was that in 20 and in 21, I had made enough that I was able to take a little step back and really study the type of trading that I'm doing now, which is effectively swing and position trading. But just being adaptable, right? The environment's always changing. And one of the things that I never stopped doing, and still to this day, is I'm studying the people around me who've had much longer longevity, right? Like your previous guests, like a Peter Brandt, like a Jason Shapiro, like Linda Rask, like Lance, and understanding that there are people who have been in the industry longer than I have. And so when you are one of your students or somebody watching your podcast, you have to realize like they've been in the game for 10, 15, 20 years because they're doing something that produces them an edge, or that where they have an edge. And it's like whether it's someone like Jason using COT data where things get too crowded on one side and picking a turn on a news failure, or it's like Lance where he understands technicals and reading news and volume and price and maybe playing the right side of the V, a capitulation kind of a trade. So it's like everybody has a unique characteristic, and then diving into those people and figuring out what exactly aligns with how you think, how you trade, your real life circumstances. Because everybody looks at trading as a way to be their own boss, make a ton of money. But I always tell people, if you have the long game on trading, if you think about trading as like a 30 or 40 year career, right, like a Peter Brandt 50-year career, I always tell people the most amount of money you're ever going to make is the last 5 year bracket of your career. Because if you do compounding properly, right, the last 5 years, you're gonna make way more money than almost the first 30 or 35 years of your career. So just be adaptable, right? Never stop studying, and think like long-term view on trading. And like I said, even for me with 2020 and 21, I learned a bunch of bad habits that took a while to break. So it was a blessing for anybody who traded during that period, just like it would have been a blessing for anybody who traded during the dot-com bubble, right, where every day stocks are up 100%. But that's not your typical. So just kind of getting that out of your mind, that is the typical, I think is really important.
Before we started, you were showing me the sort of records from 2020 when you started, and it was so insightful. And thank you for showing me that as well. And what was interesting is, just like anyone else, month from say like one, I don't know, maybe 4 or 5 months, the first 5, 6 months, there were a lot of red, red week,
kind of red,
but it looked like you were managing, risk-wise. You had like a 2K loss week and stuff like that. But then towards the end of that year, I think you finished on a 40K plus a month, to finish that year in 2020, and then 2021 started scaling really, really big.
Yep.
What was that process like, especially that beginning stage when it was kind of not boom and bust, but like I'd say consolidation in your P&L? What were you doing in that period that then led to that momentum going into the end of 2021?
So the very first thing that I was doing when I first started was, I didn't know anything. And kind of going back to my origin, I got home from my prison sentence April 1st of 2020. I started trading full time June 1st of 2020. Within 2 weeks of being home, I was talking to my friends about trading because they were making a few $100 every single day on their Robinhood accounts. And I was like, okay, if you guys can make some money, like I need to make some money too, right? I'm home, I don't really got nothing to do. Like, I don't know where I'm gonna go get a job, what I'm gonna do. So you guys are making $500, $400 a day. Like that seems like a career to me. So I started in May, but not technically full time. And it was just learning the most basic key thing. Like I didn't know what VWAP was. I didn't know how to execute orders. I learned what a market order was. I learned what limit orders were. So just the very basics, how to find the stocks that I was trading. And then I learned about trade ideas and, getting a daily gap scanner, what's gapping up, what's gapping down. So it's like just learning the utmost basic things. And, in June, July, August, September, just treading water. And then, really at that point, I started to find a couple of day traders who were successful, making $10, $20, $30,000 a day. And I was just like, that's never going to be me. But some of their friends making $1,500, $1,800, $800, $900 a day. And I was like, that seems more achievable. So just kind of latching onto what they were doing. And, even when you have a Lance talk to you and he's just like teaching the right side of the V concept, realizing this is how price acts. This is how it capitulates. This is what volume does in that area. This is like when something breaks support or resistance and then comes back and could become support, that could be a dip buy, learning to read level 2. So it's like all of these little nuances that you pick up just month after month after month. When effectively on June 1st, I was like, I'm going to be a full-time trader, right? I had a $30,000 account, but just trading really, really small size until I started to gain some traction. And then kind of what broke that P&L out was having figured something out. And for me, it was sympathy plays. And then just getting more aggressive every single day behind traction, because it became I'm making $1,000 a day, and then $1,500 a day, and then $2,000 a day, and then $3,500 a day. And it was essentially, I'm just scalping the market, 10, 12, 15 trades in a day to get to that $3,000 day. And then just every single day. And then by the end of the week is a 12 to 15K week. Maybe I took a red day, so it's like an 8 or 9K week. And that was like life-changing money. And at this point, you only got a $60, $70, $80, $90,000 account, but it's growing because it's compounding on each other. And your broker also will give you leverage. So, in that environment, you're getting even more aggressive than you should, maybe. But, mentality-wise, I had nothing to lose, right? Just months earlier, my situation in life was I was sleeping in prison, right? So I didn't have anything to lose. Like, this was either going to be a career, or I was going to find out quickly that it wasn't going to be. And within 16 months, I found out that, you can change your life and flip it upside down pretty quickly.
100%. Let's take a break for a minute, guys, because I want to tell you about our incredible sponsor, Alpha Prime.
What do you want to go to jail for?
Valuation firms have been in the industry for the last few years and done absolutely phenomenal in terms of its impact for traders. As you can see here, through Alpha Capital and Futures, so many payouts to so many traders across the world. But now, for the first time, there is an incredible route for traders to become professionals and to trade live capital, and that's through Alpha Prime. So let me quickly tell you how it works. You just buy a challenge on Alpha Capital or Alpha Futures. Doesn't matter which one. So on Alpha Capital, you have phase 1, phase 2, phase 3 challenges. On Alpha Futures, you have standard and advanced plans. Whichever one, purchase a challenge. Show consistency, build your track record, and then you can be invited to Alpha Prime. Alpha Prime, you will get access to live capital. You will get access to risk management and resources at a professional level. You will have a salary as a trader and access to trade on live trading floors starting here in London. This is the first of its kind, where an evaluation firm is finding talented traders and then backing them with live capital and creating a route to professional trading. I am very proud to be sponsored by Alpha Prime. The links for both will be in the description below. Alpha Capital and Alpha Futures. Use the code RIZ for 20% off all challenges. Link is in the description below. Now let's get back to the episode.
It's such an incredible journey and story, and it really just highlight like what the power of your mindset, your dedication can do. Because people who find themselves in that situation similar to you can either use it as a limiting belief and something to hold you back, and sort of use it as a label that could, for a reason why you can't be successful, or you can, as you see, identify an opportunity. But most of all, as you highlighted, is actually go deep into that and actually spend the time to learn and to stay dedicated. Because I'm sure a lot of people might have started, seen the P&L sort of fluctuations, probably ended up having a blowout, and then stop, and then that's it, and then never give themselves a chance. But one thing that was interesting to me in terms of like when you started, was it something when you started that you actually had the mindset of like, this is what I want to do for the foreseeable future, make a career out of?
Well, I actually thought when I first started, I thought to myself, like, I can scalp my way to $500 a day, right? And it was as simple as, really, such a simple thing was when you're in an uptrending market, and which is what all of 2020 was, very strong uptrending market after the COVID washout, you would get a dip, and it would literally be, and I still use moving averages to this day, but it would be on a 1-minute chart, and I would just literally draw horizontal lines on areas that were previous resistance, like price couldn't get through, it would break through, and then I knew from a psychological standpoint that if you were a short seller and you were selling against this area of resistance, when it broke through, they were covering, and they would then be in the red or they would be out. But then as price retraces to that level, the ones who didn't cover are now getting a second chance to get out, and they are buyers as close to flat as possible, and I'm a buyer against that level. So there becomes twice the amount of buyers against the level of previous resistance, and that's why psychologically previous resistance can become support, because you have the dip buyers against that level, and you have shorts who didn't cover who are now getting a chance to get out. So it's like just understanding that, and then reading level 2, where it was just like, where are the bids, where's the ask, you see the buying, like you see the tape speed up into that level, you're buying an even smaller size, like 1,000 shares, 2,000 shares, and you get a 15% move back in the other direction. It's $300, right? And just taking it off the table as soon as you would see green. I used to have a phrase that I used back in 2020.
Yeah, we're gonna brush our teeth real quick.
Out, I want base. Me and risk, we never race. Smoke curl up like liquidation. I wait my time, no imitation. They short the low, I hit rotation. Run, they stops, pure elevation. I puff that fire, then load that size. I trust the line, they trust in lies. Low in a wick, I optimize. You feeling hope, I strategize. Charts on mute, no need for chat. They guessing moves, I place exact. Spread it real tight, just like the rap. I trade, I flex, I ghost, I stash. She alive, Marcos. The fire loud, but my math louder. Shh. You got. I don't hope, I don't wait. I mark, they move, Mark goes. Chow. Yo. Imaginary to you, but not the price. Drawn 2 weeks back, still hit twice. No confluence, no fib, no hype. Line too clean like the math got sliced. Chart slow down when it near my zone. Wig tap light, then momentum gone. They thought breakout, I thought fade. I was 10 pips deep in a palisade. No reaction, I just reload. Pit clean like a fingerprint code. Line invisible, weight still known. Yo, whole this is died on a level I own. Imaginary line still print real. Price hit once and sealed the deal. You press buttons, I press steel. Chart show chaos, I just feel. Imaginary marks, no glow, no sound. Came through soft, but broke that round. They never saw, but it came back down. You call that random, I call that crown. Imaginary locks, no glow, no sound. Came through soft, but broke that round. They never saw, but it came back down. You call that random, I call that crown. But I got hit at the edge of space. Line held firm like a gold embrace. You saw noise, I saw math. You chase trend, I trap path. Set that level on a wine stain napkin. Price curve back like it owed me action. Whole move died when the wick got clipped. Mad don't lie, it just flips. I don't move fast, I just set fate. Market bend on a silent wait. Chart don't fake when the edge get close. And I don't speak, just post that ghost. Imaginary line still print, no sound. Came through soft, but broke that round. They never saw, but it came back down. You call that random, I call that crown. Imaginary marks, no glow, no sound. Came through soft, but broke that round. They never saw, but it came back down. You call that random, I call that crown. The whip don't lie, the chart don't ask. They think I predict, but I don't. I remember Marcos. Marcos.
Tap the line, no guessing. Chart so clean, it's a weapon. You buy hype, I'm testing. You chase green, I'm resting. Pull up, slow, then vanish. Fizz mapped out so lavish. 618, I vanish. You get clapped, I planned it. Marcos. Body count high in the order book. One tap fade, didn't even look. Limit fills, get snatched like crooks. Stop hunts, cook, just read the hooks. Tap the line, no guessing. Chart so clean, it's a weapon. You buy hype, I'm testing. You chase green, I'm resting. Pull up slow, then vanish. Fibs mapped out so lavish. 618, I vanish. You get clapped, I planned it. Marcos. Late night clicks in silence. Price talk back in violence. I drew that line in science. Now you pay that math compliance.
Marcos got the thieves laid clean. Mac 618 to 786, we stack mean. Orders deep like the Villa pool. Hit that wick, now we acting cool. Splash! Stack it, 618, get the light dip. Yeah, 6, little more grip. Low 702, add weight quick. 75 hit, I'm locked in rich. 786, that's the trap door zone. Deep, biggest order, sitting on the throne. King, wick come down, fill that line. Click, Marcos flip it, trade divine. Boom. Levels on levels, no guessing it's stacked. Auto on fills, then price react. Each retrace just fuel the load. I was trying to chase something already sold. Watch the math like I watch the time. Go Rolex when they touch that line. Price dip down, they screaming red. I'm getting entries, overheads fed. 618, I'm light with ease. 6, yeah, I start to tease. 702, add more disease. By 7.5, I was begging please. 786, that's beast mode. Big size, feel that candle froze. Full send hit, I'm in that seat. Marco's playing this game elite. 618, get the light dip. 6-6, little more grip. 702, airway quick. 75 hit, I'm locked in rich. 786, that's a trap door zone. Biggest order, sitting on the throne. We come down, feel that line. Marco's flip it, trade divine. I don't chase them, make them come to me. Pixel perfect, this ain't luck, it's key. Calculated, cold-blooded, clean. Fibs on screen, bad bitch rolling green. Deep field hit, then reverse insane. Rip through highs, can't tame this lane. You trade vibes, I trade domain. Blueprint built, I run this game. Stack like coke in a high-rise suite. Buy so low, I resell peaks. Roomed out, star roof in the race. Marco stack size while they chase. 618, get the light dip. 6-6, little more grip. 702, airway quick. 75 hit, I'm locked in rich. 786, that's the trap door zone. Biggest order, sitting on the throne. We come down, feel that line. Marco's flip it, trade divine. No emotion, just execution. Deep feels Fibonacci fusion. I'm still crying about illusion. Marco's just ran up a revolution.
Okay, we're back. I'm liking this guy so far. Obviously, like, understands like the price, some of the price action mechanics, and I also like that he's like an advocate for being a lifelong learner, right? In terms of trading. Same reason we're watching this stuff, right? We don't need to be watching this shit. We already know what we're fucking doing, but always some nuggets, little golden nuggets you might find here or there. Also, like how he like mentioned like Jason. What else did he talk about? Well, like Linda, Peter. Right? Some long-term legendary traders still in the game. Learn a lot from them as well, personally, so we're on the same page there. Let's keep this thing going.
And it was buy red, see green, right? So it's like you would buy a red candle, and then because everything was coming right back, right, you would then see green and you would take it off the table. And so that was kind of the mentality. And again, it was the wrong mentality for the wrong market in 2022, but it was the right mentality in that right market in 2020 and 21. So it's just being aggressive, scaling up, and then as I learned a few more tactics along the way.
Actually, also, how do these 30-minute candles print before anything? These are all pulling in a bit back. This thing's still going though. Curious if gold actually has like a more serious breakout, right? Or no? How's the higher time frame looking? How's silver doing? Same kind of story. Interesting. Anyways, enough of that. How's all this stuff doing out of curiosity?
plays, that's when you're really able to do something incredible because
what sympathy plays be?
Yeah, so sympathy plays is fairly simple. We all remember GME, and right behind it was AMC. Well, AMC didn't start first. GME started the move, and then AMC followed. And then when you had GME and AMC, you then had COS, you then had NACD, you then had EXPR. So same thing. When you had Tesla making a huge move, then you had Rivian, then you had Lucid, then you had Solo, Candy, and literally as you go down the list to more and more small caps, right? Those made huge multiple 100% move. And I remember like even SPI, I still think is the largest intraday mover I've ever seen. It went from like $1 to 46 on like a billion shares plus trade. Like, it was just insanity. And it was a solar name. And I then go on FinViz and I say, what else is around $1 in the solar space in the United States? And I find SunW, SUNW, and I start buying it like 83 cents, 85 cents, 89 cents, 90 cents, 95 cents, and like just market ordering like 2, 3, 4, 5,000 shares at a time. And the thing ends up going. It doesn't
What
go
was the
from 1
website?
And I say, what else is around $1 in the plus trade? Like, it was just insanity. And it was a solar name. And I then go on FinViz and I say, what else is around $1 in the solar space in the United States? And I find SunW, SUNW, and I start buying it like 83 cents, 85 cents, 89 cents, 90 cents, 95 cents, and like just market ordering like 2, 3, 4, 5,000 shares at a time.
FinViz. Oh, it's like a screener. Interesting.
And the thing ends up going, it doesn't go from 1 to 46, but it basically goes from 90 cents to $4 that same day. And that's a huge move, but it doesn't make that move on any other day until SPI ends up doing what it did. Because trader psychology basically goes, oh my God, I just missed this. What's the next one? And that's how trader psychology works. And it's the same thing when you get large caps, right? Even when you get your semiconductor run, you get an NVIDIA, you get an AVGO, and then it starts to trickle down to everything else. Like, I don't know NVIDIA, I don't know AVGO, and like any semiconductor will do, right? And it's the same thing. It repeats over and over. Even most recently with the quantum names, you got IONQ, and people are like, man, I missed it. So you go Rigetti, and you go QMCO, and you go QUBT and QBTS. And so it's like, what's the next one to go? And so even that thought process still works today. But it's just about making sure you're on the right theme. And the bigger the lead runner goes, the more likely it is that a sympathy will follow. And even if you get a 30, 50, 100% move in a day, it's fairly predictable. But imagine what you can do with the entirety of your portfolio when you're being stupid aggressive, right? So yeah, it just in that
a large part of the scale of them.
Yeah, that's actually what took my portfolio effective from 30K to 3.5 million in 16 months. So and it was like, when I was showing you kind of like my start, like my first month when before I told my family I'm going to be a full-time trader in May, I mean, my P&L some days was like $3, $5, lose 8, lose 10, because I wasn't trying to risk anything. I was just trying to figure out what the heck was going on in the markets. What is VWAP? How do I even put a moving average on my chart? Like understanding, like, okay, here's studies, look up simple moving averages, add it onto the chart, change it, make it a new color. Right? Like, it's like if you're a new trader, you have to go through all those steps. There is no book that tells you how to do it. Either you ask people, which I was doing a lot of, or you figure it out on your own. And so it was a bit of both for me. And so yeah, I had to go through that entire process. But like once you had the basic stuff, like how do I find the gappers in the morning? How do I find the things with news and relative volume? How do I buy the dang thing? Where do I buy it? What's level 2, right? And like once you start to piece the things together slowly, it all starts to come together. And in that kind of an environment, I know people who did way better, but because they started in 2015, by the time that environment came for them, they already had their years of experience. So I know gentlemen who made 8 figures fairly easy, multiple 8 figures in 2020. So and if you work at a prop desk where they give you a bunch of money to play with, $20 million, $30 million, $40 million. So it's not impossible to do. You just have to be well studied. Is really what it comes down to.
You learned in that period of time of that learning phase was, I would say, in comparison, relatively quick. Was there anything in particular? Is that a skill set maybe that you have that you can pick things up naturally, or is it a simple case of that you put in a lot of time and effort during that period of time?
Yeah, I mean, once I started trading, I didn't have another job, and I still haven't had another job since I started. So it was just putting in 10, 12 hours a day. It was, I was buying courses from students or traders who were selling day trading courses. I was like joining chat rooms and just like trying to find who the heck was doing really well, even on a place like FinTwit, who's really talented and what are they doing? And then just, putting in my own, like I wasn't just working during market hours. I was at my desk an hour or 90 minutes before the open. I was at my desk, an hour or 2 after the close, and sometimes even at night. So just doing 10, 12 hours a day. Maybe did I have something in me to pick it up a little bit quicker than other people? Possibly, but I didn't have any other distractions.
10 to 12 of deep work, like it wasn't like some people try and say they do 10 hours.
No, I wouldn't say that it was completely hyper-focused work, because a lot of the time I was actually just trading. Right? So it's just like I'm just focused on not losing money. And again, in 2020, beauty of buying the dip was that if it was going to go down a little bit more, you can cut it quickly, and if it started to bounce, you were already in the green and just taking it off the table, and just kind of compounding your trades, the frequency of trades, which is part of the reason that I actually got kicked off of my broker. Too many market orders, taking advantage of midpoint fills and the liquidity they were providing, and I knew that wasn't something that wasn't a scalable way to trade going forward. But at the time in that market, it's what was working, and I didn't bother to learn another way of trading until 2022, ends of 21, and 22 rolled around. One, because I got kicked off my broker, and I realized like when I got somewhere else that they weren't providing those midpoint fills. And then watching someone like a Christian Kulamagi, and it's like, okay, he's up $10 million between his 10 swing positions. Like what? Like how do you do that, right? And it's just like he's a swing trader. And where did he buy it? And he bought it here on a daily chart, breaking out, right? Think concepts that we were talking about in chart fanatics. Really then starting to study the other side of the market for swing trading.
Incredible, honestly. And another thing in terms of early on, because I want to get to the transition to swing trading, is the 2020 year, you kind of kept size the same as you're saying, and so finding your feet. Then towards the end of the year, you could see the size start to increase. And then 2021, the scaling took place. Have you always had a strong risk appetite, or was it something you had to kind of get used to, adjust to? Was there any moments of not doubt but hardship, barriers to overcome when it came to handling that risk and starting to see more size, both on the P&L side, the profit side, and the loss side? Well,
the loss of money really hurt, right? So because it's still a real number in the real world, right? You take an $80,000 red day, even today, it still sucks, right? But the way that I always kind of rationalized it is it's a percentage of your portfolio, right? So get away from the fact that it's $80,000. What's that in terms of a percentage to the overall portfolio? In particular, once I started to scale, I was just doing the exact same thing, but with just bigger size.
Same thing I always say.
Off of previous resistance, and I would look to scalp it in the morning when it's most volatile. I was just looking for like a morning washout and kind of like a right side of the V, and I would be scaling into that morning washout. And then as soon as it started to turn up, I'd add a little bit more size, and I would just be looking for like a push into opening print, and then maybe even a push into pre-market highs, and I was done with the trade. And I just did that with bigger and bigger and bigger size. And again, that stopped working in 22, which that's kind of where the hardship came from. That's where like, okay, you're losing too much money. And what did that thing you were doing in 2020? Did that stop working? And that's kind of what I had to figure out in real time. And it's really not that what I was doing stopped working. It's just the environment wasn't being conducive to that kind of trading anymore. When the market turns up, that kind of trading works again. But it doesn't work in certain kind of environments, and it does work in other types of environments. Like recognizing that in real time. But the reality is that if you just think about it in terms of percentage, right? If you lose $1,000 on a $100,000 portfolio, it's the same as losing $10,000 on $1 million portfolio, right? It makes no difference in terms of percentage whatsoever. The difference is, one, maybe takes you to a super nice steak dinner with 5 friends and 2 bottles of wine. The other one takes you on vacation, right? With those same 5 friends. So, it's like, so the money matters. But it's just percentage.
What was it like early on though, when it's full time and you're starting with smaller capital as well? Because if I'm not mistaken, you mentioned before we started that you funded your account by selling some items that you had, a motorbike and a Rolex
and a watch,
So at that point, it kind of stands out that you probably didn't have the capital originally, but then obviously sold the things to fund the account. So how what was it like paying yourself during that time? Or was it a case where you kind of didn't have to necessarily take from the account?
I had a little bit of money saved up, and I just needed to fund my account so I could be a day trader. So you have to be over PDT, right? You have to be over 25,000. And then once I got like a cushion, so like from June until December, I made like $90,000 trading. So, and really the bulk of that money came in the last 2.5 months. and I was able to pay my taxes and then take a little bit of money out just to live. But I didn't really need much because I had moved back home with family. Thank God for an awesome mom who believed in me and then started to see like, wow, son, you made $90,000 this year and you started halfway through the year. So she started to say to me like, keep it up. That's awesome. Even if you do that same amount next year, that's incredible. So really, I had saw such quick success that I was able to pull a little bit of money if I needed to live. But pretty much, I wasn't buying my own groceries and I wasn't paying rent. So again, maybe a little bit embarrassing to say if you're a 28 or 29-year-old, but you fast forward a couple years and God willing, I have a home now. So things can change quickly, but you have a support system around you who's not like, you got to go to work, you got to go get a 9 to 5. This career you're chasing isn't real. Fortunately, I was able to find success fast enough that they kind of just got off my back about it. So.
What was that
True,
like though? Just
right?
sort of
True.
coming out of prison, then coming home and then saying I want to be a day trader. How did that?
Well, really, it happened within like I kind of started to dabble in the markets in May, just to
I
figure out.
couldn't
what
find
was
my
going
I went
on.
to jail. I'm
And
curious.
really, what I think it was I picked up something to do quickly. It's not like I sat around for 4 months lounging around in my parents' house like doing nothing, right? Where they were like, you need to go get a job, sir. It's like right away I was like, hey, I found something. I'm going to try and study this. Like, work with me, give me a few weeks, right? And I never had to say that. It was just like, okay, he's doing something. He's sitting in front of the computers. He's trying to figure out day trading. My stepfather, he's got a like an investment portfolio. He saw his portfolio going up every day after that COVID washout. So he's just like, okay, if you want to day trade, cool. Like, and once I started to like find that success, so this would have been like by month number 4, number 5 in, and I'm making $7,000, $8,000 a month, nothing crazy, but go get a full-time job. That's more than your full-time job. So I didn't get a whole lot of pushback in that regard. And then by the time I got to 21, there are $200,000, $800,000, $500,000 months in there. So now it's just like, son, I don't know what you're doing, but keep it going. Thumbs up, son. And again, at that point, I bought my new truck and I had money, and it's like, again, the market and the environment was so rewarding. It was like such a humbling experience for that to happen so quickly. But it's just having an awesome support network, with family and I didn't just bum around for 3 months, right? I like found something that interests me, and I have to thank my friends for making a few $100 in the market every day. Because when they were like, yeah, I just made $500 today, and they're pulling out their Robinhood account, like, you made $500, like, right? I went to college, you didn't go to college, right? Like, I thought smarts had something to do with it.
Exactly.
But it turns out that even in trading, right, not the smartest, most college educated person, like the market doesn't see skin, color, race, education level, none of it, which is why I love the market so much. It's the most even playing field on planet Earth. Like, yes, institutions, some of them have insider knowledge, some of them have this, right? Like, they're not on the same playing field. But all retail traders are on the same exact playing field, effectively. So that's another thing that is just so beautiful about the market. And it's just like, the more you study, the more you know, the better you can do and the better you can be. So
I love that. To your point in terms about like the institutions having an insider, there's 2 people, Anthony Crudell yesterday and Tom Susnoff from
I know Anthony. He's awesome too.
He's awesome, yeah. But they're both saying something very interesting. It's like it doesn't matter how good your strategy is. It doesn't matter about insider trading or like Nancy Pelosi, for example, having such an incredible run.
She's amazing.
Yeah. Because Tom Susnoff and Anthony were basically saying like it's about you can have all this information, but if you're not a good executor, it doesn't matter. You have all this. Someone could give you the best insider tip, but if you don't know how to execute it,
that doesn't matter. It's worthless. Yeah.
But back to your point as well. In terms of that year 2021, you start you go from essentially not being a trader or not having a job to then making 6-figure months. What was that like for your mentor? What was it like in terms of like did you start to spend a lot?
I got a little cocky. I got a little. I mean, I ended up moving out of my parents' house, my house. I ended up moving out of their house. I got an apartment, that cost $3,500 a month to be in, and I bought myself a truck, and I rebought myself, a diamond chain, and then another one, and a watch, and I always kind of joked with my mom. I was like, stop spending money, and I always told her like, the real world is kind of inexpensive when you're making $200,000, $300,000, $400,000 a month. What's going to take my money is the market, right? It's not going to be because at this point, I had a 50K red day, and if the only thing, and some traders could relate, if you have a $50,000 red day, going to buy a Breitling for $8,500 isn't going to make your day much worse in terms of P&L. So, but it makes you feel a little bit better. And again, everybody, I think every trader goes through it, and I even say it now to this day. It was the dumbest thing that I had done was buy too many material possessions. Yes, you're able to do it, but now I'm even like more frugal than I was early on. And it's crazy because like even now I trust myself way more in the markets than I did back then. It's like, how were you doing that? Like, what were you? You're such an idiot, right? It's like because I know so much more now. And it's funny because I'm now more frugal, even though I do much better than I was then. But yeah, it's like I think like anybody, you hand a kid still basically in the mind a bunch of money, and they're gonna go get the nice shoes. They're gonna go buy the nice clothes. Like all of a sudden, I used to shop at TJ Maxx, and now I shop at Neiman Marcus, right? It's like that just happens, and I think it's okay to treat yourself, right? It's like you worked for it, you earned it. You're a grown man. If that's what you choose to do with your money, fine. But just know that if you lose money in the markets, that's gonna cost you way more than going on a little shopping spree at Neiman Marcus. So just making sure that you're still staying disciplined within the markets, because market giveth and the market taketh away. So
don't know where the market's going next? Stop worrying about your trading. Just get informed on exactly what's happening in the markets. Visit Deep Sky, trading, and your yearly subscription below.
Seeing that kind of now, market condition in 2021, and then it changed in 2022, and you made really good sums of money, found your fee, found your consistency just before that. And I feel like we're seeing that kind of now. Like we obviously just had Trump come in, the markets have changed. Before that, we had this incredible bull run. And there were a lot of traders who have done really well. Found their feet, found their consistency in the last 18 months, right? But now they're starting to feel a bit of a struggle. They're seeing the markets change. They're probably a bit worried, a bit concerned. Like, what you're as someone who's gone through that already. What would you say to them if they're in that right now?
Especially with my type of trading, when I started to be a swing trader, and I said at the end of 21, like I'm going to be a swing trader, right? I like made that mental click that I plan on holding things for longer. Well, 2022, outside of the energy trade, right in the beginning of 22, it didn't provide that at all. So it was a struggle, effectively, losing money in 22. But when 23 rolls around and the markets turn up and semiconductors turn up and tech names turn up and the biggest companies in the world start to uptrend, the entire environment got a whole lot easier. And I think what's important for people to remember is there are concepts that the greats taught, right? Like when I was telling you about who I would listen to, it'd be someone like a Peter Brandt, someone like a Mark Minervini, someone like a reading Bill O'Neill's works of how to make money in stocks. When you're trading leading groups, leading stocks, good earnings and sales, and the market's healthy and charts are uptrending, you're getting more aggressive into the market behind traction, meaning you just bought a stock, it's working for you, you trim a little bit into strength, and then you find the second one, and then the third one, and the fourth one, and the fifth one. Before you know it, you've got 8 names, and you're fully invested, and the market's healthy, and the market has pulled you in, right? I tell students that all the time. When the market pulls you in, you can be more aggressive. But if you buy a stock and then it stops you out, and then you buy a stock and it stops you out, you don't go looking to make all of your money back right away. And the market is giving you feedback that either the market's not healthy, the group you're trading is not healthy, and again, that is part of the beauty of being a swing trader. I'm not looking for stocks that have gotten so beaten up, I think they're cheap, right? That's using my brain for the totally wrong reasons. I'm looking for stocks that have held up best during market corrections because those are your leaders. If the market is pulled back 20% and I'm looking at a stock, that is a NASDAQ stock, for instance, and it's only down 12% from all-time highs or 15%, like a Netflix, you're much more likely to that be a leader because it's not down as much as like a HIMS, which we reviewed, where it's down 50, 60% from all-time highs in just the same period. And now all of a sudden it's got a bunch of overhead supply. So it's like when you're trading your biggest is when you're trading your best and the market is healthiest. When you're trading your smallest is when the market is bad and not conducive to your style of trading. So it's like traders have to understand what it is that their style of trading is. Don't style drift just because the market isn't conducive to your style right now. Every style of trading, whether it's position or swing or day trading, has a time under the sun, right? Recently, it's been a day trader's dream because the volatility is so high, right? In one day, you get if you're a futures trader and you're trading the NASDAQ, you get a 7% washout in a day, and then the next day it's up 4 or 5%, or sometimes in the same day. That's pretty gigantic. So the volatility is huge. It becomes a day trader's paradise, not a swing trader's paradise. So it's like understanding what kind of environment your tactics work best in is, very important. And you're trading smaller when you're not trading well. You're not looking to make your money back, right? Everybody makes money in a good environment. Or the flip side could be learn to short in a bad environment. And a good way to do it is what are the stocks that act weakest when the market's going up, right? Because then the minute that the market starts to turn down, those stocks that were acting weakest as the market was going up are the first ones to get obliterated as the stock market starts to go down. So
relative strength, relative weakness, right?
The quality of the people you would listen to and learn from and observe. Was that always the case? Like when you first started learning, did you go directly to like these verified great traders, or was there, in the start, the usual, how a lot of people find trading through these influencers, through this lifestyle marketing? Like which path was it for you?
A little bit of both. So when I first found my first mentor, I found him on StockTwits, right? I was like, how am I going to find the charts that are even moving? So, I Googled, stock whatever, and StockTwits comes up as one of the Google searches. I go on there, and they've got this little like scrolling banner with like the hot tickers of the day. I like clicked on it. It took me to a chat room, and there was somebody in there who was like, yep, my overnight idea just went 50%. This other one went 30%. This other one went 108%. I was like, what? And he had a Discord. So I clicked on it. I joined. Thank goodness that he was an actual successful trader. But he was just doing 20,000, 30,000, 40,000 a day. And I was like, that can't be me. I'm trading with a tiny account. I'm going to double every single day. But his best friend was doing much smaller amounts. And I was like, I can relate to that a whole lot more. And with what they were teaching in that kind of environment was working. And I started to find that it worked for me. And at this point too, I had heard about the Mark Minervinis of the world and Bill O'Neill's of the world and Stan Weinstein's of the world, Peter Brandt's of the world. I'd read the Market Wizard series, so I knew Jason Shapiro, and it was just like, okay, there's this community on Twitter, FinTwit, and they're there, right? Like, what are they doing? And figure that out. And again, even like a Christian Koulamagi who would just live stream on Twitch, and you would just be like, well, what's he doing? And at first, you're just looking at his charts, you don't really know why, the rhyme or the reason, how much of something he's buying. But then through golden nuggets that he would say through time, like proper position sizing, right? That's how you don't lose too much, and being on the right theme, and what's the group, and what's the rocket fuel, aka earnings and sales. So it's like learning from the right people, learning the right things, and learning through practice too. Just because somebody said it, I now have to go apply it in real time. So applying that in real time became like very important. And that's how you learn anything, right? You can't be a good chef just because Gordon Ramsay makes a cookbook. Doesn't mean that he's one of the best chefs in the world, but doesn't mean your meal's going to turn out really good. So you have to then go get into the kitchen, finally slice the steak and get all the seasonings together and do it yourself until you can make a really good meal.
Definitely, there's going to be that trial and error. It's not going to the first time. One thing that thanks to the Chapman X, again, I got to have that insight into is that you have different playbooks, different plays that you look for, and we went through about 5 or 6. And the interesting thing I found with that is one, obviously, it allows you to have different setups that you can look for and identify. So rather than being just sort of stuck to one and then having to only identify that one, you then have 5 or 6 that we went through. But how important do you think that is to have multiple playbooks, right? And what was the reality when you first started? Was that a case where you had multiple, maybe not as many now, but did you have multiple then, or did you only have the one?
So when I first started swing trading, it was a lot more basic. I was looking for a move up, a move sideways, surf the moving averages, breakout, right? But then you realize not everything is picture perfect, right? So you have to have, as I got more experience, I then started to add setups into my playbook, like things that I had seen work, as an undercut and rally. I learned from a Gil Morales, a VCP pattern, you learn from a Mark Minervini, a flat base breakout, you learn from a Pat Walker. It's like, so you would add, like, what do I say? Like, you would add the tool to your tool belt as you trialed and error, right? So you would try that setup, does it work? And then the reality is that setup works sometimes, but not other times. So then it's just, okay, well, then when does this setup work, right? It's like, we understand what a flat base breakout looks like. We understand what a VCP pattern looks like. We understand what an undercut and rally looks like, but when does it work, right? So then environment becomes another one of those things where you're learning in what environment does these chart patterns work in, right? Because not everything in real life looks textbook and then it goes on to work, right? A lot of it has to do with the market environment and the group you're trading. So it started off as a smaller real life environment because we understand that you would add the pattern, you learn from a Mark Minervini, a flat base breakout, you learn from a Pat Walker. It's like, so there's rally, a move sideways.
Oh yeah, the undercut or whatever.
Right? But then you realize
right?
not everything is picture perfect, right? So you have to have, as I got more experience, I then started to add setups into my playbook, like things that I had seen work, as an undercut and rally. I learned from a Gil Morales, a VCP pattern, you learn from a Mark Minervini, a flat base breakout, you learn from a Pat Walker. It's like, so you would add, like, what do I say? Like, you would add the tool to your tool belt as you trialed and error, right? So you would try that setup, does it work? And then the reality is that setup works sometimes, but not other times. So then it's just, okay, well, then when does this setup work, right? It's like, we understand what a flat base breakout looks like. We understand what a VCP pattern looks like. We understand what an undercut and rally looks like, but when does it work, right? So then environment becomes another one of those things where you're learning in what environment does these chart patterns work in, right? Because not everything in real life looks textbook and then it goes on to work, right? A lot of it has to do with the market environment and the group you're trading. So it started off as a smaller playbook, but as you become more experienced, that playbook gets bigger and bigger and bigger. And I don't want to expand it too much. And also when the market turns, I don't just want to be sitting on my hands because partially, coming from the day trading world, I am somewhat of an adrenaline junkie. I do like clicking the button. Maybe not too much, but I want to play. But I don't. If the market is just going down for a year, am I supposed to just sit on my hands for 12 months? Like, no, I enjoy trading the market. So even if you have to, I tell people all the time, they'll be like, yeah, but I don't really like shorting. And I'll be like, so what you do is you go in front of the ticker symbol, you put the minus sign, and you hit enter, and it flips the chart upside down. And if it looks bullish, you buy it, right? And so it's like you inverse the chart, and all of a sudden it looks good. As a bullish trade, you're like, ooh, that looks good. I'd be like, yeah, well, that's the chart flipped upside down. And so you'd be like, ooh, that looks bad. And it's like, so now you'd be comfortable shorting it, right? And it's like, so when you get away from I'm a bull or I'm a bear, right? The reality is I'm just a trader. And
right, guys. How many times do we talk about
Nothing
that?
else matters.
How
Not
many
news, not what
fucking
Trump said, not
times?
what the media outlets are saying, not what CNBC is saying, not what the earnings are saying. None of it matters. Price is the only thing that's going to pay you. But when you get in, you have to manage risk in real time, and you can only get more aggressive in the market as things are working for you. Because if they're not working for you, you're either not seeing things well, or the market isn't conducive. If you're taking a bunch of shorts and you keep getting stopped out, clearly the market's telling you that shorting is not something you should be doing. If you're taking a bunch of longs and you're getting stopped out, clearly longs are not what you should be doing, right? If you're buying flat-based breakouts and they stuff at that level, then maybe you should consider shorting at that level. If it looks like it's going to break down and then it reclaims, and you're looking to short that breakdown and it reclaims, maybe you should be buying that undercut and rally. So like understanding the setups, right? I added them because I want to be more active. But then I started to study them and realize like price can only do so many things. Right? There's only because it's driven off of institutions and traders, the emotions that they feel in real time. Right? They're getting FOMO. You gotta buy. Right? They're getting depressed and it starts to go lower, and every pop is just an opportunity to sell. And so understanding that it is somewhat psychological for a lot of people. Institutions sometimes, if they're like, we love this company and they're growing awesome, they don't care what price it's at. They're just buying, and they're a collective elephant group, and they're just buying the heck out of this thing, and it drives it higher. So how do I get involved? And never really feeling FOMO yourself, because you always know there's another potential setup on this leader down the road. So just adding setups, master one, go to the next, master one, go to the next, master one, go to the next, and then playing both sides of the market.
How important is it in terms of that mastering, the setups, mastering the playbook, and just mastering trading as a whole? How important is the journaling process and collecting that data, and most of all, reviewing that data?
Yeah, I think it's important, right? I don't put a ton of emphasis on it anymore, because the reality is I know what I'm going to lose before I ever even get in. And if I get stopped out, there are times where like I take a trade and it's 10% of my portfolio, right? And I'm risking 2% to low day. If I'm wrong, I'm going to lose 0.2% of my portfolio. Like I know that already going in. So if I lose, I'm like the world's best loser, because as a swing trader, you're going to be wrong like 60% of the time, right? 50% of the time, 70% of the time. And I say it all the time. The most common trades you take are small green, small red, flat trades. We never take big red. Why? Because we know exactly where we're wrong before we even get in. And so with the big red is off the table, unless there's like some big anomaly where like you hold overnight, the market gaps down in some incredible way, and that's going to happen every now and again. But otherwise, small green, small red, flat trades, and then the home runs like a HIMS or an NVIDIA, which we covered, take care of themselves, right? It's like trim some into strength, trail the moving average, see what happens after that. You don't have to think about it much more. Your job is done. So journaling is important, right? It's good to know what works, what doesn't. And if you can journal your entries, your exits, and then, maybe make that comparable with the group that it's in, and the market conditions in which these things worked, right? Then you can really start to put together those pieces. But like once you figure it out, once you say to yourself, the best stocks in the world, the leaders, hold up best when the market's going down, and the worst stocks that are going to go down the most are already acting relatively weak when the market is acting very strong. So it's like you're already onto the weakest names when the market's strong, and you're already onto the strongest names when the market's weak. And if you say to yourself the market's 180 groups, what groups are in the top 30 or 40 groups, and they're in the top 30 or 40 because of relative strength. So journaling is important, but again, I think eventually some traders, depending on their style, do get away from it. If you're a day trader, I journaled every single day. I knew I showed you, I got every single day logged. Entries, exits, stocks from literally day one. And that's because when you're trying to learn, you need data to go and back up what the heck you're doing. But once you are more comfortable and you understand what you understand, my losses are just so much smaller than my wins that I don't even think about it too much anymore.
Let's take a break for a minute, guys, because I want to tell you about our incredible partnership with PropFirmTrader.com. Majority of you out there are prop firm traders. You're using prop firms to leverage most of all to your trading style. Trader.com to CF25. Prop firm traders just figures in checkout.
Came from the background, the starting point that you did, which is very relatable for many people out there, but also relatable from essentially starting from ground zero, and not coming from, say, an institutional trading background or anything like that. And yet you'll manage to take a sum that is quite within reach for a lot of people, to an incredible sum that I imagine a lot out there probably think they couldn't achieve that. What do you think the reality is of people, average retail traders who are watching this right now, being able to replicate or get similar results as you have, maybe on the same time, but to be able to achieve 7, 8 figures with their career? Do you think that's a reality for them?
I believe so. Yeah, I don't think I'm some kind of an anomaly. The reality is, in particular, day trading is very difficult, right? You have to come up with a bright idea every single day of your life to make money. And when a stock isn't moving on volume, there's not really a great earnings gapper, there's not really a great gapper on news, there's not something trading, 10 R vol, like relative volume compared to all previous days. So imagine that you then have to come up with a good idea every single day to make money, and then you're looking for a small % move, and you have to oversize it to like move the needle on your portfolio. It's difficult. So it doesn't even resonate with the majority of people. But swing trading is one of those things where your homework is done at night when the market is closed. I know exactly where I want to be with the 4 or 5 or 6 names on watch for tomorrow the night before. I don't come up with the stocks that I want to trade, and this is the beauty of it. So this is why I say anybody can be a swing trader, because there are times when you can set a limit order, and if it triggers above prior day high, you can be at your 9 to 5. It triggers, and then you with your broker, it's a stop at low of day, or it's a stop at prior day low. That might be 4% lower, but with a 5% portfolio position, you might be losing 0.2, right, of their entire equity. So it's very doable for the average person, but you have to be willing to do your work at night when the market's closed. And there are free resources out there. Something as simple as FinViz, and you go on FinViz and you look at groups and you scroll down and you look at industry and you scroll down some more and you look at 3 month, 6 month, 1 month relative strength, and you say what's showing the most relative strength. And if you then go ahead and click through those groups, and you can add some technicals on there and say, well, what's over the 200 day, what's over the 50 day, let's add some fundamentals, what's got good earnings and sales quarter over quarter. Now all of a sudden your universe of stocks just went from, I'm now focused on the best stocks and the best groups in the market because they're the ones that are holding up best. I'm now focused on the stock with good earnings and sales. I'm now focused on the stock with the best technicals, right? So now technicals are aligning with fundamentals, are aligning with institutions are holding these things up best. You're now giving yourself the best opportunity to be in the best stocks in the market. And then you understand some technicals, you understand the setups that you want want to trade, and then you size properly on a breakout or an undercut and rally setups that we touched upon. And then as the market begins to pull you in some more, right, you gain some traction on the stock that you like because it had good earnings and sales, it's in a good group. You took it, it's working for you, you add another one, and you add another one, and you add another one. And so you're really working behind trading well and finding those setups. So it's like, for me, it's much more of a manageable way to trade than having to come to the market every single day, pulling up your gap up scanner and just saying, oh, this biotech, yeah, they just got a patent for their drug, right? And it's like the stock was like getting no love at all, and then now all of a sudden it's up 200%, and now you think like, well, I'm gonna go buy that and scalp it. It's like, this thing might have a 5 million share float and it's just being tossed around like nothing, and it's just not as scalable of a way to trade, and maybe a little too frantic for your aunt who wants to be a trader, and maybe she doesn't want to be in fast pace, but she can slow down in the evening with her glass of wine and say, all right, let me go on FinViz, what are the best groups, which one's got good earnings and sales, take a little straight line, horizontal line, and say good above the line, price is good above the line and bad below, what's holding up the best when the market's going down. Like, these are all things you can do in real time when everything around you is stopped moving, right? But in real time, when the market turns on, everything's moving, your heart rate ticks up a little bit, but at that point you should have the stocks, your narrowed focus. So it's much more doable than day trading, in my opinion.
What was that like for you, that transition, in terms of going from a day trader to swing trader? Because you're going from someone who's active in the market, taking multiple positions in and out, P&L's happening on that day, to slowing it down, taking much more lower positions in terms of the frequency, but then holding positions. So we looked at one on ChartFlex, 3-month hold time.
Yeah, some even longer, right? I mean, something like I bought Rocket Lab last year as well, like sub $6, and it went to $30, and it was like over a 5-month hold, right? So even like my Toast, where I gave back an incredible amount of those gains, that was, I bought in September as well, and got stopped out maybe just 3 weeks ago, 2 weeks ago, something like that. So yeah, sometimes 4 or 5 month holds, and Nvidia was a multi-month hold too. So that is how that happens. But the moving averages will dictate how strong of a trend something really is. And I think the transition period was a little tough because I was used to making money every single day, and good money at that too. It's like, well, who cares about a 7-figure trade if it's going to take 4 months? I can make $50,000 a day and just do it in 20 days, right? But the reality is then you're down days, and then the market changes, and then you're not making that money, and then you're taking a $50,000. Like, this like lowers down your heart rate. It allows you to take your trade. If I don't see anything for tomorrow, I'll still be at my screens. I'll still be scanning the market, but I can hang out with my dogs, I can go get my hair cut, right? And I still have positions working for me, whether they're coming up or down. As long as they're above those moving averages, I don't think about it. I don't really care. And you have to remember that the best companies in the world, who doesn't want to be in an Nvidia from $200 or $500 to 1,000? Right? That's a huge move. Who doesn't want to be in Abercrombie from 30 to 120, right? Like, who doesn't want to be in those moves? So how do you catch that, right? And if you learn how, those are even sweeter than having to think of a bright idea every single day just to make a little bit of money.
Would you say the mental capital required is the same in terms of like, handling the P&Ls and tracking, or would you say it's actually reduced on the swing trading side in comparison to day trading?
Yeah, the mental capital is much tougher on the day trading side. And the reason that I say that is because you are playing shorter term moves, right? You might say this is a little intraday consolidation and it's breaking VWAP, I'm going to short, and then you're playing for a smaller move. So what do? Right? You're playing for a 2% drop, a 1% drop, a 4% drop, something like that on a stock, or, maybe a little bit more, whatever. But you oversize that position to make money on a shorter time frame move versus, so you're letting position size be the thing that pays you versus time being the thing that pays you, right? As a swing trader, if that makes a 2% move, that doesn't move the portfolio at all because you've only got 10% of your portfolio in there. What are you up, 0.2, right? It makes no difference at all, right? You haven't moved the needle. But it's really time. So if now the stock goes up 30, 40%, now all of a sudden you've moved the needle on your portfolio. So it's a lot less stressful because the P&L swings aren't as violent. And again, you're not putting more money to work until you've seen traction on the other things that you've gotten yourself into. So the P&L swings don't even become bigger until you're already sitting on green. And then you add some more and you're sitting on more green. And there are times that, I'll share some of my prints and I'm in 12 names and all of them are green. Why? Because if I had been red and it got stopped out at low day, you're out of my portfolio. So it's a whole lot less stressful. And the mental capital required to be a day trader, in my opinion, you have to sit at your desk and wait for that, your Squawk or your news or that, your trading software, something like Trade Ideas, and your alert will be going off and it'll be like spitting out the ticker symbol and you'll click on it and you'll be like, what was the news? And then you read it and it's just like this one day kind of news, and like now you got to figure out how to get involved into it. And you want to make money on this pullback and the VWAP and this pop, and it's like, it's like for me, I know what I'm looking at the night before. I go into the market and I'm like, okay, how are these things acting? I'm like focused on 5 or 6 names.
Nice and calm.
Way more relaxed.
One thing I do want to touch on is you mentioned Toast, and on ChartFlex we got to see the P&L chart of like the high it got to where it ended up closing out. So that was recent, right? You said it was only
3 weeks ago that I got stopped out. I bought it in September, I think.
Exactly. So like in that period, so we're talking about over 6 months, right? So we're talking up to 500k, came down to 100 and
change, 150.
What was that like? Obviously, you've been trading on time, you've been trading size, you've had no doubt losses, wins, etc. But 6 month hold, almost 80% almost of the P&L.
Yeah, like 50, 60%, 70%.
What's that like in terms of your mind? How do you handle that? How do you reset, come back?
Yeah, there are a few things I could have done differently with that chart. I could have sold a little bit more into strength when it broke the 50-day.
Hey, what did he do?
I have conviction on the company, and it's not the company that
Toast? When was this recorded? August 14th. I'll have to watch the video to have context. Sounds like he done goofed, right? If he gave back all that much of a trade. Obviously didn't have any kind of exit plan when he started to pull back on him. A bit of a noob mistake, but
I don't believe in. It's the market wasn't conducive to stocks going higher, right? So it's not that the chart failed me per se. It's that the market failed and it took everything with it. So that's just part of trading. I had a little bit too much conviction in a bad market, and I knew the market was coming down. But on the flip side of that, it hurt, right? I mean, without a doubt, you get back money like that, it's not very comfortable. But on the flip side of that, when I'm seeing the market break down, I'm also now short MU, I'm short Rigetti, I'm short SMCI, I'm short AVGO, I'm short GRRR, right? I'm literally short 7 names. So in the back of my mind, if I get stopped out of toast and I get stopped out of my longs, I'm getting really paid on my shorts.
Yeah.
So I'm not, and at one point I was effectively all like once I got stopped out of toast, I had only 7 shorts on in my portfolio. I had no longs.
Yeah.
So once the market starts to break down, I will continue to hold a stock that I've got conviction in. And I told myself, like, once it broke to $42, I said to myself, the 200 day is well above my average now.
Yeah.
I'm going to just hold it as long as it stays above the 200, because when you're up, that much money, the thinking is, well, what if this thing goes to 100, 150, 200 over the next 2 years and just stays above the 200 the entire time? Right now, all of a sudden, that 500K, it's maybe multiple 7 figures. And I would rather be in that scenario than to be like, dang it, I sold it, for 300K gain because it started to come down, and I gave back some from highs, but then now I just watched it turn around, and it's just, now it's that $100, $200 stock in the 12 or 18 months or something like that. And that I think would hurt me more versus just kind of following my own sell rules. So it sucked for sure, but on the flip side of that,
you have the shorts.
I've got the shorts, and the names that I was shorting were the weakest names in the market. So semiconductors were a group. I was short, like I said, MU, I was short AVGO, I was short a quantum names. So it's like I'm short a bunch of other stocks. So in reality, I'm hoping the market burns.
Yeah, exactly.
Right? And you end up making all that back.
Even though it hurts, you don't mind as much.
Doesn't matter, right? I've got no emotional attachment to toast. I told myself, as long as it stays above the 200, I'm going to stay long.
Yeah.
But I now have some shorts in my portfolio. In fact, I'm hoping the market gets roasted because I'm so short here that it's making up well over anything I'm losing on toast. So yeah, it sucks. It would be perfect if I had perfect execution, sold the high, and then got short a bunch of other stuff, or flipped short on toast at the highs, ride it down, cover it below the 200, watch it, go long. But that's all make believe. That's not reality.
Fantasy of the trade.
That's everybody will say, oh, and if you look at a chart in hindsight, you'd be like, this is where I bought it, this is where I sold it, this is where I shorted, this is where I would. That's easy to say after you're looking at the chart that's played out. Do it in real time, right? And so you just have to have some rules. And I was comfortable just starting to get short because I shorted NOW after it gapped down on earnings and did a little bear flag, right? I shorted GRR when it failed on earnings and broke the 50, right? I shorted MU when it tried to gap up on earnings and then failed the 200 again and then gapped down. So it's like I was gaining traction on the long side, and I was just kind of waiting for my longs to get stopped out to really know we're not in a good environment because all of my longs are getting stopped out, but all of my shorts are starting to work. So just on the flip side of that, just really ebbing and flowing with the market and never really too concerned with one position, because one of the trades we do not take is big red. And no matter what, it was going to be a green trade no matter what, because when I decided to myself, I'm going to use the 200 as my stop, not the 50, I was giving it a much wider stop, and I was already comfortable knowing this is either going to be $150,000 trade or it's going to be potential multiple 7 figures 12 months from now.
And that's what I was going to say, is that the reality of if you're going to try and hit a multiple 7-figure trade or more, that you're going to have the times where you're holding out for that possibility, and it's going to come back and you're risking the whatever 400K in this case, but in terms of risk reward, let's say that 400K versus the 2, 3, 4 million.
Exactly.
That's the reality of that play.
Yep, that's exactly right. And institutions, when a stock might dip like that, they're buyers of more because they're buyers of the stock over the course of a year, multiple quarters. So in my mind, I was just like, the 200's above my average. We'll just let it work. If you get stopped out, you get stopped out. But on the flip side, I'm not just getting stopped out and it's the only long in my portfolio or the only stock in my portfolio. I'm already, because the market started to break down, like when Toast lost the 50, right, in February, roughly, other stocks started to break down already. So it's like being one step.
I mean, I don't know. I don't agree with this, right? Like, this guy clearly is coping right now for misplaying this. Like, regardless of what he's saying, the 200 moving average was above his average entry. It doesn't matter, right? And okay, sure, he had technically, even though he didn't hedge his position directly, he did have like a hedge in terms of having like short exposure in his portfolio at the time. But like still, like you take some off at that point, right? And if it starts to undercut and rally, which is one of the strategies that he was fucking talking about that he has in his playbook, you can fucking add it back and continue going, right? And you're getting up very minimal of that position. So like hard fucking disagree here. This guy's coping so hard right now. Mega cope. Mega fucking cope.
And then getting traction. This is another short setup. It's a failure on earnings. Let's short it. Here's another one. Let's short it. And then all of a sudden you're making money. And then recently I've been saying, the market's down 20%. I'm not getting bearish after a 20% down move. I want to start to ask myself, what are the stocks holding up best? And so inversely, I got stopped out of AVGO. I got stopped out of NOW. I showed you the prints on that. But then the flip side of that is I've now gotten long Netflix. I've gotten long Palantir. I've gotten long CrowdStrike. I've gotten long Uber. So it's like, while I still have 5 shorts on and I'm waiting to get stopped out of those, I now have 4 longs on. And those are starting to act well while my shorts are starting to get close to stopping me out on those descending moving averages. So just ebbing and flowing with the market and not thinking too much about the P&L really.
I love that. I'd like to finish recently anyway. I'd like to finish on 2 questions. And they kind of reflect each other. But to begin with, it's what is the worst trading advice you've ever received?
Oh man, there's been plenty. I think, maybe listening to people's pipe dreams about what trading is, right? The flashiness of what trading really is. I'm making a bunch of money quickly. Doing it overnight. Check out my 2,000% single day 0 DTE options trade. It happens. Some people are very capable of doing it. But just, kind of ingraining in your mind that you can get rich quick. I think if you focus more on slowing yourself down and think about trading as a 2 and 3 and 4 decade career, because I never plan on stopping trading, no matter how wealthy one gets. When you love it, you love it. Let compounding take over and really, just make it a career, right? Make it a career, and your best years in terms of money will always come on the very tail end of your career because you're smarter, you're more patient, you got a better understanding. Market going up or down shouldn't really matter if you can play both sides of the market. And really, if you just compound your money properly, the last 5 years will make you more money than the first 25 years. So
I love that. You kind of already did it there, but the second question on the back of that is, what is the best advice you've ever had?
The best advice really is not even so much on the trading side. It's like twofold. One, never stop learning, never stop evolving yourself in trading, because there's always someone better than you. There's always somebody, a little bit more gifted, a little bit more experienced. So attach yourself to those people, figure out what it is they're doing. And, we were just talking off air about the new Market Wizards, Jack Schwager. And, it's like some of the people that have been on those books or the new version that's coming, I look up to those guys.
Yeah, I can't wait. I already got that shit pre-ordered.
They've had even more success than I've had, but I look up to those guys. And, Lance I know personally, and, they're incredible to see. So it's like, just even though I trade well, I still got Lance's course, right? Just to try and better myself a little bit more. And a simple thing that I learned from him is, and that's totally apart from trading, make sure that you're taking care of the little things. Make sure you're sleeping well. Make sure you're trying to get some good nutrients in. Make sure you're trying to blow off some of that steam. So when you sit down at the desk, you're clear-headed. You can make your best decisions. You know, if you just got 3-4 hours of sleep, making the best decision during market hours in that high-pressure, money, real-time environment, it can be difficult, right? But if you take care of the things outside of the trading, right, the trading comes much easier. If you slept well, 8 hours, studying sticks a little bit more, right? You can learn, you can actually digest the things that you just read or the thing that Lance might have just said. But if I slept 3 hours, I'd have to hear him say it 6 times, and then even then I'd be like, wait, what did Lance say earlier today? So it's like, if you really plan on, being successful, taking care of the little things outside of trading, and then, never stop learning, right? I think those two things are some of the best advice that I've heard.
I appreciate it, Era. This has been an absolutely incredible episode. Yeah, I hope in the future we can do it again, and maybe we can get you on one of our roundtables. Maybe yourself, Lance, and a couple others. It'll be incredible.
Not bad, right? Not bad.
Drop a comment with your biggest takeaway from this episode. Make sure you hit like, make sure you hit subscribe. Other episodes are on screen. And until next time, everyone, take care.
Not bad. I mean, nothing particularly interesting worth learning there, but kind of just does what everybody else does at this point, right? And these are people that are trading like traditional stocks, trading moving averages, swinging them. I mean, like doing typical pattern trades. What did he say he did? Like the flat base breakouts is just when they base out, right? And they break out again. I mean, more water. And undercut and rally, it's a thing that Kwalamagi does, the moving averages. He also mentioned that guy on there too, so yeah, it's obviously he's watched a lot of people. Like, yeah, boy. Overall, agree with it all though, right? Generally agree with everything he said. Nothing particularly. Just following the trend of these interviews, right? Typically, people that have made more, typically better understanding of things, right? Like yesterday when we were harping on the other guy that does short only, this guy was saying the same shit, right? You need to be able to play both sides of the field. Gotta play both sides. Don't agree with that toast thing though. That was like, whatever. I'm not gonna harp on it too much. At the end of the day, like, we've done such stupid shit too. We're giving back shit on trades, so. Each to their own. The only reason I say that is because he's doing like a moving average strategy. So when you're doing that, like, you gotta stick to it. Whereas like we're not doing that necessarily. So a bit different, but understandable. Overall, good to watch. The ones today were a lot better than yesterday. We'll say that, right? Because like that prop from owner from yesterday was like. Man. In terms of this thingity thing, right? What's going on? Let's check out these charts. Got another 30-minute candle print. This thing just bounced at the 886. Okay. Show to the math. Not looking too hot, right? Kind of losing the Valeria low. How's ETH holding up? Interesting. Anyways, was it like 2.5 hours of powering through these interviews? We're all caught up though. Felt good because I've fallen behind on the Words of Wisdom channel. There's still a bit more I need to watch on Titan tomorrow, but we'll call it a day for now in that regard. Also, I want to watch more on Traderline. It's another channel that has some pretty interesting interesting trading content on there. I kind of found out about it somewhat recently, but going on in terms of this data, nothing particularly interesting seems like. Well, we are seeing some orders appear in the spot book above us. A lot, actually. People are getting ready to unload the clip from 95 to 99 or so. A lot of liquidity up here though, very interesting. It'll be very interesting to watch if we can kind of reclaim this Valeria low and start going. We're not. We do have a poor low being left here, so interesting. How's a low time frame liquidity looking? I'd imagine there must be a bunch building up here given all these lows. Yeah, makes sense. Let's get some more water. We'll close out this for now.
Set the wave, I surf, I move it. Whales get clipped when the math too ruthless. Trenches cold, but the wrist on stupid. Size get dumped, they pray, I prove it. I'm the current, they just floating lost. I hunt depths, they don't know the cost. Wick get tapped, that's blood in the sea. I got feels with a pressure peak beat. They see splash, I see trap, I said it. Zone get drawn, well steps regret it. 618 like teeth embedded. I bite back when the sea look hectic. I'm in stealth, no sonar blip. Got size so big it'll flip, they ship. Lick map blink, that's bay to grip. I just hit then pop that clip. Trend setter, I chart the swell. Pulse of the tide, I rid that well. They just swim where I cast that spell. Every reversal, I ring that bell. Set the wave on surf, I move it. Whales get clipped when the math too ruthless. Trenches cold, but the wrist on stupid. Size get dumped, they pray, I prove it. I'm the current, they just floating lost. I hunt depths, they don't know the cost. Wick get tapped, that's blood in the sea. I got feels where the pressure peak be. Deep sea pockets, that's where I dwell. They chase pumps, I wait and shell. Flip get marked and the trap get set. They swim loud, I move in stealth. Float through charts like I breathe that tide. Bad bitch rolling while I glide. POC get kissed and slide. I front run trends, they chase and cry. No clout moves, I just set the tone. This the ocean math on a platinum phone. Whole crew fed on precision zones. We hunt whales, they die alone. Set the wave on surf, I move it. Whales get clipped when the math too ruthless. Trenches cold, but the wrist on stupid. Size get dumped, they pray, I prove it. I'm the current, they just floating lost. I hunt depths, they don't know the cost. Wick get tapped, that's blood in the sea. I got feels where the pressure peak be. It ain't luck when the ocean bends. Just pressure, math, and patience. Marcos. Marcos. Yes, sir. Didn't believe it, huh? Migo, we know. Man made millionaires. Back then they ain't care. Now my whole fam in the air. Private flights, no stairs. Golden fibs, I swear. 6-1 Lounge truck, 2-tone glare. TP hit, I stare. Money talk loud, they scared. They laughed at the plan, I sports with the fam. Used to run, stop, loss, now run the land. Backwoods field chart still in hand. Had no help, just math, no scam. Mom and Dior, niece got bands. Auntie and Benz, all from scams. Did it with skill, no boss, no chance. Price move once, I advance. Soon, I don't miss sniper mode. Money. Wick through high, that's overload. Move. Risk to reward, I drove the code. Now I'm ice while they the code. Man made millionaires. Blink, back then they ain't care. Now my whole fam in the air. Private flights, no stairs. Golden fibs, I swear. 6-1 Lamb truck, 2-tone glare. TP hit, I stare. Locked in, money talk loud, they scared. Plotted in silence, counted the ticks. Late night with charts, no clicks. They mock the math, now I'm rich. Ops got wrecked, I ain't flinch. I ain't flex, just showed the path. Kept it tight, I played the math. Now my circle living like grass. Up and to the right, no cap. Fibonacci. Out of my math. They ain't believe it, now they made to read it. Marco. We fed the fam with a man.
Bring some other stuff over here now that we're done screen sharing. Think we'll be on there someday, right? Think we'll be on there someday. I want to be a market wizard, that's what I want to be, but pretty sure that guy's gonna die before that. How old is he? Jack Schwager? Yeah, that guy's fucking 80 years old. It's alright. Interesting that that guy, I don't know. Mm. There's been a couple people that did that. I didn't know that was a thing. Like the whole like the chat rooms and whatnot and the courses. I didn't know people like actually did that. But it's not the first person that I've like seen talk about this stuff now who did the exact same thing. I mean, I guess at this point it doesn't really matter. We kind of learned everything anyways. Maybe not everything, but like we've consumed a tremendous amount of information over the past like, 2 years without it. I'm sure it would have been helpful to have people guide you. I guess in some way I did leverage like AI a lot in that regard to compensate, so pros and cons I suppose. I'm gonna try out the TDM indicator, like Tom DeMark. What's it like the 13.9 TDM 13.9? Cause they just added trading view. What's it called? I coded it myself the other day, but there's the Bloomberg terminal version has the proprietary aspects to it, and even this one is not equivalent to the Bloomberg terminal. But apparently it's quite an interesting system, and a lot of like massive funds use this, which is interesting. Anyways, we already looked at all that. Curious if we get any activity tomorrow or no, or no. It's interesting that he talked about the sleep thing, right? Because I watched the whole video of Lance Bryson talking about that. I mean, that's why he mentioned it. He mentioned he learned it from that guy's course. But essentially what like Lance was saying was that he bought like what's it called? What's the ring everyone uses to track their sleep? The sleep ring tracker. There's like a certain one, right? It's like really famous. Yeah, the Aura ring. Or like the Loop perhaps, maybe there's like another one. Anyways, whatever, the brand is irrelevant. Point is that he tracked his sleep scores over a prolonged period of time and paired his trading data with it. And he noticed like a very high correlation with high sleep scores to trading performance. Which is interesting, right? Interesting. Because I'm not a particularly good sleeper. So that data point stood out to me a lot. The thing is, I've always tried to improve my sleep, and nothing works. I don't know. There's something wrong with me. I need sleeping pills or something. Let's see if we miss any interesting news today. At least like in the evening.
pop. Yeah. Lamb truck ghost when the TP drop. Talk that talk, we don't tweet, just walk. Whole life flipped off the fib and stock. I ain't flex, they just can't relate. Wrist 10 racks, now I sip on fate. Or the book dance when I step in the zone. Wrote my fate with a yellow line tone. Gold on the neck, that Fibonacci wave. 0.5 pounds got me paid like Brave. 618, that's a safe house crib where the ops get smoked and the charts get rigged. They post gains, I post receipts. They hit stops, I feast on beats. Marco's made, never preset cheat. This the math, this the seed of a
Oh, yeah.
Penthouse truth. From the basement dreams. Now the floor got marble. The chart got beams. Marcos. The math made me rich. Talk less. Print more.
FOMC, I don't blink, math on lock, chart gon' sink, rate go high, I ride that wave, rate go low, I still get paid. FOMC, no fear zone, head down plop, moves alone, big boy size, my feel precise, click confirm, then roll the dice.
Interesting.
Confirm, then roll the dice. FOMC, I don't blink, math on lock, chart gon' sink, rate go high, I ride that wave, rate go low, I still get paid. FOMC, no fear zone, head down plot, moves alone, big boy size, my feel precise, click confirm, then roll the dice.
Man, this story of the people burning in the building in Hong Kong is crazy. Bum, 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 bum.
Late night mad, I was stuck in the zone. Pixel feels while the whole world gone. Silk on the skin, but my heart turned stone. Luxury quiet, don't brag, wrist on ice, pain in the past. Heard they laugh, now they ask. Got no sleep, but got that rain. Smart money moves, don't need no fame. Late night mad, I was stuck in the zone. Pixel feels while the whole world gone. Silk on the skin, but my heart turned stone. Luxury quiet, don't brag, wrist on ice, pain in the past. Heard they laugh, now they ask. Got no sleep, but got that rain. Smart money moves, don't need no fame. Back then charts was all I knew. Candlelight dinners with the Bactis crew. 100 tabs, but I saw it through. Now it's all calm, the rooms with the penthouse view. Kept receipts, but I don't post. Let them talk, I'm too close. Miss the party, hit the entry. Hit TP while they chase envy. Late night mad, I was stuck in the zone. Pixel feels while the whole world gone. Silk on the skin, but my heart turned stone. Luxury quiet,
Dun, 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 dun.
TP here, why they still think twice? Small money steps, no dice, just math. I ain't post, I just watch them crash. Backseat charts, coupe dash digital. Benz move silent, gains residual. Stared at the screen till my soul went critical. Now I sip slow with a view that's biblical. No sleep, just plans and fills. Practice deep like I'm hunting for kills. Wrote the script, they follow the thrill. But I printed that map, let them chase the hills. Vested in zones they don't even see. Dash line bounce, that's prophecy. Didn't believe, now they copy me. But math ain't something you fake on a beat. They gon' buy from me, they gon' toy from me. TEDx cash, baby keep tired from me. Like chasers, he tired to me. I don't know you late night running, D-Wop humming. Price kiss level got filled, no frontin'. Empty inbox, but the racks keep coming. Silk sheets now, but I came from nothing. Total pocket tucked, I ain't need no light. TP here, why they still think twice? Small money steps, no dice, just math. I ain't post, I just watch them crash. Late night running, D-Wop humming. Price kiss level got filled, no frontin'. Empty inbox, but the racks keep coming. Silk sheets now, but I came from nothing. Golden pocket tucked, I ain't need no light. TP here, why they still think twice? Small money steps, no dice, just math. I ain't post, I just watch them crash.
Foul speaking silence in the room. FOMC day. Yeah. Geeked off the math, not emotions. Let's work.
FOMC got me geeking. Wick so deep, tape speaking. Ops in the drawdown tweaking. I'm sizing heavy, breathing even. Two screens lit, one for the rate.
It'll be very interesting to see if we end up getting this, like, the first, or the interview that we watched with the guy who got trained by Larry Williams. That Larry Williams guy was a dude who I was talking about, like, last week, who had mentioned, like, the seasonality aspect of getting, like, a New Year pump, essentially. And it seems like a lot of charts are starting to shape up that way, right? They're all starting to, like, coil up in wedges on, like, the higher time frames. Because I went back and watched some of his older videos to see, like, how much validity there is to these data points. They seem quite accurate, actually.
Hit by, I apply that measure. 1 minute chart look like a stretcher. I'm playing chess, they playing guesses. FOMC, that's my Super Bowl. Map been prepped, now play my role. Watch them all get shook off wicks while I double tap sides like sticks. FOMC, got me geeking. Wick so deep, tape speaking. Ops in the drawdown tweaking. I'm sizing heavy, breathing even. Two screens lit, one for the rate. Other for the stops I take. They chase, break out too late. I was in at the fake. Now watch them break. Yeah. That rate move wasn't random. It was mad. It was me. And you got. Marcos.
How's this stuff looking? Interesting.
Chef plates in the beach view. Whole fam wrapped in the math I knew. Chart went up, now the sky ain't blue. Rose in the dry, mama got one. Bro got keys to a drop top run. Unc on a jet, he ain't never done coach. Said it's all luck, I just stuck to approach. Balcony glass where the sunset drip. Dreams got streamed, now the pockets flip. Didn't need clout, just a clean little fit. They laughed at the plan, now they calling it lit. Cousin in Dior wasn't like that before. Now he FaceTime daily. Say sleep. Now the winds feel deep, cause I brought the whole street. Used to doubt me, now they eat too. Private chef plates in the beach view. Whole fam wrapped in the math I knew. Chart went up, now the sky ain't blue. Rose in the drive, mama got one. Bro got keys to a drop top run. Unk on the jet, he ain't never done coach. Said it's all luck, I just stuck to approach. They laugh. Now they living what I saw. The math was always enough. Marcos.
You know, one thing that I'm researching right now, which I liked as well, that Robbins Cup tournament guy, when he was mentioning, what did he say? What was the quote? I don't remember the exact quote, but basically like for every like $10 of like Nvidia's chip sales, there's like $7 of underlying spend and then like the beneath the umbrella. Like we've been talking about this, right? Like obviously we missed out on these plays. Worst trading view, like all these memory chips and whatnot, and like the energy setup. They've all already obviously all ran crazy. Like they're getting pulled back now, which is nice, but. Kind of just delving into like other sectors outside of chips and what the umbrellas of those look like, right? So we're prepared for the next time something like that happens. Pretty juicy, right? That's like a it's common sense, I suppose. Like nothing mind blowing, but him mentioning it provided the inspiration to actually go do the research for it, so we'll be well prepared next time in various different sectors. So we gotta do some Black Friday shopping. Gotta look around, see if there's anything we need to buy. Yo, Lyle Borg, what you trading? Nothing. I'm in the same Bitcoin long from down here. Same with ETH. Just in the same trade, chillin', waiting till we get up here. What about you? You think it's fully turned around yet, or another leg down? I mean, I don't know. I can't predict the future. I think that this liquidity grab is gonna be like the first real test of this move if we don't reverse from here. The reaction here will be quite telling. Because if the zone gets flipped, then like the probability of it starting to go higher is like much higher. Also potentially the beginning of like a lockout trending move, kind of same thing we had like way back when. Like off these lows, we like ripped. We had this one pullback and then never pulled back again, right? Just Consolidated rip, consolidated rip. Starting to see the beginnings of that. Like this move barely pulled back, ripped, now even got no pullback, now we're ripping again with no pullback. So the beginnings of it are there. Does it actually follow through? We'll see. So there's gonna be a lot of selling to deal with on the way back up, right? Everyone that's like has the same sentiment in mind of like, oh man, this is the beginning of the bull market, and I'm selling out on the next bump because everyone thinks it's like a dead cat bounce. So until we see what the actual order flow is looking like when we get up there, if we get up there, hard to say. Balls deep in my second run of Nvidia calls and a gold long. I mean, yeah, gold's pumping right now. Kind of starting to break up this like higher time frame triangle, potentially, which is interesting. I'll be curious to see the reaction up here though, right? Pretty like interesting level. I don't think it makes 9,200 before the next leg down. Man, what are these bots? These fucking bots. Won't turn fully till 7,200. I mean, maybe. Do you have any data to support that, or just hoping and wishing that's the case? Bum, bum, bum. I've been watching BTG charts since 2020. It doesn't mean anything. So is everybody else on this planet. Plus a chart that doesn't mean anything, right? Like on 2020 on this low, there could have been like 0 shorts opening down here. On this low, there could be like $5 billion of shorts that open at the low. We're about to get fucking squeezed out like crazy. So like price action's not particularly relevant. Gives you like no context of what's actually happening with the order flow and positioning. It's possible though. I suspect we'll be making it up higher because the order book's pretty thin and there's a lot of liquidity to grab up here before anything, but it is possible, we start to nuke lower. Kind of catch everybody off guard who's waiting for a pump higher to sell. Max pain to the downside. I'm hedged right now, so either way I don't really care, right? If we go lower then like my gains are protected. I am prepared for that move as well. Worst case scenario. And we start like nuking for real nuking, then I'll just like start closing out at the long and let the short actually run as like a position instead of a hedge. So we are planned and prepared for all situations. Just chillin'. Also, or we just sit here sideways, right? Don't go up or down. Kind of just consolidate this recent move down, just kind of go nowhere for a bit. Mm. Interesting. Interesting. Some pops and stuff over the next month, mainly sideways. I don't know if I'll off a cliff one more time. Bottom at 72, 70 area for at least 3 to 6 months before it fully turns back up. Yeah, I mean it is possible, right? But it's just one of many possibilities. I can tell you now in the sentiment data, everyone's saying what you're saying about 72,000, 78,000, and whenever I see that, it never does that. It always front runs the level or it goes way lower. That 72,000 has been showing up a lot in the data, right? Everyone's talking about this level basically. So it makes me a bit suspicious. Very suspicious, given the historical context. I think a lot of people are watching this 50k level. And in reality, most large players, if we start to head down there, they will wait to bid that. They won't bid up here unless you start to see like huge order flow kicking in. Because everyone's watching like the weekly 200. Where's this thing? Or the SMA. This thing's gonna be creeping up pretty slowly over the next few weeks. We'll see, right? We'll see at the end of the day. It's like we can't predict this. Because if we come down here and there's like thousands and thousands and thousands of Bitcoin in the order book getting absorbed, then it's probably going to be bouncing here. If that's not happening, then we're probably going lower. If we even go lower, right? This might be the low. 200k, 225k. Possibly. Who knows where we end up? Could just go to zero, right? This quantum computing stuff is like gaining more and more fear, becoming more and more realistic. This thing could just fucking become worthless. To next series support. What, 72? Yeah, from where we are, yeah. Like in my experience, when that happens, like it's like every time since I've started trading and I've been tracking sentiment data and everyone's talking about a key level. So most recently it was like 98, and then the 96, or like this cluster here, 93, and both of them just got blown through, right? Especially the 98 one. The 98 one, I was like, gun to my head, convinced this was not gonna end up holding. Everyone was talking about that level. I don't think we'd see what ever be worthless. If the quantum computing stuff happens, it certainly will be. Or at least for like a significant amount of time. Like if all like the lost coins get hacked and dumped on the market, that's like a tremendous amount of supply. Like we've seen $4,000 candles to the downside, if not more, because one single person just market sold like a couple thousand Bitcoin. Imagine dumping 7 digits worth of Bitcoin into the market. No one can absorb that much demand or supply. On top of all the fear associated with the wallets being hacked. Like, we're just talking about supply and demand right now. But the psychology of everything, we'd be cooked. We'd be cooked. Almost long at 99. Like recently? Or like on the way when we started coming down? I don't know, I'd have to know when you enter the trade to give you any comment on that, but...
I paid them niggas good.
Interesting. Last Thursday. $9090. Should have been fine, right? Like, unless you entered here, like every other opportunity, you would have been able to get out break even, whether it was like here, here. Or I guess like you're not a believer of stops apparently, so. Yeah, cause like I took a couple of long stabs on the way down, but like they either all ended up break even or like some tiny profit. They don't lose any money though. Which is why I'm a big advocate for stop loss, using a stop loss, break even. Personally.
Hey guys, it's Cam for Invest.
Marco, yeah, stop at break even, I don't play with it. Secure the zone, then I fade with it.
10 a.m. November 20th. Like UTC or a different time zone?
Soon as I'm green, I protect the throne. Price come back, I'm already gone. No revenge, just logic shown. Trail that stop like a dog on bone. I'm in the zone with a Fibonacci. Math so sharp, make Wall Street copy. They swing wild, I mark and box it. Risk control, that's my logic. They pray for trend, I just secure. One move right now, I'm insured. Let it run or let it scratch, but I ain't hold if the math don't match. Break even hit, that's no shame. Next play loaded, exact same game. Stack them crumbs, they build that plate.
Oh, you took it on market open? Oh man, too bad you weren't watching the streams back then. You would have saved you from that. Oh yeah, especially yeah. I wouldn't. Yeah. A bit suspicious of a trade. I'll say that, right? Like, why did you take the long here? Like, I don't know, if you go back and watch the stream, that day we were talking about this, but like this specifically was like extremely suspicious, right? Like, we tried to get above the VWAP and immediately hammered back down, and this was like as the market was about to open. And then we just started rolling over more. Now, I forgot how like the PD values were looking at the time. But... And also like the trend of like the we had been warning about this, right? Because if you've been paying attention, it was the same thing every single time. Like the New York session opens and just a mega dump, right? Like same thing was here, same thing here, same thing here, same thing here, same thing here. So like, there's some pretty serious offloading going on top of like losing the VWAP and structure breaking down. Don't remember like the exact date or whatever, but lost like 500 bucks. No big deal. I don't think like that. To me, every single loss is a major deal. I don't like losing a single dollar. Every single time I have a losing trade, I immediately go write down notes about it, review it, go back and replay mode, see if I miss anything, blah blah blah. For like 2 years straight now. So to me, every loss is a major fucking deal, pisses me off. It's like a very bad mindset to have, right? You're basically just gambling, just losing money and saying, oh, fuck it, whatever. On top of like not improving at all, you're not addressing like issues with your trading. ingraining bad habits, so on and so forth. Because like, first of all, like, why did you take that long there, right? Like, you should be able to tell me some kind of reason why you took this thing. Like, what setup were you doing? What data do you have to support taking the trade there? Like, what edge did you have at the time? Because if you can't answer any of those questions, then you're just literally just pressing buy and sell buttons for the lulz. Made it back for the end of the day. Yeah, that doesn't mean anything though. If my job is a trader and every day I lose 10 grand in the morning and then make 10 grand back into the day, and I do that the entire month, I literally made $0 that month. As opposed to I could have made 300 grand, right? If I didn't lose a 10 grand at the start of every day. So like that's the issue with most people. That's like the life of most. We won't even call them traders because they're not traders, right? They're just attempting to be traders, but they're not. And like most of their P&L curves are just this. Kind of just spinning your tires in mud. Is a bad entry employee aware of that now? I mean, as long as you understand why, right? It's not just to say, oh, I lost the trade, therefore it was a bad entry. Cause it's not as simplistic as that. Because maybe there was a world where there was some kind of setup here that you typically take that works out, and this was just one of the times where like you took your setup and it didn't work out. Doesn't mean it was a bad entry. I just don't know why you took a trade here. Every trader was perfect, no one would make any money. That's not true though, right? You're assuming like all the behavior that happens in the market is trading when it's not like nearly the case at all. Like if like the, I don't know, Harvard endowment calls like their broker and tells them they want to buy $100 million of Bitcoin, like they're not trying to trade it effectively as possible. They're just saying, okay, we need to turn on a buy program using like a VWAP or TWAP. And we're buying $100 million worth of Bitcoin. So the price is just gonna drift up slowly, and then we're just sitting here capturing on the move. Like so, like they're not trading, but we are. Look at the bounce at the end of that flag. Like it didn't never like confirm though, right? Just kind of popped and came back down. Also, like there's no divergences printing on this. Like that, you had like a bit of like an exaggerated one here, but like not really. Also curious what the CBD was looking like at that time, but because like a flag like this with like all the oscillators diverging is not the same as a flag like this with like none of the oscillators diverging, right? Like you want to see like larger hidden bull dibs, and then like on this part of the price action you want to be seeing like regular bull dibs in the lowest time frames. Is it working? Are we back? Are we back? Or no? Or no? Is this thing on or no? Or no? Oh, what the hell? The first time my internet's ever fucking died like that. Yeah, my internet just cut out. I thought it was like gone for sure because my modem light was like changing colors and everything. Interesting. That was odd. Plus, like, you usually don't want to be watching the VWAP, right? The VWAP's like pretty important. Also, in terms of like this value area, like we're like getting closes below the value area low at the time. So we start to see like a, if anything, this could have been like a short, if anything. Also, your exit's a bit odd, right? You exited all the way at like 88, you said? Or 87? Yeah, I mean, a lot of oddities we'll say with this trade, but whatever, right? Plus, if I recall correctly, I think there was a bunch of like short or longs that got trapped here. Don't quote me on that, I have to go back and double check, but... How is this thing looking? If anything, I would have been fishing for this one, right? Kind of just try and get the bounce down here. Because at that point, you would have had like all the oscillators diverging too, so on and so forth. Would have had like way less risk with your stop there. So when something like this. Target the highs or whatever it may have been. The internet thing freaked me out. Seems normal now though. I've learned. Yeah, I mean, whatever. We all make mistakes. I mean, I still do to this day, right? I make mistakes all the time. No, the thing about trading is like do you learn from them? That's like the thing that differentiates most people. Because I see people on Twitter and whatnot that have like have been trading for like 5+ years and they're still making like the same mistakes they did before. It's like you're gonna have a hard time progressing if that's how you operate. The ladder on futures is so thin today because Thanksgiving. Yeah, I figured we wouldn't be getting a whole lot going on. I was surprised we even got this move when they resumed. I mean, I guess whatever, it's like international people are trading as well. But like, us doing this was like not surprising at all. So I saw some guy, some guy on X, he like shorted some stock going like Wednesday going into the after hours. And they started pumping on him. And like because like there was no liquidity because like everyone's like ongoing to celebrate Thanksgiving, like the slippage for him to get out of his trade made him take like another 30% loss on top of his loss. Because like there's no one in the order books to take his take his orders. So I don't like trading that stuff. Like anything that's like low liquidity is like pretty dangerous in that regard. And also like not sustainable if we trade any amount of like size. I think the happy tomorrow is gonna be a serious bump. I doubt it. I mean, possibly. The thing is, most people aren't working, right? That work at like institutions. Like they're just taking the whole week off, kind of thing. Like travel to go do whatever, be with their family, friends, so on. So I doubt they're coming back just to work a half day on a Friday. Usually when there's the holidays, people take like all the time off. But we might float up, right? Like float up on low volume. Yeah, yeah, exactly. Exactly. Well, the thing about that though is I don't even know if like too many people, like even retail people, are kind of just like the Thanksgiving hangover kind of effect. We'll see. Either way, we'll see. It'll be interesting. Interesting charts, right? We'll say that. Everyone was like freaking out, losing the moving averages, blah blah blah. Now we're right back. We might end up getting the Christmas rally after all. Friday is the biggest buying day of the year for everything else. Oh, you mean like Black Friday? Yeah, I need to look at that myself actually. Like, I mean, I don't need anything that comes to mind. But I'm gonna like browse around, see if there's any good deals going on. Let's kind of look right now actually. Going like Best Buy and whatnot. Maybe a new vacuum. I need a new vacuum, I suppose. Now that I give it some thought. Maybe we'll buy some books just cause, get some new books to read. I need to ask my mom. My mom has like an elite vacuum at home. It has just like a green light on it. So like when you're vacuuming and like a wood floor, for example, that's dark and it's hard to see like if there's any actual dust or not, you can like actually see exactly where there's dirt and whatnot. I assume most vacuums have something similar now because it's extremely handy to have that feature on it. Actually, I'm gonna ask her right now what it is. Nvidia's gonna seriously pump tomorrow. Why is that? Google doing? Made $1,700 in my calls yesterday. If anything, Apple might pump, right? Apple's been kind of itching to break out this level for a while, and we're starting to get it. Starting to make like a flag on the lower time frames too. How long has it been sitting here for now? Almost a month straight. Wouldn't be surprised if Google finally starts to see a bit of like a sell-off and money rotates into this. Or Nvidia too, right? At the end of the day, like I think a lot of people got Seems like a lot of people got a bit of fear in this, right? Given like the sales call they had, and also the whole Michael Burry thing, blah, like all that nonsense, and the TPU thing. I think that the TPU thing is kind of really bothering a lot of people. But now that I think people have kind of digested this a little bit more and are making sense of what's really going on here, like it's not like Nvidia's just out of the game, right? It's not like they're just doomed going to zero. At the end of the day, they are still like have a massive moat for the most part in this whole sector. Jensen's meeting with Trump, they're making an announcement. Interesting. Interesting. I don't know if it's guaranteed to pump because of that though. At the end of the day, like who knows how people are gonna react, right? Like the earnings big beat with like good forward guidance and just sell off. You know, one thing I've learned is like, yeah, like, you know, we might look at things like me or you or like some other individual and like try to analyze it in like a logical manner, and it does make sense logically, but then like the market like does not react in like a logical manner, right? They're much more like emotional. At least in my experience, from what I've seen so far, there are times where these things to me like don't make it's like there'll be like a sell-off that like makes no sense, and then it ends up just rallying after, right? Because people realize it didn't make no sense, but in the moment, like the emotion just like takes over, I guess. I don't know. Probably able to sell the H200s in China. Like, can't they already do that? Isn't that already like allowed? I don't remember, because like wasn't there like flip-flopping news about that? Like first they couldn't, then they could, and then, like they couldn't again, or something along those lines, or like the inverse. Because in the latest report, didn't they have sales of it in there, but it was pretty negligible? Wait, no, H200 is currently not allowed in China. It seems like you're right. As of late November 2025, the US government is reportedly weighing or considering allowing Nvidia to sell chips to China. Okay, seems like you're pretty accurate in that. The market can stay irrational longer than you can stay solvent. Yeah, that's why I don't really like... I sit here and give things thought, so I'm prepared for different scenarios. Like, oh, if we go up... Okay, like if we go up here... Okay, first of all, like, what if we don't even go up here? Or like, what if we go up here and then reject? What if we go up here and then flip this level? Like, so on and so forth. Like, so I'm planned. But I never have any, like, set thing in mind. Like, yeah, this is definitely what's gonna happen. Because in the day, you never fucking know. It just takes, like, one random story to, like, completely flip the sentiment of the market. And change how the order flow is looking. But tomorrow, like, who knows, right? Fucking China might reverse, like, or endorse Bitcoin and start buying it from like their bank, and this thing starts flying upwards. Bear market fears are out the window. Extreme bull case open 184 went to 192. Is there like trading right now in the like the 180.75? Same thing. Yeah, I thought I was checking. 184 went to 192. Definitely possible. A lot of imbalances to clean here as well. So the math would align with that. I wouldn't be surprised if it goes even higher, honestly. Just like all this is like unswept garbage. Probably a bunch of like liquidity building up here. Interesting day, interesting. What was this on? Aster? Curious what Tesla's gonna do. I got a big ol' spot bag of Tesla. I was kind of hoping we go deeper. I want to buy more. Calls are 195 strike for December 12th. You have quite some time then. So is that before or after the Fed meeting? When's the Fed meeting again? The day out. You have 2 days after the Fed meeting too. Interesting. Very curious to see what they say. I don't hold options too long without spreading them. Yeah, I was watching an interview with an options trader earlier today. They're kind of just yapping about their butterfly. How they sell the premiums, basically. Harvesting IV and whatnot's pretty common. Yeah, I watch Kem Carson a lot. He's like a pretty knowledgeable options expert. He always has some pretty interesting ideas going on in that world. Bit of a like a liberal doomer, but we'll let that slide. are halted. Are they? Shouldn't be. No, they are not updating. It's odd. Doesn't say they should be closed either. Why is that the case? Because yeah, you already had like the holiday pause earlier today, so that's a bit strange. Did not know this. Also, like a random time to pause, right? And how long has this been? Oh, interesting. Due to technical issues? Yeah, I figured, because it'd be like a weird time to stop it at 40. That'd be like a strange time. That's pretty rare. I can't say I've seen that happen too often. If I refresh this, is there like a red dot? Oh, interesting. It shows them online still. Where'd you even see that? Where does it show that there's technical issues? Hmm. I mean, I can't imagine there'd be some crazy move because it probably halt everything. So they'll kind of resume the orders when it starts again, but we'll see, I suppose. Very rare though. I can't recall like ever. I mean, I guess it's hard to know since they don't put the red dot. But I can't recall ever noticing this happen. That's pretty interesting. If anything, it's like probably the best time to update. Well, I mean, I guess they can do it on the weekend as well. It's a stupid comment. I was gonna say it's probably a good time to update it when no one's really trading, like no one's active, but they do close on the weekend, so pretty stupid comment by me. Curious how the book map looks. Are there orders going through? Oh, the book map data feed is dead as well. I mean, the tape is paused right now, so it seems like there's no orders, but maybe this is just related to this feed. Interesting. Oh well. Oh well. It's time to relax, I guess. We need to keep our eyes glued to the charts. Although it is pretty annoying if they don't give like an estimated time of I mean, it's a bit hard for them to give an estimated time if they don't know what the issue is right away. So that's probably a bit nerve-wracking for anybody that's thinking of position right now. Because like they might go to bed. It's like 11 o'clock my time zone. They might just say fucking go to bed, and this thing just resumes at like Lord knows when, like 4 in the morning. I should ask for a refund from TradingView. Give me my $7 back for the CME data.
Dashline yellow. They say it's fake. Till they liquidate. Marcos. Imaginary lines, that's what they say. What? Wait. Till price tap twice and fades away. They pressing heat, I mark in gray. Chalk out hard, I paint that play. Dashline glow, they call it luck. Price bounce clean, they stuck in muck. I don't draw dreams, I chart design. Facts. And they still mad at imaginary lines. They don't believe, but they get clipped. Price hit once, then double dip. Line from Monday, still hit fry. Pixel perfect, and they ask why. Yellow dash with silent threat. I don't redraw, I place and let. You post vibes, I post fills. You chase breakouts as I set kills. Line got tagged, they called it glitch. Next move came, I got rich. It ain't random, it's routine. You dream candle, I dream mean.
Damn, what was my password for this? I'm reading stock twits. That's really good info. Yeah, I'd imagine that I don't think anyone that doesn't work there is gonna know exactly what's going on. You know, interestingly enough, that was around the time that my internet cut out, right? Basically like an hour ago. Could be some like major service outage, kind of just causing blackouts randomly. Especially if it's like some like major multiple systems fail that's like not related to CME. Like they're using some provider to route, so it's like their systems went down and CME's went down. So then you have to wait for like all of them to restart properly. What is my goddamn password? And I can't remember my password for Unusual Whales. What the hell? I literally use this every day. Like, am I actually stupid? Is it the wrong email? Is that why? speculating there's a trade deal coming with the Nvidia thing. I mean, possibly. Because they are kind of handicapping Nvidia in that regard. Also, it's not like China's like worlds behind in chip development. A trade deal coming? Oh, with China, you mean? What's it? What is it on Polymarket? The odds of this? How about trade deal? Trade deal. I mean, I doubt it. I feel like you'd probably be seeing this on Polymarket with a pretty high probability. Suppose it is possible. Interesting. I've never used StockTwit. Interesting. I'm familiar with it, but I've never gone on there. They're mostly morons. I mean, that's typically my opinion of social media. It's just the nature of the math, right? The statistics of like the population. Like the average IQ is the biggest bulk of the distribution, so that's just naturally where most people are going to be. I imagine there's pretty knowledgeable people on there. Probably like every other social media, right? You have to kind of curate your following to like cut out the noise and get like true alpha from people. So I use X. There's a lot of garbage on there. There's also a lot of like pretty useful stuff. Every single people with few and far between. I mean, the main reason I don't use it is because I figure everyone uses X. I can't imagine there's too many people who are on StockTwits and not on Twitter. Maybe they have stuff that's like specific to this platform that Twitter doesn't have. I don't know. Separated by ticker.
stressing. Smoke at the screen, backwood packing. Ops try long, they caught that slapping. Marco's lines, yeah, them wicks be tapping. The price go ghost, that's my fashion. Off a perk sipping lean, got the Henny in me. FOMC while I'm the massling and semi. Ops on till I'm calm but deadly. Smoking that Ray Day pack real heady. Mid-print wick, I thread it steady. DXY spike, I load that heavy. Powell speak, they dream confetti. I'm up in size, let's rock, we ready. You tweaking, I'm peeking. Off math, off med, still beating Marco's trades. FOMC, I eat it. She bounced once, he pressed twice. Stop gone. Marcos. Yeah, I got 'em, no chase, no stress. Stop, got tap, now they clean that mess. Didn't say much, I don't need to guess. Just place that level, my kid did the rest. You got, now you tweets and regrets. I sip slow, I collect these sets. You on hype, I want that depth. I don't blink, I prep then step.
Boom, 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 boom.
Late night zone, Martin gold.
There's not much to be watching here then. Interesting.
Breakout, I said trap. Price came back, you took that slap. Watch your chart all full of lines. None of them real, none of them mine. Mine just sit, breathe like silk. Yours just scream, mine just built. They press green, I press calm. They want rush, I want charm. They want loud, I want plan. You want moon, I hold land. Yeah, I got 'em, no chase, no stress. Stop, got tap, now they clean that mess. Didn't say much, I don't need to guess. Just place that.
What's the other platform everyone uses for that? Some girl was shilling me this. I went on a date with her and she was telling me, she's like, oh, I own stock in this company. I think it was called like Bloom. Is it Bloom?
Price dance wild, I don't flinch. You felt FOMO, I felt inch. Entry slow, exit rich. You saw wick, I saw switch.
Stock, social media. I think it was Bloom. I mean, the leading wait, this is the wrong one. Stock, social medias. Oh, Blossom. That's what it was. Blossom. But like, she was saying that she liked it because for the people that post, like, you can see their portfolios and how it's been performing and whatnot. So she'll like go and find people that have been performing well, like copy trade them essentially. Funnily enough, she trades gold futures. A psychiatrist who trades gold futures. Pretty sure she was lying though, honestly, because I asked her, I'm like, oh, like, so how do you trade them? And she's like, she said that, oh, every time it opens and goes down, she said that whenever it opens and gaps down, she buys it. I was like, okay, there's no way you're doing that every day and making money. Like, it's not a strategy, right? I mean, I didn't say anything. I kind of bit my tongue, so I didn't care. But in my head, I was like, sounds like fake news to me. That's where it's at. Gold futures are the shit. It's the same as everything else. Gold futures, index futures, blah blah blah. That's a great strategy. I highly doubt that works. I mean, I'm not gonna go look at it now, but like, if it was that simple, everyone would do it, right? And then it would no longer exist.
strain. Chart did numbers, I ain't feel pain. He up $5, I blew out range.
If I don't get the bottom, I buy more. Doing dangerous, depending on how you do. Like, yeah, I mean, like me, like a lot of times I'm like scaling into trades and scaling out. So like I kind of get what you mean. But like, I don't go past like my set risk for the trade that I had like in mind. Like I don't like say to myself like, oh, I'm gonna put 10k like loss in this trade potentially, and then it starts to like go lower, and I'm like, fuck it, let me add like another 20k of risk, and then like fuck it, let me add like 30k of a risk. And then I get like fucking blown out and lose like 100 grand in a day. I'd rather not do that. And you know, interestingly enough, like I was watching a bunch of interviews today, and in the past, and people that have the biggest losses, it's almost always doing that exact thing. They're just like adding and adding to a losing trade that they're like convinced is right, and you have that day where it just keeps going and going and going against you until you puke your position. I'll average in. I use 1 ounce futures. Micro contract is 10 ounces. I mean, as long as you're managing a risk, right? And at some point you do have some like hard stop. You don't want to give back like a month of gains because of like one trade just let run out of control. Gold kind of has a downward limit. I mean, that's pretty big moves in both directions, right? Boom. Like, especially like, let's say this breakout fails right now, and we start to come back in, then like almost certainly like all these lows are all getting taken out. So like if you're like starting to average in like right now, like are you prepared to account for the move coming all the way down to here to clean this low, make a point of control? It's pretty realistic it does that. It's quite the move, right? Like failed breakouts usually lead to pretty violent moves in either direction. Just flashbang myself. It ranges beautifully. Bum, 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 bum. Yeah, it seems like that case for the most part whenever it's consolidating. No, I watch gold. That's why I always have it open. I don't trade it, but it does seem pretty straightforward to trade. Well, for a while there was some guy coming in here always asking me to do gold TA for him, and it's pretty straightforward. If we were trading gold, we would have been juicing. Because it respects the TPO levels a lot. I noticed. Like whenever it comes to like tap this like single print or naked point of controls, like they bounce pretty spot on them a lot of the time. So like when these zones are like confluencing with like the volume levels and the fib levels, like they hit pretty good. And that's without even looking at any other data, right? Just straight up looking at the chart. What I just deleted. Consolidates and blasts up. Yeah, I was talking about it in Discord. I was telling people the thing was getting ready to break out down here. Ended up making some massive move afterwards. Don't know if we're gonna go yet, but it's starting to look like potentially, right? Also, roller just kind of sits sideways for a while still before making another leg. I do think it is going higher, but when, not too sure. So same story with silver, right? Silver's like potentially about to go as is. It's kind of doing one of these things. We'll see though. We shall see. I'm sure gold bugs are having the time of their life, right? Waiting an eternity for this. I think this is the move up. My TP is 4311. Yeah, not a bad zone. Maybe a little aggressive, might get stopped here, but on these larger moves, a lot of times you do see the move up to here, so that would hit your TP. I'm in at 4184. Yeah, you're late to the move. I wouldn't all along there personally, but we are starting to break out, so somewhat valid of a setup, I suppose. Well, I would have taken the breakout here if anything, like this thing. It'll be interesting to see if gold rips him here. How are all the other metals doing right now? If anything, Palladium might be the trade, right? Yeah, this Palladium's looking pretty juicy right here, to be quite honest. Like massive base slash like cup and handle breakout retest. Now it's like making a wedge. Not exactly like a chart pattern trader. But in terms of chart patterns, this is looking like a pretty juicy thing going here. Interesting. Yeah, a lot of people sleep on Palladium from what I can see, from what I've seen. To get everyone's distracted with like gold and silver, and then like the real juicy moves happen in Palladium. When was the gold breakout? September, right? Yeah, like this thing went up 60%, while gold did like 30 something. We'll do the exact low just to make it like somewhat fair. Yeah, it's like almost doubled gold's gained in the same time. Is there palladium futures? There's this. I don't know if you can trade it on your platform, but yeah, all those things have been trading quite well recently. Oh, they finally updated this. They now have the warning symbol on here. Like even like uranium and whatnot. Uranium. Quite to the move. A little decent pullback actually. What was I gonna look at though in terms of this palladium thing? I mean, in terms of moving average traders, looking like it's setting up here too, right? Starting to like surf above this moving average. I'm sure a lot of people are gonna be watching this trend line kind of thing. If it starts to break out, people are probably gonna be smashing entries on this. I think we have a bit of a juicy setup, honestly. Interesting. I was trading BTC at short right here. I don't know about that. I don't know about that. I mean, you could have got filled, right? If you had like limits set in the zone. I don't really trade stuff like same story as like natural gas the other day, right? Once it gets into this like tightening kind of range, unless like it deviates from like one side or the other, I don't really entertain it too much. Like to me, like I'm not planning to short it until like up here probably. Plus, the other thing about this is that like, like okay, like we dropped below yesterday's value area low, and like kind of reclaimed it, and now we're like reclaiming the VWAP, and we're starting to like flip today's like value area high. Wouldn't be the worst attempt though. How's the liquidity looking on the lower time frame? Like my main concern is there's like a lot of liquidity up here, and there's like a poor high, and a lot of times these like value areas, like if you, let me erase some of this crap. Like when you have the value area high and the value area low, and you try to like lose the value area low and reclaim it, a lot of the times like you rotate to the other side, which is like all the way at the highs. So potentially risking getting run over on that rotation. But I'm sure some people are entertaining that trade. Kind of hold the point of control, hold yesterday's volume point of control. There are like little baby bear dips printing on like the 5 minute here, here. I haven't been watching the order flow too much, but might have some order flow edge as well. I wouldn't take it personally, but yeah, I usually trade bigger moves. I'm not usually scalping like the nitty. Like, okay, yeah, I enter like on the low time frames, like scalp type entries, but like they turn into swing trades. Like more than 24 hours. My trades. Yeah, I've been in the same long since like the low basically. Like we were talking about it beforehand, like if you go back and rewind the stream, like back when we were like $10,000 above the low. So like, around this time, we were talking about longing like this kind of zone. So if you go back and watch whatever we talked about it then. But yeah, like until we like reach this higher level, I'm not really like planning to be too aggressive TPing. Like I shaved some, or was it? I think it was on this move we shaved some. Yeah, it was here because I remember on ETH, I'm in the same trade on ETH essentially, like same kind of setup. I remember that this was like when I got out of the shower and we were starting to like nuke down, and I shaved them the ETH. Yeah, I shaved some here on Bitcoin and the ETH, and then when we started to go again, I like added back to them. Kind of been riding that up ever since. So it's been like how long? 5 days, I think, 6 days. Yeah, 6 days, almost 7 days. It depends though, it really depends. Cause like I don't always do this, right? But to me this is like I tried to swing trade the high time frame moves. Like when I was like on the lower time frames like here, at the time I wasn't streaming because I was like in a different city, but I was like posting in the Discord and whatnot. And here I was like scalping a lot more aggressively, like getting in and like 2-3 TPs hit like in the same day or within a day or two. Like now that we've had this like massive extended move to the downside, I'm trying to swing this back up to like these higher levels. So it's just context dependent. Sometimes I'm like scalping hyper aggressively. Sometimes I'm like swinging. Sometimes I'm doing like a mix of both, depending on how things look. Like this trade specifically, like I'm in with like a lot of size. So I'm trying to let this thing kind of run for a bit, because this is the kind of trade that gives you like months worth of profit, right? When the juicy opportunities present themselves, you gotta go for the home run. It's looking droopy up there. What do you mean droopy? What does that mean? Like this is the heat map currently. Up here? I don't know about that. Let me lock that thing. Like this red box is like this massive liquidity cluster right here. So this is like I'm planning to TP like pretty aggressively, and then if we start to continue, I'll like add back to it some more. But yeah. You know, I'll hide some of this stuff so it's not as chaotic to look at. Let me just put this. Yeah, in terms like these TPOs like tell you like where the value of it is, right? You can kind of like ignore, let's just hide the price. So you can see that like the point of control was here, then it was here, then it was here, then like it dropped a little bit, like one tick. Now it's like here, and then it's like higher. So the point of control is getting higher and higher every time, right? So like value is like increasing over time. On top of like in terms of the actual price action, there's like been very little pullbacks. So I wouldn't say it's looking particularly weak just yet. Like we're going like making a leg up, consolidating, and leg up, right? Without giving people a chance to get into the move. So I suspect we will be coming to that zone, but never know, right? No guarantees in the day. Plus the other thing is like the funding was negative pretty like up until like earlier today. The funding is like negative, so like the long short ratio is like really skewed to the short side right now. And there's a lot of shorts underwater. Like this whole move down, like we were talking about it on stream the whole time, but from like where was it? Was it here or here? I think it was here, right? Yeah, must have been. Anyways, like on this bounce, like a shit ton of longs open. We're talking like multiple thousands of Bitcoin worth of longs opening. And then every single time we went down, more of them would open at the top of the moves, and then they get pulled underwater. And then the bounce, longs open, underwater. And it kept happening over and over and over. And none of these people were like closing out their positions. So just like more and more people adding to like a sinking ship, right? Just getting fucking wrecked. Bunch of noobs basically that can't trade. And then this move down here, these final two legs, like wrecked them all, right? This is like where they really started closing out finally. And in the process, a bunch of shorts got trapped. So now it's probably time to go the other way a little bit, get some like relief. Because there's a lot of shorts that have been opening the whole move down as well, right? Because everyone was just dogpiling on these longs. It's like, okay, if they're going to sit here underwater like idiots and not close with that much size, we're just going to jump on them, right? Just keep pushing it further and further and further until they puke. And they weren't puking. And also, these people are also hedging, right? Like, as this is happening, these shorts also serve as hedges. So a lot of shorts to squeeze right now to the upside. Like that heat map I showed you is like glowing, right? Like this is the upside right now. I'll put like an even higher time frame. It's like most of the downside has been grabbed. Like, yeah, there's a little bit left down here at like 72, which is the level that you were talking about, like 72.69-ish. But there's like a lot to the upside still of shorts remaining. But we'll see, right? No guarantees. Also, as you start to go up, people start to bitch out of their trades, right? People that shorted. Because like they're starting to round. At this point, we're $10,000 off the low already. So these people have already round tripped like however much percent of their trade without closing out at all. So as it starts to go higher and higher, more people are going to start to bitch out, right? Because they don't want to round trip the whole thing. So whether they close out manually or we force them to get closed out via a squeeze determines to be seen. But that is the state of the game currently. This will be the first level, right? Everyone's paying attention to this level. Everyone knows what's going on here. It's not only this is like a massive like liquidity cluster to liquidate people, but like above this level in the order books, there's like a lot of asks. There's a lot of asks stacked up here. So that's gonna be like a lot of sell pressure to chew through if we want to go even higher. But who knows, right? Level to level, don't get too carried away. We gotta get above this level to get to here, and then from here we gotta get to there. Order book can also change at any moment. Could just be spoofs as well. Also a lot of like psychology behind this, right? In terms of like a lockout rally starting to form here. Because a lot of people did not take the long here. And not only that, but there was like a huge thing of spot orders. Like, let's just look at this. Like this is a spot order book. And like these orders have like moved up now. But all of these orders were like lower before. They're like down here. And then like price ran off on them and then they like moved the orders up. So like potentially seeing like this zone get front run, these people getting left behind. And then there's no pullback, right? So far they haven't given them a pullback once yet. Which starts to cause a lot of FOMO because everyone starts to think like, holy shit, we're actually reversing. And then they start to pop into the move. Next thing you know, you're just blasting off to the upside. It's the same thing that happened here. We were talking about this earlier. But it's exactly what happened the last time off the higher time frame lows. Where's this fucking thing? Like double bottomed off the lows, had like one like 0.5 pullback. And never came back again. Just rip, no pullback, rip, no pullback, no pullback, and just continued ripping. We'll see though, right? To be determined. TBD. The main thing on my mind is the people selling this as like a dead cat bounce. A very different context than this. Because like now all the people that believe in the 4-year cycle are all thinking the same thing. I'm selling this bounce. Because they didn't sell up here. So definitely some different psychology context in that regard. For now, we just chill, right? We're in our trade. We're already taking some profit. We just kind of sit back and enjoy the show. What time is it? 11:40. Damn. Probably time for a juice box. Honestly, nothing really to talk about, right? In terms of the juice box, there's really nothing to talk about. We're in the exact same spot we were yesterday. Nothing has changed. If anything, I would just say be mindful of potentially doing something like this. I'm seriously seeing Nvidia ripping up tomorrow would be great. Yeah, hopefully it works out for you. Hopefully. I might be buying some spot tomorrow at Nvidia, honestly. We'll kind of see. So I'm sitting on a bunch of cash. Now, I was kind of hoping we'd take out this low first before anything. Maybe it's being a little too greedy. Maybe if anything, I'll buy like a little. So if it goes, then like at least have some skin in the game in terms of like a bigger position. And if it goes lower, then amazing. We'll just spend the rest of our money as it goes lower. Not entirely, but like start building a bigger position. Did the same thing with Dell. We were talking about Dell. Dell ended up like blasting up the next day. I mean, this would be some like weird 3 drives forming here too, right? Like extremely exaggerated, but like it would kind of be doing it. And we do know there is like liquidity to grab up here. So like, yeah, if we do a move like that up there, be on the lookout for that, right? Like we went SFP these highs, clean the poor high, and come back. Or do like whatever, like some kind of failed auction with value area high. So kind of leave that as like their only really new short. SFP / failed auction at the PD, value area high, liquidity grab. I'd be careful though. Like for anyone that's watching this video, like we kind of went back and went over the context of why we're really watching this level for like the short area of interest, and we have talked about it in the previous juice boxes anyways. And this is probably good for a short-term move here too. I'll look at it in a second. And the other short, I mean, I think we talked about it yesterday, I believe. Maybe we didn't. Where were we? Maybe we didn't. Whatever, like losing this zone, right? We start to lose this whole value cluster, essentially. Like come down here and do a bearish retest after cleaning this low. Because like you don't want to like do this situation where it comes down, bounces, and then does that. So ideally it does come back, like tap, clean this, and then you should see like more weakness appear, and then you can get in with like your stop here, target like this liquidity. So like it would be looking something like this, and potentially even more, right? The kind of like do your TPs however you want. Well, that's like one big TP, or like 1, 2, 3, or like 1, 2, right? Or just take some, leave a bit running. So we'll kind of just say the bearish retest of the value area low. In terms of that, just let me look at this 1 second.
Tap twice, now they call it scheme. Said it ain't real. Chart said please. Price don't lie. It hit my keys. Dash line ghost. Still got weight. Chart come back like I said that fate. No fib, no tool, no glow, just space. But it hit 3 times like I own that place. They don't believe until it hits.
I'd be TPing pretty aggressively at the red box. Like don't do like 25, 25, 25 kind of thing. Like your TP1, if it's here, should be pretty aggressive because most of like the liquidity ends at this box. And we talked about like this whole like failed auction retest on this time frame the other day, which would be like that exact level. So I wouldn't get too greedy with it, but. And for the longs, nothing has really changed, right? I don't know if I'd be too keen on taking like this sweep, given the fact that like most of the liquidity is here. Yeah, I would just stick with the ones from yesterday, right? I wouldn't try and get too clever here. But like, if they do give you this, like, let's say we're coming down, start to come back down, and the VWAP's like curling over, and we like sweep it and then reclaim the VWAP and start going, then like sure, take it in that case. You can entertain it, assuming everything else is looking good. I'm just saying reclaim the daily VWAP after cleaning the low, the local low. And then that's it, right? All other plans discussed previously on the higher time frame are the same. Same for the shorts. All these like higher levels that we've been talking about for a while, nothing has changed. Still watching the same stuff. Just copy paste this. Not the most exciting of juice boxes, but nothing has really changed, right? Kind of just in the same spot we were yesterday. SanDisk just got added to the S&P. Like they've already been added, or they're gonna get added? Effective before trading opens, 28th. Yeah, interesting, because it has had quite the dump. And then you have to account for all like the passive flows that are going to be coming from it being added to the index. You know, the question in my mind though is like how many people front run this announcement, hence why we got such a wild pump here at the end. Because I wouldn't be surprised if people have like had this whole setup in mind and now they're going to be dumping into this allocation. I wouldn't be surprised for it to see a bounce though, right? Just kind of do this kind of thing, like forms kind of equilibrium up here. I don't like the valuation though. I'm not sure. I haven't like looked into their financials. But all these like memory related companies are just doing the same thing, right? They're going crazy. It's all the same story across the board. I didn't think PTC was going back down. Some MSR would be a killer buy here. It might already be one, honestly. I've a lot of people like that I respect as competent traders have been eyeing this thing. We already had like, quite the gap up the other day. Oh, whoops, I'm stupid. I was about to say, like, no, we didn't. No, we did fucking not. Because this is a pretty big level it's coming into right here. And in terms of like all the the oscillating data, it's like pretty fucking cooked right now. It's like oversold on the daily, diverging on the daily. It was like the 2-day. Yeah, even the 2 days, the same story. 12-hour already has like massive bull dips printing. Wouldn't be surprised if it bounces like to here from where it is now. Then it might do like another leg lower. Would also like confluence with Bitcoin like grabbing that zone, like that 94K zone ish. One more just ding. You don't need this anymore, right? Delete that, delete that. I was like, what's like the short ratio looking like on this thing right now? Must be pretty crazy. %. I don't know if this is accurate or not, but or when they updated this last. Actually, I guess that makes sense, right? I suspect most people that shorted this are probably starting to cover because it's quite the move they got. Probably don't want to greet it too hard. My media trade plans out tomorrow. Might load some calls on it. Probably not a bad deal. Like even if it's like a starter position with like the prepare to like scale in a bit more lower. Because a bounce is definitely brewing on this thing, right? This thing is like getting oversold on like very high time frames. 3 days down here as well. What's the 5-day? Yeah. Would have preferred to see a bigger like a volume spike down here, some like capitulation type wick occur. I feel a lot better about it if it was some like one just big hammer candle right at the low with like a huge volume spike. But it's starting to like round out, right? Some kind of like rounded bottom, double bottom type shit going on here. Is that an 8 PE? What, MSCR? I don't know if anyone cares about that. Followed a pretty similar structure last cycle too. Almost like exactly the same in terms of like fractal nature. Big run up and then just like a lower high and then like a move to like a lower high than this, but like still higher than these lows. Can we just copy it? Where's that thing? Where's the ghost projection? Am I blind? Oh. Well, that's not it. What's the fractal one? Pretty fucking similar, right? Can we align it? Interesting, interesting. Look, damn near the exact same. And then it back tested the lows as well that we were talking about, like these lows. You can't say I trade on fractals, but they are interesting, right? Humans are repetitive psychological creatures, so there's some interesting takeaway there. Had a good run though. I think I had a good run. How much is go up from the bear market lows? Damn. When bull flags start, not sure what that was. Stab king. Or stacking, I suppose, when bull flag starts stacking. I guess we did have a bit of like a pretty big spike in terms of volume on the weekly. I guess it's something worth noting. Very true. Dangerous though, dangerous. Because the thing about this is like if the news of them getting removed from the MSCI index is true, or like not that it's true, like it's being considered, if they decide to do it, there's gonna be some more outflows, right? It's not as crazy as people make it seem though. Like the outflows from that index are not gonna like bring this thing to like zero. It's like a couple $1 billion. And people are gonna be buying it while that's happening. If it's even that, how much is it? The outflows? I don't even know. If because like they were in the index, but they weren't like a huge weighting, so it wasn't like they were getting like a crazy amount of passive fund or like inflows. I mean, I tossed into ChatGPT. It's a pretty similar number to what the person saw online. So maybe they just made that post from ChatGPT. So can this be trusted? Not necessarily. Seems like around $2 billion of outflows. Can't be bothered to verify this right now. I'm too tired. Too tired, taking my ass to bed. Midnight. Let's do a chat shout out and get out of here. Shout out to Donnie Burger, raging at me to trade. Shout out to Lyle. Shout out to the bots. You know the interesting thing about this Donnie Burger guy coming in here is that like he has the same name format as these bots, but he wrote an actual English message. Curious why that is. Maybe it's like the default naming for the YouTube, like a default naming convention they use, and this guy just used the same thing. Strange. I think that was it though, right? I think that was mostly it. Yeah, seems like it. Anyways, we'll be back tomorrow, our usual time. Actually, that's not true. Tomorrow I might stream during the day. I might just stream while the market's open, and then just kind of chill for the rest of the night, enjoy my Friday night. We'll see, right? Either I stream during the day tomorrow, or I'll stream in the evening for a bit. Either or. Either way, I'll post in the Discord. Yeah, later. Shout out to you. Shout out to you for coming out, hanging out. One of the newer viewers. Becoming some of our regular though, right? Slowly growing the community. But yeah, I'm tired. For anyone that's coming in to check this out, we did the juice box a while ago, maybe like 30 minutes, 45 minutes ago, so you can go back and watch that. And yeah, we'll interesting to see how tomorrow develops, kind of a half day, see if anything interesting happens or not. This might not even resume until tomorrow, right? This could be down the whole day for all we know, so futures might not even be active. Either way, we'll be back tomorrow, kind of see how things go from there. Gold looking like it wants to rip higher. Yeah, I'm out here. I'm tired. Later.